If you guys have ever wondered how you guys are going to end up making generational wealth or just stop living paycheck to paycheck, worrying about rent that's due in a month or a week from now, and you guys know for a fact that in 2025, the digital age, the internet age of internet money, where you see 17, 18, 22-year-olds making millions a month, and you're thinking, how can I get in on this? You've tried multiple different side hustles. You guys have attempted something for a month and then you guys stopped. You guys have tried something for a week and then you're like, this is too hard. I don't want to do it anymore. And trust me, I've been there before. I've gone through all the side hustles, so I understand where you guys are at. But don't worry, because I've gone through all of the BS that you guys have gone through. And if I was able to make it out, I know for a fact that I can help you guys make it out with just this video today. So with that being said, let me guide you. Let me hopefully grab your hand and show you the way that you guys can actually make a shit ton of money in 2025. Now, let me give you guys a little backstory of where I was at before you guys knew me for who I am. TJR Trade, TJR, okay? Regular people in my life don't even call me TJR. They call me Tyler. And by the end of this video, you guys are going to be able to call me Tyler because we're gonna know each other pretty freaking well. Okay, so let me give you guys some perspective of where I was at before all of this online money thing was real for me. So I started off in crypto in high school, okay? And I got into it, I got really freaking lucky. I made a bunch of money, but then I lost it all. And that sparked this huge, crazy fascination with making money. And it didn't just jump from that just straight into trading and then boom, the billionaire. Like, no, that's not how it worked, okay? I went from that to reselling shoes. Like, I bought multiple sneaker bots and I was reselling Yeezys. I had a whole bunch of Yeezys coming to the house. I had a Supreme bot. I literally would, on every single Thursday, because I was on PST, okay, I can't remember what time the Supreme drops happened at, but I remember skipping the first 15 minutes of my first period class on Thursday so I could cook on the Supreme drop. And I remember the North Face Supreme collab dropped and I cooked on like these 3 hoodies and I was like, no way, I'm freaking rich. And then I wasn't rich because I ended up losing a bunch of money on several other drops. So trust me, I have been through a whole bunch of these different side hustles and things until I found what worked for me. I mean, I even thought about doing Section 8 housing. I thought about doing real estate. I tried doing drop shipping for like 2 seconds. I tried doing the Snapchat creator method. I actually made $3,000 doing that, which was pretty cool, but it wasn't actual sustainable money that could literally be consistent income on a monthly basis. And then after all of that, I was like, wait, I already made a bunch of money with crypto. Why? And like, I just got sucked back into the space. There was something that was so fascinating about it to me. So I was like, okay, I'm going to get back into this. I want to start learning about this some more. So what do? I just start watching YouTube videos. I'm going down the rabbit hole. I was literally watching a YouTube video that is pretty much the exact same type of YouTube video that you're watching right now of me. It's weird because I'm explaining the YouTube video that I was watching and you guys are now watching that same exact YouTube video where it was like literally 2 hours long and it's like, hello, this is the beginner guide to day trading and this is one pair and then you buy low and then you sell high and boom, you're making money. Okay, we're going to get way more advanced than that. I'm going to actually make sure you guys are taken care of, because after that 2-hour video, I was like, bruh, I still don't know how to trade. And you honestly just left me with a whole bunch of information that now I don't know what to do with. So I'm not going to do that to you guys. I'm going to make this way easier than what I had to do. What I had to do is I had to put in a whole bunch of time, a whole bunch of effort, sorting through all these YouTube videos, trying to figure out what works, what doesn't. And now I'm going to lay this all out for you guys, so you guys don't have to sort through all those BS YouTube videos, and you guys can just watch one single YouTube video where I teach you everything about trading. I even teach you the strategy about trading, and you guys won't have to watch literally anything else. It's gonna be awesome, okay? Now, before we get into just day trading A to Z and we start talking about all of this educational stuff, I want to give you guys the option to compare and contrast some of these other online making money methods in 2025. Okay, so there's a whole bunch of different ways that lots of people are like, oh yeah, let me start this side hustle, and then once the side hustle starts making me more money than my real job, then I'm able to quit my real job and then boom, billionaire, right? So that's what everybody wants, but it's not as simple as that. And it's not as simple as trading, okay? And it's not as simple as drop shipping. Regardless, these side hustles are going to take time and effort. However, some of them are going to take more time, more effort, and most of all, a whole bunch of money to get started. So I want to break down these side hustles just in case trading might not be for you, okay? If trading isn't for you, that's fine. I just saved you literally like however long this video is, like fucking 5 hours. I just saved you 5 hours worth of your time. But if you do think trading is for you, and we go over all these other side hustles so we can actually like confirm like, okay, we're not gonna play these games on dropshipping, okay, Alibaba Express. We're not doing that shit today, okay? We're just learning about day trading and we're sticking to that, all right? So let's think about it. E-commerce, okay? Whole bunch of money up front. And I'm assuming the majority of you guys, again, like we said, we're living paycheck to paycheck. We're freaking broke right now. We do not have a whole bunch of money to be starting a brand new business, a brand new freaking brand, okay? A company. We don't have the money to be doing that yet. Why? It's a bunch of upfront costs and it's low margins. Like regardless of when you start and how you scale, it's upfront costs and low margins. Just no matter what, you're paying a whole bunch of money regardless of if you're low capital or high capital, you're still going to be paying a lot of money and you're still going to have low margins to start. Ever heard of affiliate marketing? Yeah, neither have I, and it's for a good freaking reason. You ever heard of a millionaire that's an affiliate marketer? I haven't. Get out of here. Copywriting. Bro, the amount of DMs, I'm rich and famous, or I mean, I think I'm a little bit famous, but the amount of people that I get in my DMs that say, hey, I'm a copywriter, do you need me? Bro, no, I don't. So if that answers your question on if you think becoming a copywriter, I'm somebody that would be considered like a very high ticket client for a copywriter, right? Do I use a copywriter? No. Do any of my friends that are rich and famous use copywriters? No. So do I think copywriting is for you? No. And I can tell you when I tried to do copywriting, it did not work out. I could not land a client to save my life. It's a whole bunch of DMs to all these famous people. They leave you on red. They don't even see your shit. And if by the luck of the draw, you're able to sign them, they're trying to rinse you out of a whole bunch of time for as little money as possible. So we'll leave that one alone. But what skill out of all of these side hustles is literally infinitely scalable? Day trading. Why is day trading infinitely scalable? Because the only thing that you're limited by is your capital. And luckily, there's a whole bunch of companies out there in the world that can help us leverage the small amount of capital that we have right now to be able to trade with higher capital. And I'll get into that later in this video. But just know, if you guys are like broke right now, you guys don't have a whole bunch of money, there are people that are just like you that go from not having anything to literally making $30,000 in their first months of becoming a profitable trader. So if that gives you the perspective of what we can do with trading, oh yeah, it's big time. Okay, and then not only that, why is it infinitely scalable? Because you're only limited by your own capital. So let's say I have $1 billion and I'm a profitable trader. Bankroll. Okay, but when it comes to e-commerce, there's only a certain amount of people in the population. Yes, you could sell to every single person in the population, but you're still limited to the population size. You're still limited to the niche. But trading, no. The only thing that you're limited by is your capital. So you're telling me if I learn the skill of day trading, I have an infinitely scalable skill? Yes, that's why day trading is literally one of the most powerful and one of the most useful skills in the freaking world. And on top of that, this isn't no drop shipping, one product, one hit wonder. Once you learn the skill of day trading, you're set for freaking life. And I don't want to like gaslight you guys into that, because day trading, it's one of the hardest skills in the world. But assuming that you guys are already living a hard life, you guys already work hard in your jobs, what if we just take all that hard work and put it into day trading? I can almost promise you that you'll be able to get out on top, just like I was able to get out on top, just like all these other people were able to get out on top. And again, I'm not trying to convince you that this is going to be a super easy path, but I am saying that day trading by far is the highest leverage skill in this make money online space. You saw all of these meme coin day traders go from literally broke college students to multi-8-figure, several millions of dollars in just a couple months. Now, crypto's a whole different story, and I'll explain later in this video why we want to stay away from crypto, just because it's too volatile. There's seasons for it. But day trading, on the other hand, the market's always going to show up, okay? The market's going to show up whether you're in it or not. And that's why day trading is so special. That's why day trading is the highest leverage skill, especially in the year of 2025, for us to be able to learn. And once you learn it, you already know we're set for life. Bankroll. I'm sure a lot of you guys are wondering, like, okay, bet. I know trading is bankroll. We know trading is bankroll, okay? TJR, we know it. We know it's the best skill ever, okay? But I want to give you guys some reassurance, okay? Because I'm sure a lot of you guys are seeing me like in this freaking cave and you're like, damn, this guy probably has fucking 1, 2, 3, 4, 7 monitors and he's just fucking, you know.
Breaker 1, 2, 9, 3, 4, 5, 6, 7. Okay. Yes, we have a breaker structure on the NASDAQ. We're entering longs. Beep, boop, boop, boop.
Okay, that's what you probably think day trading is. It's not. Okay, and it's funny because I didn't even start copying setups like this until I started doing YouTube to be able to film videos like this. Prior to this, I was literally just trading on my iPhone. I had my charts on my phone. I had my brokerage on my phone. Okay, I was doing literally everything on my phone. And the only time that I started using a computer for trading was when I started making YouTube videos, because how else was I going to film it? I couldn't film a YouTube video on my phone. So that's a huge part about day trading. It's like the accessibility to be able to work on your phone from anywhere in the world. As long as you have cellular data or a Wi-Fi connection, you can do this anywhere. And also shout out Elon. Okay, T-Mobile just partnered with Starlink. You can literally be on Mars and be day trading. So eventually when we take that ship up there, what are the drop shippers gonna do? Okay, they ain't drop shipping to Mars. You know what I'm gonna be doing? I'm still trading. I'm trading rocket ships up there. Okay, I know that's a funny joke, whatever, but I'm just telling you that the accessibility that trading has compared to everything else, it's game changer. Okay, not only that is the flexibility. Okay, I'm going to explain right after this that there are multiple sessions within the market as a whole. Okay, whether you're day trading US equities, whether you're trading foreign exchange, whether you're trading commodities, whether you're trading crypto, there is a time zone, a pair, and we're going to get into this, and a session for every single person, no matter where you are in the world, to be able to be trading at whatever time. Doesn't that sound freaking awesome? That's what enticed me about trading, because I was like, man, I'm on Pacific Standard Time. I'm all the way over here in California and market opens at 6:30 a.m. and I'm a sleepyhead. Back then I didn't want to wake up early. So I was like, screw that. I'll stay up late and I'll trade London session at 12 or 1 at night. And that worked for me. If you're in Europe, New York session, it's opening. I think it's like in the middle of the night for you guys, but what do you guys have? London session, it's awesome, okay? There's something for everybody, okay? And then on top of that, the scalability. We already talked about that. What is trading? Bankroll, okay? Why is it bankroll? Because trading is by far the highest leverage skill that you can learn in today's day and age. Why? Because the only thing that you are limited by is your own capital. And just like I said before, I know you guys are thinking, well, I ain't got no bankroll. I ain't got no capital. Don't worry. There are companies that help you guys solve this problem, okay? And there's a whole bunch of softwares and I love trading so much and I could talk about it for hours and I am going to talk about it for hours to you guys. And I locked myself in this room today so I can explain to you guys why I love trading so much. And hopefully by the end of this video, I can transfer the skill to you guys. So hopefully I either one, scared off all the nerds that don't think day trading is going to get them rich in 2025. Hopefully I brought in everybody who thinks day trading will help them get rich and is the highest leverage skill that they can learn in 2025. And with that being said, let's learn how to fucking day trade in 2025, baby. There are around 30 different types of trading. Okay, I'm going to teach you guys the most common, which is day trading, okay? Which means we are entering into trades within the same day and we are exiting trades within the same day. Okay, there's a whole bunch of different types of trading. There's technical trading, there's momentum trading, there's algorithmic trading, there's swing trading, there's fundamental trading. There's a whole bunch of different types of trading, but honestly, those never worked out for me. I attempted some of them, and most of all, they're just way more confusing than just the regular, most common form of day trading, which is getting in and getting out within the same day, and then what? Trading bankroll. So for everybody that doesn't know anything about day trading, don't worry, I'm going to break it down. Ready? On the chart, when it's low, you want to buy it, and then when it goes high, you want to sell it. Boom, you're rich. Thank you guys for watching. I'm kidding. Okay, but on top of that, the nice thing about day trading, I feel like a lot of people don't understand this. They're like, what happens if the market goes down? You can't trade that day. Well, yes, you can. That's actually called a short position. So you can actually sell when it's up high and then buy those shares back for a lesser price, and you can actually still make money doing that. So there's two different types of positions that we can take. We can take a buy position or we can take a sell position. Pretty cool. So that's another nice thing about day trading. And that's why I said I want to stay away from the crypto, because crypto, most of the time, you're only making money buying for the most part, unless you're doing leverage trading, blah, 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 blah. We don't want to talk about that. But for day trading, for us, we have accessibility on both sides. So that's why day trading is such a high leverage skill, because not only can we buy low, sell high, we can sell high and then buy back lower and make money in either direction of the market. So let's say the market crashes. No, housing crash, 2008. Rah, what happens? What happens if the price goes down? Well, you can still make money. And that's why day trading is the highest leverage skill that you guys can have, because when everybody's panicking, financial crisis, we're still getting rich. Now, I want to break down, because again, this is like bare minimum base level of trading expertise required here. Like, just how do you make money from trading? And I know I explained like you buy low and you sell high, but I'm going to do a little high school teacher here for you. Play the economics teacher in high school. I'm going to teach you guys about the stock market, okay? Let's say little Timmy, I am Timmy, wants to buy one share of Apple. I don't even know how much a share of Apple is, but let's say it's worth $100 just for simplicity's sake, okay? I go to my little brokerage on my phone and I say, click, buy one share of Apple. Back in the olden days, and the reason why I have to explain this back in the olden days is because this is still how our system works. It's just digitalized and it's simplified for us, which is better for us because we're able to do these transactions super fast. But back in the day, when you wanted to buy a share of Apple, you would have to make several different phone calls to like the brokerage, to the New York Stock Exchange, whatever. And then they would ship in the mail like your actual freaking paper share, and then it's like, boom, I have my share, and then you would have to like call in every day or whatever, however many days that you own that share, and you're like, hey, has price gone up yet? Or, oh no, is my share worth less money? Like, what do I do? That's how it worked in the olden days, okay? You would get this piece of paper and it would say like, boom, you own one share of Apple, all right? And your share is worth a certain price, and price fluctuates on a whole bunch of different things, okay? It fluctuates based off of news, it fluctuates based off of price action, which is what I'm going to be teaching you guys how to read. And when you wanted to sell, ideally you're selling for a higher price. So let's say me, little Timmy, calls his little brokerage and says, hey, I want to buy a share of Apple for $100. Obviously, I can't just name my price, but let's say Apple's share price is worth $100 today. Then, following that, 2 months later, whatever, the most crazy news in the entire world about Apple, Apple drops a time machine, and boom, 2 months later, Apple's stock is now worth 3 times more than what I bought it at. So it's now worth $300. Then I call up my brokerage and say, hey, I want to sell my share. Boom, we sell the share. What do I make? $200. Awesome. Lit, right? We can do the same thing, but now it's digitalized on our phone. So instead of calling a bunch of phone numbers, we just have these brokerages and these exchanges within our phone that can connect to super cool applications like TradingView, which I'm going to teach you guys how to set up. I'm going to teach you guys how to figure out what brokerage to sign up with. Okay, I'm going to teach you guys what trading platforms you guys can sign up with. So we can do these transactions at the speed of freaking light, okay? At the speed of tapping a button. And the nice thing about that is we're able to get in and get out with precision. So we're not waiting for our brokerage to get off the line and say like, boom, you sold, and then like, oh, price drops a little bit. Oh, damn, I made less money. No, we're getting in and we're getting out with the tap of a button. And that's why day trading is so great now, because we're doing it on our phones. And the age of technology is just taking us so much farther, and that's why it's so much easier to make money online. But I know that sounds super crazy, and I know that sounds like you got to be some freaking genius, but look at me. I'm a retard. And I make a shit ton of money from trading on a day-to-day basis, and on a monthly basis, and on a yearly basis. So if a retard can do it, sorry for using the hard R, you can do it too. And I'm sure the majority of you guys are smarter than me, so I'm sure the majority of you guys will be able to get really good at this, and probably better than me in the future, which is awesome. This is why I do this shit. So you guys can be just like me, except not retarded. It's awesome. It's great. So don't get overwhelmed. I know brokerage, exchange, tapping buttons, buy low, sell high. Okay, I know it seems overwhelming, but I'm going to cover all that in this video, and how you guys can do it, boom, just like this. And start today. Start learning the skill of day trading that is, again, the highest leverage skill in the world. So with that being said, we'll get into the 3 best tools that you guys need to start your day trading career, and I'll go over all the websites, all the apps that you guys need to download so you guys can get started. All right, let's get into it. The very first and quite possibly the most important tool that you guys are going to be using in day trading is called TradingView. This is where you guys are going to be seeing all your charts, how to buy low and sell high. Okay, this is where you guys are going to be using your strategy. Yes, there is a strategy with day trading, and don't worry, I'm going to teach you a strategy once we get all these tools figured out and set up for you guys, because we need to set those up first. So the first tool is going to be TradingView. Not only do they have an app on your phone, but they also have the website on the computer. If you guys are on your phone, I highly recommend you guys download their app and don't use the website. If you guys are on a computer, I don't think they have an app for the computer, but they just have their website. I use Chrome and it's perfect. So what you guys are going to do, I know we have whatever, we got Roger freaking Federer with Mount Rushmore on the back. I couldn't tell you why we got this shit going on right now. Who even is this dude? But we're getting started by staring at him, okay? So what are we gonna do? Get started for free. That's another great thing about TradingView. You guys, again, I told you guys no upfront costs, okay? There's not many upfront costs. You guys can literally start learning the skill of day trading for free ski. That's why trading is bankroll. Okay, so you guys are going to go ahead and click get started for free. From there, it's going to say, oh, free until you're ready? Bet $0 forever. What is that? Talk about bankroll, talk about saving money. We're not drop shipping to Alibaba, okay? We're not going to China and we're not using the Shane factory. We're just using the computers that they made, okay? That's it. That's the only sort of child. Okay, that's it. We're done. Okay, continuing, sign up. It's going to end up, once you guys sign in, whether you're using your Gmail, whatever account you guys want, it's going to bring you guys to a screen like this and say, buy my course, okay? No, we're not going to do that, okay? We're going to just fully avoid that. We're going to go over to markets here, and then we can just go to indexes. Oops. Whatever. Let's just click on indexes. Cool. So, boom. Charts. Buy low, sell high. No, not yet, Timmy. We're not there yet. God, man. Why are you always jumping ahead? Stop jumping ahead. Okay. So this is indexes. We see the S&P 500. We see the NASDAQ smoking on that gas pack, smoking off your ass crack. Okay, we have the Dow Jones, okay, whatever. And then we got, look, foreign exchange. We got Euro USD, GBP USD, USD JPY. I'm going to be explaining how all of these pairs work later on, okay? So I know this all seems overwhelming. What I'm going to do is I'm going to go ahead and click on the S&P 500, and then you're still saying, wait, where's the chart? Is it this thing down here? TJR, how am I supposed to read this? No, Timmy. We're clicking C on super charts. Superman, super charts, super farts. Let's get into this. Bang, look at that, okay? Your chart isn't going to look as sexy as this because I've already custom designed my chart to look really freaking good, okay? You guys don't have that luxury just yet, but what I am going to do is show you guys how you guys can make your chart look just like mine with these beautiful blue and black candles. If you guys aren't discriminatory to candle color, that's fine. What you guys are going to do is you guys are going to go ahead and right click on the chart, and then you guys are going to scroll down to settings, and then you guys can set it up with whatever colors, okay? You guys can do red, you guys can do green, you guys can do yellow, you know? You guys can do fucking black on black, you know? Hey, bruh, if you like that, you like that. You can do white on black, get a little light skin in there, okay? You guys can do that however you guys like, okay? These are my chart settings. Most of the time, your chart is going to look pretty freaking disgusting at the start, and it's going to be like green, red. There's going to be a whole bunch of BS in the background. Okay, so let me go through here. I'm pretty sure this is somewhat important. We have like the previous day close that we want to hide. So I'll just go ahead and you guys can copy this. You guys can change it however you guys want. Just make it look pretty, okay? That's one of the things that I value the most about my charts is like, first and foremost, I want my charts to be clean. If my chart isn't clean, and you guys will understand as you guys get better at trading, and as we get deeper into this video, you guys are going to be like, wow, how does he keep his chart like clean and tidy, whatever, because it can get really overwhelming. So let's go into canvas. I have just background, solid white, grid lines, no grid lines. Sometimes like, look, you know, it has these like nasty ass grid lines. I don't like the grid lines. Crosshair is just boom, straight up. And then trading alerts and events, you guys don't have to care about that. So boom, once you guys have your charts looking nice and sexy, we are going to actually put a pin in TradingView for now. Now that we have TradingView set up, we're going to put a pin in it, and I'm going to explain these little candlesticks are, how to read them, what they mean, okay? And I'm going to be explaining these foreign exchange pairs. I'm going to be explaining commodities, gold. I'll even explain crypto for a little bit, okay? And we're going to understand what all this means, how we can read it, how we can actually make money from this market. But in order for us to make money, we actually have to be set up with a brokerage where we can deposit money, where we can withdraw money, and where we can actually execute these trades. Because on TradingView, we're not doing any of that. This is just where we're just marking shit up. Okay, we need a brokerage. Again, remember, little Timmy, he calls his brokerage and he says, hey, can I buy the shares? This is how we're going to be buying and selling, selling and buying, okay? So with that being said, let's jump over to how to find a brokerage, how to get set up on a trading platform, because this is our Chartwork platform. I'm going to show you guys how you guys can get set up on a trading platform. All right, so there's a plethora, like literally millions of different brokerages that you guys can go through in order to start trading and start trading on their platform, start trading on their apps on your phone, start trading on the apps on their apps on your computer. Okay, it really just depends on what suits you best, okay, and what platform or what brokerage you think best suits you. Okay, so I personally don't trade options. So options is out of the park for me. If you guys came here to learn about options, bye-bye, okay? I'm not going to teach you guys about options in here, but I am going to teach you guys a really solid strategy on how to actually make money in trading. So if you guys want to apply that to options, by all means, but I'm not going to teach you guys how to set up an options trading account, okay? I'm going to be teaching you guys how to actually get started with just day trading, okay? Using leverage on your own capital just through the account, not like leveraging specific positions, okay? So the brokerage that I use is HeroFX. That's the one that works the best for me, okay? I trade indexes and then occasionally I'll trade foreign exchange. So that's what works best for me. Sometimes these futures brokerages have really strict regulations on the type of leverage that you guys can use. And especially if you guys are lower capital individuals and you guys are just getting started into day trading, these big brokerages like Tradevate and TradeStation, you just straight up won't be able to trade on them because you guys don't have enough money to trade with them. So instead, you guys would go over to a CFD brokerage such as HeroFX, where you guys can leverage your money more and be able to actually start trading with less money. Again, you guys can literally just type in trading brokerage, look through like a whole bunch of all of these different brokerages, find out what works best for you. Me personally, I use HeroFX. They're great. I can deposit, I can withdraw within like seconds, and it works great for me. So with that being said, I'm going to go onto the HeroFX dashboard and show you guys how to get set up on there. Again, if you guys want to go through a different brokerage, that's completely fine. I'm just not really going to go over that. Okay, so with that being said, let's jump onto HeroFX's website. Also, I'll leave a little link in the description. I have a little affiliate with them. So if you guys want to sign up with HeroFX, and if you guys appreciate all the info that I've been giving with you guys, it would be a huge support if you guys just signed up with my link right underneath here in the description. And yeah, they're super solid brokers for me. I trade on them consistently and have been trading with them for a while. So let's get into it. So once you guys go through that link, it'll have you guys sign up and whatever, and it's going to take you guys to a page that looks like this. And this is all the different trading platforms. This is also why I love HeroFX, is because they literally give you a like multiple different types of apps, websites, and different trading platforms to trade on versus other, again, big brokerages. They don't give you guys any sort of variety. They're like, hey, you have to use this one specific platform. And it's like, what if that platform sucks? Luckily, HeroFX gives you literally so many options, okay? Me personally, I use TradeLocker and I like trading on the app. So again, you would just go on your phone. You can literally just look up TradeLocker in the App Store and then go ahead and download that. And then they will give you guys an email once you guys have signed up, your account details and your password. As you guys can see, I have $35,000 just sitting in my wallet balance right now. This is going to be useful because I can either deposit this back into a live account, because this is just sitting on my dashboard wallet, okay? It's not in my trading account and it's not in my bank account yet. So this is just the in-between. This is why a broker like HeroFX is super useful, because again, they have different withdraw methods. Okay, you can withdraw in crypto, you can do like bank transfer, just a whole bunch of methods, and it's great. And especially for me, I love crypto and I like investing in it. So when I withdraw, most of the time I just do it through crypto and it hits in literally seconds. So for me, I do it through the TradeLocker app. They will send you guys a little email with your account username, with your account password, and you guys just go onto the app, you guys plug in your username and password, and it's locked in from there. Again, they have a whole bunch of different trading platforms that you guys can use. If you guys are on PC or laptop, whatever, you guys can do the web trader, which is, it brings up a little tab where you guys can trade on TradeLocker there. And if you guys want to trade on desktop, there's literally like a full-on app called TradeLocker that you guys can download, and then it's the same login process. They're going to send you guys an email. You guys are going to get your username and password. You guys are going to log in, and then from there, you guys will be all set. Okay, on top of that, while we're on the talking about brokerages, not only is a brokerage super useful for us to be able to deposit and withdraw money, right? That's our end goal with day trading, is to what? Bankroll, right? But before we can even get started with the bankroll, we need to learn the skill of day trading, right? How are we going to learn the skill of day trading? Like, we don't want to just throw money into the pit off rip. We don't want to do that. And again, like, a lot of people online and on YouTube will be like,
hey, use my affiliate link, sign up to my brokerage, deposit $10 billion so I can reap the rewards of you guys losing money.
We're not doing that, okay? I'm going to be completely open and honest with you guys. Okay, first of all, you guys can use this brokerage, or you guys don't need to, okay? Use whatever fucking brokerage works, okay? For you, whatever. I don't give a shit. What I am going to tell you guys is, before you guys jump on a live account with real deal, real spiel money, don't do that. And we're going to learn the skill of trading first, which is through what? Demo accounts. So we're not going to be using real money. We're going to be using paper money, okay? And demo accounts are by far, this is why trading is such a high freaking, man, I love trading so much, bro. Trading, okay, trading is so good. This is why trading is so fucking good, bro. Drop shipping, how do you have to learn? You have to spend money, you have to make mistakes, you lose money. Day trading, how do you learn? You spend money? No, you don't have to spend money. You can use fake money, paper money, demo account money, and learn the skill while you suck. Because all of you guys are gonna watch through this video, and then you guys are gonna be like, here we go on my road to $1 million. And then you guys are gonna start trading, and you're gonna be like, holy shit, this is way harder than I thought. But don't worry, I'm willing to put in that work, because you know why? Trading, bankroll, right? We already know that. But the awesome thing about trading, we can trade with fake money. So we can literally learn the skill that is eventually going to make us money without losing money in the first place. We can learn the highest leverage skill in the world without putting money up front. Do you know how difficult that is in other fields? It's literally impossible in other fields. It's actually genuinely impossible. Every other side hustle, you have to put money up front, and then boom. Most of the times, the money that you put up front, you get fucking washed. And then it's like, well, you were just paying for that lesson. This, you're not paying for no lessons. You learn the lessons on fake money, on demo accounts. So I'm going to show you guys how you guys can set up a demo account on HeroFX and then start trading on that, because you guys aren't going to be putting 35 fucking racks into a live account. Okay, and then just saying, yeah, let me see if this works. Fuck no, we're not gonna do that, okay? I do not want you guys to do that. I want what's best for you guys. And trust me, I felt, bro, the beginner trading video that I watched was like, literally was exactly what I told you guys. Like, sign up with this brokerage, deposit $1,000, and you're gonna be rich. And I did that. Guess what happened to that 1,000 within the day? $0 remaining, okay? And that was literally all the money that I had. So, we're already putting you guys on a better track here. We're going to be not putting money up front. TradingView, free. Demo account, free. The highest fucking leverage skill in the world. Okay, so I'm going to show you guys how you guys can set up a demo account on HeroFX. Okay, so there's going to be a page that says accounts right here. Okay, you guys are going to click on it, and then it's going to say live account. No! No live accounts yet. We need to learn the skill of trading, okay? We need to learn the skill of trading first. There's live accounts, and then there's demo accounts. We want the demo, okay? We want that fake money. We want to learn the skill of trading without having to risk money. That's like a good comparison of this is like you having never played basketball before in your life and you go to the blacktop with like $1,000 in your pocket. You've never played basketball before in your life and you go up to people that are playing, really good players, and you're like, yo, I got a bando for whoever's trying to run ones. You slap that bitch down and then what do? You fucking lose. Obviously. Why? Because it's your first time playing basketball. It's your first time trading. Versus if you just show up to the park with no bread and you just keep playing until you get good, until you get really fucking good. And then you switch over from the demo to the bando in the pocket, slap that bitch down, and now you're cooking the 60-year-old that's got ankle braces on, and you're hitting them with that fucking jelly. Okay? Sorry, we're getting off track here, but you get what I'm saying. The demo account, it's where we want to go. Okay, so again, I use Trade Locker. There's a whole bunch of different, like, whatever, configurations. There's demo 0, okay, which means low spreads and 0 commission. There's demo raw dog. Okay, sorry. That means raw spreads and fixed commissions, okay? And then those are the only two for Trade Locker, okay? Me personally, I do low spreads and no commission. You guys can choose whichever one you guys like. Again, you guys don't really know much about this. I would just go with demo 0, okay? That's the best one that works for me because I prefer low spreads and 0 commissions than fixed commission and raw spreads. I don't like to get fucked raw. I would rather, you know, wrap it and tap it. You know what I'm saying? And okay, we're getting way too confused here. Demo account, we got it set up. Same thing here. We're going to click on the account and then boom, once we set up that account, HeroFX is going to send you an email and say, boom, you got your username, you got your password, you're locked the fuck in, go to Trade Locker, sign in, bling blow, and then we're going to be signed in. And now let's go over to Trade Locker so I can show you guys how to actually execute trades. And don't worry, we're going to get into understanding the charts. We're going to get into understanding the craziness of TradingView, but I need to explain all of these softwares and gizmos and gadgets first so you guys can understand this shit before we get in. Because what would happen if I just say like, yo, this is the trading strategy, and I just blitz through everything, and then I say, yeah, go figure out how to find these charts online somewhere, go figure out how to actually set up a brokerage somewhere, go figure it out, little baby bitch. Yeah, I'm not gonna teach you that shit. No, I am gonna teach you that shit. And I'm strapping myself in this fucking chair for the next 7 hours so you guys can learn this shit. Okay, Timmy? You're gonna fucking learn the highest leverage skill in the world. You're gonna learn this shit whether you like it or not. So you better lock the fuck in, Timmy. Let's get on Trade Locker, you bitch. Sorry, Timmy. I forgot to tell you one thing before we get on to Trade Locker. When it says deposit to demo account, are you guys going to end up depositing? Like, is this real money? No. So if I want to be a quadrillionaire with fake money, I can. But just to like teach you guys, like you guys can just start with like, just do like whoa, what the hell? Just do like $10,000 to start, okay? 10,000 is like fucking fine, okay? Just so you guys have enough capital to be able to take like hella trades. And again, you guys can change this however you guys want. Is it going to ask you to deposit money? No, it's not going to have you deposit any bread. This is just imaginary fake money. How much imaginary fake money do you want? I want $100 billion. I want 100 million rupees. Sorry, guys. We've already been locked up for too damn long. We're gonna do $100,000. Okay, Timmy, let's deposit this bitch in a demo account and let's get going. All right, bet. So it's going to take us through here, and then boom, jump scare. This is our day trading account. Okay, as you guys can see, it says demo right here. This is fake money. We have $100,000 worth of fake money. So now you guys are probably overwhelmed. We're looking at a crypto chart right now. We don't want to be looking at a crypto chart, but eventually when we get back over here to TradingView and we're analyzing pairs like Euro USD, ideally we are going to be pulling up, okay, let's do foreign exchange majors. They're blacked out because the market's closed right now. It's a Sunday. But look, we have the same exact chart that we are looking at on TradingView, so we're actually able to execute trades on Trade Locker while looking, see, it's the same chart. Boom, Euro USD, Euro USD. So the only thing that we're using this for is to execute trades, okay? And again, they have an app on your phone where you guys can execute trades as well. And we're going to be using this to do chart work because at At the end of the day, this is just like kind of it's like a TradingView integration here. Some people are weird and they like doing their chart work on here, but then it's like, okay, I have to redo my chart settings and I don't want it black. Not that I'm, you know, whatever, but I like my charts looking clean, and it's just way more preferable for me to be on TradingView with this clean setup rather than doing the chart work on here and then also having to manage positions. It brings a lot in the mix here. So even though the foreign exchange markets are closed right now, I'll just do an example on crypto for you guys. So again, ideally you guys aren't trading crypto. It's a volatile market right now. Whatever, there was just a whole bunch of news on Bitcoin, but down here is where we have our positions, okay? And I'm going to get into this again later when we start explaining these pairs, how they work, why they go up, why they go down, and then we're going to go into the strategy of how to actually place trades. And I'm going to go over a couple tools on how you guys can use risk management, because risk management is, there's a whole bunch of things to cover in this video and we're just getting started. But hopefully like trading is starting to make a little bit more sense to you guys now. Like hopefully we're bridging that gap of I don't know anything about trading to trading is bankroll to, okay, I'm getting set up with trading. And then by the end of this, you guys are going to be like, hey, I know everything there is to know about trading, including strategy, including risk management, including how to control my headspace, my emotions, whatever. Okay, but I need to show you guys how to use this thing first, how to actually place trades. So right now, this is the lowest size that I can enter into a Bitcoin trade. And Bitcoin and crypto is a 24/7 market, so the markets are open 24/7. I don't trade crypto. I mean, I do like super long-term investing in it, but that's besides the point. I'm not actively trading it. I trade indexes, and indexes are closed over the weekend. But a brief example of how you guys would enter into a trade. Let's say this is my allocated risk for the day. I'll teach you guys again later in this video how you guys can actually calculate risk using a risk size calculator. But let's say I want to place a trade on Bitcoin and I want to place a buy because wow, look at that. Price is going up. I want to place a buy. Okay, I confirm that and then boom, look at that. Oh my God. Oh my God. Oh my gosh. We're up. Oh shit. Now we're down $45. Oh shit. Yeah. Ramp this baby up. Give me more. Give me more. I want more. We're down $32, but sorry, got a little bit excited. Oh shit, we might take profit. Okay, sorry, I need to teach you guys how to trade. Anyways, now we're in 1, 2, 3, 4, whatever. 4 freaking positions, but we can see what's my profit and loss in fake money. Again, I'm down $38, $34. This is fluctuating. What's my current equity like in my account balance? How much margin am I using? So you're probably thinking like, okay, how do I even know how much money I'm risking? How much money am I going in with, right? A lot of people are like, well, how much money do you go in with every trade? And I'm going to get to that later, but I just wanted to show and explain to you guys how you guys can get in and get out of trades. Okay, so that was a buy position, right? So how the fuck do we get out of this trade? Okay, let me move my head down so you can see what this looks like. I'm a little baby ant now. But you guys can see 1, 2, 3, 4 buy positions on Bitcoin. We can see how much each of them are up. So there's a whole bunch of actions over here. If I'm like literally printing bread, I can share the position to my friends and be like, yeah, trading's bankroll, idiot. You should watch TJR Trades video. Then you guys can edit the position. You guys can do a partial close on the position. You guys can fully close the position. So let's say I'm like, okay, this trade is looking scary. I want to get out of this. Boom. We hit close position. We confirm. Damn it. We just lost $24. So that like fully closed that one position. I'm still down $25 floating on these other 3 positions here, right? Why? Because we entered into buy positions here and price has just gone down ever since. Man, TJR sucks at trading, right? But there's a bunch of other actions that I want to teach you guys about while we're on this platform and while we're on the topic of this. So that was a full close. What if we want to just close a little bit of this position? So the way that at least Hero FX and TradeLocker calculates position size, it does it on lots. And I'll explain what these are and I'll explain how we can calculate how much we're going in with per trade based on lot size. And there's a really super easy calculator that I'm going to show you guys how to use that makes your life way simpler, okay? But right now I entered in with 0.1 lots on this. So let's say I only want to close half of this position. What do? I just crank this down to 0.05 lots. And then what can I do? I can press close, confirm 0.05 out of the 1 lots. And now I have not only this one fully closed position, but I also have this position that I closed for 0.5 lots. And then I still have that remaining position with 0.05 lots still open, okay? And then let's say I want to close the remainder of it, 0.05, close, confirm, boom. Now I fully have closed out of that remainder of the position. Now, there's another thing that I need to teach you guys about that is going to be very useful as time goes on in your trading career, and hopefully it starts at the very beginning of your trading career. This is stop loss and take profits. I'm going to teach you guys where to strategically put these based on our strategy, so we are actually able to make money and make more money when we win and make less money when we lose, so we can end up being profitable traders. Okay, but first I need to just show you guys how to place these on the platform. So there's 2 different ways. We can either click on this, okay, we want to edit this position. Sorry, I'm used to it on the phone. Most of the time on the phone, you can just click on the line. So you're going to go ahead and click edit position. This tool shows up right here. We have stop loss and take profit, okay? These are probably some of the most useful tools in day trading ever, okay? And this is kind of getting into how much money am I going to make on this trade? How much money am I going in with on this trade? This is where these tools come in handy, okay? So again, we're in this buy position. Our stop loss is where we are exiting the trade, okay? So this is our draft stop loss. This is another nice thing about HeroFX and Trade Locker. See how easy it is for me? I can literally just drag it. I can drag it and put it wherever. So let's say our stop loss is used to show when and where we want to get out of our trade. And again, I'm going to explain to you guys how we can strategically place these so that we are losing trades at the right time when our idea is invalidated, and we are winning and taking profits when our idea has been completed, when our strategy has been completed, okay? And we want to get out because, again, trading isn't just win, 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 win. Okay, trading is like win, loss, win, win, loss, loss, win, 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 loss, loss, win, loss, win, loss. Okay, it's always back and forth. You're going to have winning days and you're going to have losing days. And I'm going to get into that within the psychology portion of this long ass video that you guys are watching. And again, shout out to everybody who has been sticking along for this. But you guys are going to go through a period where you're like, man, I keep losing, or like, oh, I never want to lose. No, you have to be willing to lose in trading, not only to learn from your mistakes, but also because no trader is 100%, okay? Every single trader misses shots, misses trades, okay? And I'm going to use a lot of basketball analogies in this video, but it's true. Michael Jordan has missed a whole bunch of shots in his career, but that doesn't stop him from being the GOAT. It's the same thing with trading. We always want to take the shot, but we don't know if it's going to go in or not. All that we can do is we can train our skill on taking those shots so that the probability of it going in is a lot higher than before. So stop loss, again, I'm going to show you guys how to strategically place this, but this is cool. There's a couple things here. So not only when I drag my stop loss, it sets it to the price. So see, the price is 92645. Let's say I want to put it lower. It changes it to 91965.31. And then it also shows us the percentage of our account balance that we're going to be losing. So if we lose this trade, we're going to be losing way less than 0.01%, but we're going to be losing 12 bucks. Okay, from our $100,000 account size that little Timmy really just wanted to be a billionaire with, right? So again, if I move this up, what are we going to be losing? And this is kind of getting into like, how much am I putting in? If we lose the trade here, how much did we go in with? Essentially $9. So that's all you need to know. There's a whole bunch of these beginner day trading videos that are like, well, when you use this leverage and you have this account balance and then you enter in with this many lot sizes, you're technically utilizing the leverage from the brokerage, and then you're actually leveraging your current account balance by 500 or 50x depending on what leverage that you use, and then you're going to be entering in with this many contract size which correlates to this many lot sizes, and then like, shut the fuck up, you nerd. And just how much am I risking per trade? And I had to go through that. So I'm telling you guys, don't go through that shit. Just look at how much am I going to lose? Damn it, Timmy, how much are you losing the family today? $9, bet. Your lunch money's on this trade. So boom, that's stop loss. Take profit is where we want to win our trade. So again, let's say we want to win our trade up here. How much money are we going to make? Again, we're risking $9 to make $8. It's a pretty shitty trade. Ideally, we have a good risk to reward, and I'm going to talk about that. Again, it's a long ass video, but our take profit shows us what price we want to close the trade at. So again, let's say we want to make $12, boom, our take profit's up here. Okay, and these are just drafted right now. So once I click confirm, it means, okay, I entered into this trade. If it hits my take profit, if I win the trade, if I make the shot, I make 12 bucks and 89 cents. If I lose, if I miss the shot, I lose $9.83. We confirm that, and boom, we got the red line and the green line. Scary ass lines, right? And then we can also see on the screen, we have stop loss, take profit, okay? And then we can see where the current trade is at. So right now, this trade, we're at a net negative $1.35, and we can constantly track this. But we know when this price gets hit, we are going to lose how much money? $9. If this price gets hit, we're going to make $12 and whatever, 80 something cents. Cool. So that's how you guys can enter into trades. That's how you guys can exit trades. That's how you guys place take profits. That's how you guys place stop losses. And again, later on in this video, I'm going to show you guys how we can strategically place take profits and stop losses so that we can make money day trading. I'm going to explain to you guys how you guys can place your stop loss strategically and place your take profit strategically so you guys can have a good risk to reward ratio. So your rewards are higher than your risks consistently when you're taking trades. W in the chat. Okay. There's one more thing actually that I want to show you guys on this program and on this platform, on this brokerage, on this. Okay. So we're going to go ahead and close this trade out. We're going to close all of these trades out. Okay. We're going to close position. We ended up losing 55 bucks. So that was on a buy position, okay? Again, we want to buy low and sell high, okay? I bought within 1 minute and then sold like whatever, a couple minutes later. So obviously price isn't going to fluctuate that much, and it's the weekend, low volatility, whatever. So that was a buy position. What happens, remember, let's say the market crashes, and how do we sell? And then how do we enter into a sell position to actually make money? Because if we sell high and then buy low, we're still able to make money. So it's the same situation right here. Click sell, confirm. And that doesn't mean you're selling your previous buy positions. No, it means you're entering into a short trade. So there's a long position means we think price is going to go up. We want to buy the thing. Or we can enter into a short position, which means we think the thing's going to go down. And it's the same situation here. We can close the position completely. We can partially close the position. We can edit it. And when we're in short positions, where's our stop loss? It's going to be above where we entered into the trade, right? Because how do we end up losing money on short positions? Price is going to come up, and eventually our trade idea will get invalidated if it keeps going higher and higher. And we're eventually going to want to get out of this trade at some point in time, right? So again, in this case, we're now risking pretty much $100 on the stop loss. Okay, so 0.1% of our account balance. Okay, and if price hits this, we're going to lose money. So now, since we're in this short position, since we're in this sell position, we're trying to sell high and then buy low. And when we mean buy low, it just means hitting take profit. And again, I don't even want to go too deep into that because you guys genuinely don't need to know that shit in order to make money in trading. Just like straight up, you guys don't need to know that shit. Just know short position, sell position means we want price to go down, and we lose trades when price goes up and our stop loss gets hit, and we win trades when price moves down and our take profit gets hit. Okay, so our take profit is now low versus, so in a short position, our stop loss is above the entry and our take profit is below the entry. In a buy position, in a long position, our stop loss is underneath the entry and our take profit is above the entry. Because when we're buying, we want to exit when price is at a higher price, and when we're selling, we want to exit when price is at a lower price. Cool? So when we do this, we hit confirm, and then boom. Our stop loss is right here. Our take profit is right here. Cool. So that's how you guys can enter into trades. That's how you guys can enter into a long position. That's how you guys can set a stop loss. That's how you guys can set a take profit. That's how you guys get set up on TradeLocker. Now, what I want to do is swing back around over to TradingView and I want to talk to you guys just how to read the charts, okay? Just like on a bare, basic, fundamental level. I want to explain those candlesticks to you guys, like these candlesticks, what they mean, how it dictates, and what it tells us about price, okay? I also want to tell you guys, like, how do these foreign exchange pairs even work? Like, why is the euro versus the US dollar going down and then going up? Like, we kind of want to understand some of these things in order to understand, like, what are we even trading? Okay, it's one thing to just have a strategy and be like, candlestick go this way, candlestick go that way, I enter trade because I am TJR sex slave. No, you're not. Keep that in the video because I want you guys to hear that, but you're not. Not yet. Okay, lock in, twin. Lock in. Okay, let me explain to you guys how these pairs work, okay? This is something that you guys are going to see very frequently across all trading, okay? So this is a Forex pair, so it's the Great British Pound against the US dollar. You guys see this in crypto all the time. You ever wonder why crypto pairs say like BTC/USD? It's because it's Bitcoin against the US dollar. You ever wonder why gold is XAU/USD? It's because it's gold against the US dollar. This is how we trade, how we make money in the markets. This is super quick and fast explanation because I had to watch a fucking British dude go over this shit for 50 minutes and I was literally ripping my hair out while I was watching that beginner day trading course. And this dude's like, this is so important. And turns out it's not that important. But when your family members are like, hey, little Timmy, explain this Forex shit that you're doing. And you got to come up and you're like, I don't know, mama, just buy low and sell high. Okay, they're going to be like, get the fuck off of that shit. You're never going to be successful. And that was essentially what happened to me when I couldn't explain it. So I'm going to explain this as simple as possible so you can explain it to your families, and then you're never going to need to use this shit again, okay? 2-minute segment of me explaining foreign exchange, how this shit works. So this is a Forex pair. There's commodity pairs, there's crypto pairs, and then there's also like indexes and stuff, and we'll get into that later. So Forex pairs are literally just quoted pairs, okay? It's one currency against another, okay? So in this case, the base pair always comes first, and the quote currency comes next. Okay, so the base currency, Great British Pound. This essentially is showing how many US dollars is equivalent to one single Great British Pound. Okay, so one single Great British Pound is equivalent to 1.32 US dollars. Got it? That's literally all it is. It's a fucking fraction, okay? So I know this sounds confusing, but the price of a pair is how much of the quote currency, it costs to buy 1 unit of the base currency. So the base currency is always just one, okay? And crypto is a really good way of understanding this. So like if we go to the BTC/USD chart, I'll literally pull that shit up right now. Look, BTC/USDT. We pull this up. What is the price at? $93,471. So one Bitcoin is worth what? $93,497. Bet. So there's one of these equals how many of these? The quote currency is how many of it. And most of the time, the quote currency is almost always going to be in USD unless you're trading like weird Forex pairs. And by all means, like you can trade the Forex pairs, but this is just understanding how the shit works. So again, Forex pairs, it's one, the base currency is always worth one. And then the quote currency is always what this one is equivalent to. So let's say like we wanted to do the pound against the Australian dollar. It would be like GBP/AUD, and then it would equal whatever 1 pound is equivalent to in Australian dollars, right? So it's whatever the base currency is equivalent to in the quote currency. And that's all you need to know. Don't be thinking, well, yeah, let me do my research on them fucking pounds. No, bro, don't do your research on them fucking pounds. The only thing that you need to know is Big Ben British biscuits and beans, okay, bro? Don't be doing any more research on them fucking pounds. The only research you need to be doing on the pounds is on the charts right here. But that's essentially how price and why price moves in the foreign exchange market. So same thing, Euro USD, okay? So if we see this, the Euro against the US dollar, let's do a test here. This is the price of Euro USD right now, and the market is closed. So how many dollars is 1 euro worth? Let's wait for the class. How many dollars is €1 worth? God fucking damn it, Timmy! Okay, it's 1.03738. That's how many dollars €1 is worth. Okay, now let's do it with gold because there's like commodities and shit. Let's do XAU because that's the sign for gold, USD. Okay, again, this is the pair, gold. Let's click on it. Gold. What is the price of gold against the dollar? $2,858.14. That's how much it costs. I can't remember how much gold this is equivalent to. I think it's like whatever, a gram or something, or an ounce. I don't know. It does not matter. We just need to understand this for when we explain to our families how this shit works. Okay, so that's literally it. And then last but not least, indexes, which is what I mainly trade. It's pretty much the same thing, but indexes doesn't have the /USD because indexes are just US indexes anyways. So indexes, it's just the same exact thing. So again, if we want to buy one share of the S&P 500, how much would it cost? $5,954. Or how much is one share of the S&P 500 worth? $5,954.51. How much is one share of the NASDAQ worth? $20,884. Okay, that's all it is. Okay, foreign exchange, indexes, crypto, commodities. We're learning, y'all. We're learning. We're actually learning you guys are learning way faster than I had to learn back then. So like everybody, if you guys haven't fucking subscribed yet, I don't know what you're doing. Get your hands off of your dick, click the subscribe button, and then go back to stroking your shit. And let's keep this ball moving, okay? Now we know what to say to our parents when they ask us what we're doing. We know how to explain it. We know how to enter into trades. We know how to set up all of our shit. Now we can get into the fun stuff. Let's get into strategy, bros. Let's get into how we can actually understand where the fuck this is going, how we can make money on it. Let's get into this shit, bro. Get excited. This is what you guys came here to learn. You guys came to learn the strategy. You guys came to learn about that bankroll, all right? Let's get it. So before we can actually get into all the fun shit like buy here, sell here, make $1 billion, whatever, we need to understand what these candlesticks even are, what they mean, what all these little numbers up here mean, what these prices mean, okay, what all these tools can do. So that's what I'm going to break down now. This is going to be within TradingView. I'm going to pull up a couple graphs to help you guys understand some things and some basics. And then we're going to get into strategy. Then we're going to get into risk management. Then we're going to get into psychology and everything else that you guys are going to need in order to start working on the highest leverage skill literally in the world, which is, I mean, it's so cool to say that I am a retard with one of the highest leverage skills in the world, and you retards can do it too. So the first thing that we're going to need to do is understanding these Japanese candlesticks. So this is a super good graph, and understanding of these candlesticks, we'll get into time frames and how those represent these candlesticks a little bit better when we get back on the chart. But these are our literally only tools on the chart. It's just up and down candles. So like how are these going to help us, and how can we use these to our advantage? Here we go. We're getting into the big shit now. Okay, what is a candlestick? It represents price movement within a certain amount of time and everything that price did within that certain amount of time. So each one of these candlesticks represents price movement within a certain amount of time. And the certain amount of time is dependent on what time frame you are on the chart. And I'm going to explain that right after this. But first, I just want us to understand candlesticks in general. So this candle right here, an up candle, right here is called, this filled in part is called the body of the candlestick. These little lines right here, these snail trail lines, are called wicks. So again, this is the body, and then notice why they're called candlesticks, because they have little wicks. It looks like a candlestick. Let me see what I'm saying. The shaded in part is called the body. These little lines that go up and down, and I call them snail trails for a reason, are called wicks. Now, before we even get into time frames or anything, let's just explain this candle. So let's say that we're on the daily time frame, and you don't need to understand what that is just yet, but let's say that this one candle represents 1 day's worth of price movement. So we see open, we see low, we see close, we see high. What do all these things mean? The open means, okay, the day started and this is where price was. when the day started. When this candlestick opened, that was where this right here is where price was at. Then at some point in time during and throughout that day, price moved down to this point in time. So that's why I say it's called a snail trail, okay? Because anywhere that price goes, it leaves a trace. It's going to leave a wick. So the lowest point that price got to on this day was right here. How do we know that? Because of the wick. The wick shows us that. The highest point that price got to within the day was all the way up here. And then where did the price end at on the day? So we know that the day opened at this price right here. And I know we don't have prices to the side, but I'll show it to you guys on the chart after we get through this. And I know this is confusing for you guys right now, but you guys will get the hang of it as we start going through this a little bit more. And that's why I'm being a little bit more serious now, because this is when we're getting into the big shit. Okay, so right here is where the candlestick opened, and this is where this was the price that the day opened at. At some point in time throughout the day, price came down to as low as this point, and that is marked out by this wick. At some other point throughout the day, price got all the way up here. How do we know that? Via this candlestick's wick. And then when the day ended, price ended up coming back down and then ending and closing the day right here. Okay? So why is this a bullish candlestick? Because we opened at this price and we closed at a higher price. Now a down candlestick, a bearish candlestick, is the exact opposite. So now let's say these are two consecutive daily candles. So again, this shows like 24 hours worth of price action. Now we closed right here, right on the previous day. So when this day closes, what happens? A new candlestick opens. That's why we'll see this bullish candlestick close at this price, and then the next candlestick opens at the past candlestick's closing price, more often than not. Okay, there's some exceptions, but we won't talk about that for now. So when this candlestick closes, this candlestick opens. It opens right here. At some point in time throughout this day, price got up here. How do we know that? Through the wick. At some point in time, price came all the way down here. How do we know that? Via the candlestick's wick. And then once all 24 hours has finished, price closed right here. How do we know that it's a bearish and down candlestick? Because it opened at a higher point than where it closed at. I know this is a bit confusing, but we're gonna take this slow and steady here. I know this is super daunting, but we're going to get through this, and you're going to be amazed at how far you come by the end of this video. Pause how far you come. Come on now. You get what I'm saying. So each one, this D stands for 1 day's worth of price action. So these are time frames. This right now, each candlestick is representative of 1 day's worth of price movement. Again, the price movement is shown via these candlesticks. What happens if I move to the 4-hour time frame? We now see price action, and these candlesticks now show 4 hours worth of price movement. It shows more detail on the chart. So when we were on the daily chart, we're only seeing like, okay, this is just one up candle. This is 24 hours, right? This candlestick right here is 24 hours worth of price movement. But when we go down to the 4-hour time frame, we can see those 24 hours split up into 6 candlesticks now. Why? Because 4 times 6 equals 24 hours in a day. You get what I'm saying? So now we can see it's spread out a little bit more. So now each one of these candlesticks represents 4 hours of what price did. So on this candlestick right here, for example, what did price do in those 4 hours? Where's the open, high, low, and close of this candlestick? It opened right here. How do we know that? Well, because price went up, right? So if it closed up, then we know the open is right here. It opened right here. At some point in time during these 4 hours, price came down to this price right here, $87,303. At some point in time during that 4 hours, price came to that price. And then also during those 4 hours, at some point in time, price came all the way up to $95,152. And then after those 4 hours were said and done, where did price close at? $93,533. And now we can see on the right-hand side, see this little timer? This is showing how much time is left until this current candlestick that is forming has to close. So this current candlestick has only been opened for the past, what is that? It's been like 34 minutes because there's 3 hours and 26 minutes remaining on this. And we can see that when this 4-hour candlestick closed, where did the next one open? Where this 4-hour candlestick closed. And we can see these wicks, these snail trails, form in real time. So right now, for the past 35 minutes that this new candle has been open, where has price gone? It shows us every inch of where price has gone so far. In the past 35 minutes, how high has price gone? It's gone up to $94,200. It opened at $93,533. And right now, price is sitting at $93,923, and it hasn't gone lower than its opening price. I know this is confusing, but we're going to keep going. We're going to slowly push you along here. Now, what happens when I pull up the 1-hour time frame? Now those 4 hours are split up into 4 candlesticks. So now we're seeing even more detail. So now instead of just seeing one candlestick that represents 4 hours worth of price action, we are now seeing 4 candlesticks. Let me remove these drawings. 1, 2, 3, 4. So these 4 candlesticks in this gray box here represent that 4-hour candlestick. Why? Because now we're on the 1-hour time frame. So now each one of these candlesticks shows 1 hour's worth of price action. So during this hour, what did price do? Well, during this hour, it got to as low as $87,303. It opened from the previous hour's close at $87,420. At some point in time during those 60 minutes during that hour, price got up to $91,957. And by the time that hour ended, price closed at $91,208. And then what happens? The next candlestick opens and then it starts forming. So if we look at most recent price action, this candlestick has how long to close? 23 minutes and 35 seconds. Where has it been in the past hour? It's been up to $94,200. Where did it open at? $93,528. Now it's cool because we can get deeper. You can see it literally gets down to 1 minute. So we can see literally every single minute what price has done and where price is going, whether it's going up or down, and where price has gone and how price has moved within every single minute. We can even get down to the second charts, 15 seconds, 30 seconds. We can get down to the 5 minutes. So now these candlesticks are showing 5 minutes worth of price action, okay? So now we can see that previous bullish 1-hour candle in, boom, a whole bunch of 5-minute candles. So now we're seeing, okay, boom, there was 2 up candles, then 2 down candles, then 1 up candle, then 2 down candles, then 2 up candles, then 1 down candle, okay? We're able to see every single detail of price movement using these candlesticks. And these candlesticks are super beneficial. And it paints a picture and it tells us a story about where price is going, where price went, and how we can expect price to react and move in the future, okay? So that's candlesticks explained. Again, let's go back here. We have the open, we have the close, we have the high, we have the low. Let me show you an example of a bearish candlestick because we didn't show any bearish ones. But a down candle, again, where did price open on this down candle? Right here. Why do we know that price opened right here? Because it closed down, right? So we know if it closed down, if it closed bearish, the open is going to be above the close. So it opened at this price at $93,811. At some point in time during these 5 minutes, it got up to the price of $94,087. At some point in time during those 5 minutes, it got as low as $93,476. And then at some point in time during those 5 minutes, price closed at $93,514. And then what happened after that? Once price closes, another candle opens, and this goes on forever and ever and ever and ever. And we can scale back to like 15 minutes. Now, boom, price action is being demonstrated in 15-minute candles. And I know this is super overwhelming. You're like, what time frame do I look at? What am I even doing on this? What's the difference between 1 day's worth of price action and 1 minute's worth of price action? All of that is going to be explained. Don't worry. Again, my goal is to take you guys from literally knowing nothing about trading to giving you guys the highest leverage skill in the world. And this is just the start. And I know this is overwhelming right now. If you guys need to go back and rewatch that like mini candlestick explained portion, you guys can go ahead, feel free. Okay. But we are now going to be moving forward. Okay. So that was like candlesticks and time frames explained. Okay. So again, these time frames are essentially used to be able to show how long and what time frame we want the candles to be split up in to see what price has done. So again, if we want to see on a 15-minute, so that means we want to see candlesticks that open and close and show us price data from every 15 minutes, we would click on the 15-minute time frame. So again, this shows us 15 minutes worth of price movement within each candlestick. If we want to see just 1 day's worth of price movement within each candlestick, we would go to the daily. If we want to see just 1 week's worth of price movement, we would click on the weekly. If we want to see 1 month's worth of price movement, and obviously, as we move higher and higher throughout the time frames, the candles get bigger and bigger because, right, the price fluctuation across higher time frames is going to be a lot larger. And then as we shrink down to maybe the 1 minute time frame, the price fluctuations are a lot smaller because 1 minute can only do so much in terms of price, right? So that's time frames and candlesticks explained. I don't want you guys to be feeling overwhelmed right now. I know this is a whole bunch of information. I know when I was at your point in time, I was super freaking overwhelmed with all of the information that was being thrown at me. Just take it one bit at a time. I hope you guys are taking notes during this, because if you guys are, that's huge. Like the whole setting up the software and everything, like that's easy. That's just like a step-by-step, but this is actually like digesting the information. We got to give our body, our brains time to digest this information, fully understand it, and then once we fully understand it, we can move on to the next concept. So again, I don't want to rush you guys through this. This is a really long video, and you guys are going to, if you guys just speed run throughout all this whole video, you probably won't be able to digest all this information. So like pause this video, rewatch that candlestick, that time frame explained, okay, understand it, and then we can move on to the next subject. Cool? Cool. The next thing that we're going to get into is the day trading session. So like I told you guys at the start of this video, if you guys are in the UK, if you guys are in down under in Australia, or if you guys are in the United States, if you guys are in Africa, if you guys are in Egypt, if you guys are in Asia, whatever, there is a time to trade for every single one of you guys. And that's one of the beauties of day trading, is there are 3 sessions. Okay. So I'm going to pull up a chart. There's going to be 4 sessions on there. There's technically Australian session, but it's pretty much Asian session. Okay. But there's 3 sessions. There's Asian session, or Asian and Australian session, but everyone just calls it Asian session, London session, and New York session. And those 3 sessions essentially encapsulate the full 24 hours of the market. Okay, so from the day start to the day end, those 3 sessions encapsulate the entire 24 hours of a day. New York session is only open for however, like a couple hours throughout the day. London session is only open for a couple hours throughout the day, and Asian session is only open for a couple hours throughout the day. I'm going to explain the pros and cons to trading each session, what is going to be beneficial for you guys as traders depending on your time zone, and what is going to be beneficial, what pairs you guys might want to trade during each session. And so again, like if you guys decide like, okay, for your time zone and the times that you are able to trade, it's going to be London session. There's going to be certain pairs that move better, that are going to give you guys better setups during London session than let's say New York session. If you guys say, okay, I want to trade during New York session, there are going to be pairs, indexes, commodities that just move better during New York session compared to other pairs that might not move at all during New York session. So I'm going to bring up a very useful calendar. This is on Baby Pips. It's essentially just shows us the overall session time zone. So right now it's Sunday and we can see the markets are closed for the weekend, but we can still just look. So I set my time zone to Eastern time. That's how I have my charts set. So my charts are set to Eastern time. Down here, I see everything in Eastern time. We can see that down here, let me point to it right there. Okay, you can see the date and then the time. Okay, so where my hand is hovering over right now, boom, it's 15:50 Eastern time, Sunday, the 2nd of March, 2025. Okay, and then we can also, like, we can go back in time all the way back here. So this was Friday, February 28th. Like, that's all the way down here. This candlestick was whatever, Friday, 28th, February of 2025 at 3:35 a.m. Eastern time. Okay, so let's go back here and let's see and understand the session opens and closes. So Asian session opens at 7 p.m. Eastern time. Okay, there is a small little gap from when New York closes. New York closes at 5 p.m. Eastern time, and then Asian session opens at 7 p.m. Eastern time. Okay, so you guys might as well write this down. Asian session opens at 7 p.m. Eastern time, and then it closes at 4 a.m. Eastern time, okay? London session opens at 3 a.m. Eastern time, and it closes at 12 p.m. Eastern time. New York session opens at 8 a.m. Eastern time and closes at 5 p.m. Eastern time. Now, again, each one of these sessions is going to have their own pros and cons, so I'm going to get into their pros and cons right now. Nice thing about this website here is we can see, okay, like we can see the trading volume and volatility on depending on what session you're going to be trading in. Now we can see when we get over here towards Asian session, it's pretty low volume and volatility. So I don't want to tell you guys what you can and can't do, but I'm telling you, Asian session price does not move well at all. And it takes forever to move. And it's just because that session, there's little to no volume. So I typically say never trade during Asian session. That's just my rule of thumb. Never, ever. I don't care if you're trading an Asian pair. Like if you're trading the USD JPY, market does not move well during Asian session. The only two sessions that I would consider trading would be London session and New York session. So London session opens at 3 a.m. Eastern time. So is that useful for me? No, because I'm not willing to wake up in the middle of the night at 3 a.m. Eastern time to trade London session. Okay, London session, we can see trading volume is usually high during this time of day. All throughout London session, the trading volume is high. So that's awesome. Most of the time during London session, the best pairs to trade are literally all foreign exchange pairs and commodities. So that could be gold, that can be GBP USD, that can be Euro USD, that can even be some off pairs like GBP JPY. I used to love trading that. I actually used to trade London session back in the day, like I was telling you guys about. I would trade GBP JPY, so the pound against the yen, during London session because it worked for me in my time zone. So again, you just have to find what session open and what session you want to be trading in. But this is pretty much like setting your work hours. So again, if you're like, oh, I'm always busy during this time, but TJR likes trading during this time, it's like, no, we're not doing that. You get to set your own hours within trading. So figure out what session you are going to be trading, and those are your work hours for this. Okay, so London session opens at 3 a.m. and then New York session opens at 8 a.m. So for me, New York session is obviously way more optimal than 8 a.m. is obviously way more optimal than 3 a.m. And luckily for me, like during New York session, that's typically when there's the most amount of volume throughout the day, which is great for me because it's boom, the start of my morning. I wake up and I start trading. So again, figure out what time zone you're in, what session is going to be more favorable for you to trade in. So during New York session, foreign exchange markets, they move well too. I would like to say that during London session, the Forex market moves a little bit better than New York session. So if you say, I want to trade New York session, I would recommend you trade indexes, which is what I trade. So that's going to be trading the NASDAQ, that's going to be trading the S&P 500, or just really any of those US equities, okay? But if you guys say, I want my trading hours to be during London session, cool, you guys should probably trade commodities or Forex, okay? So really any Forex pairs, they move really well during London session, and commodities. Something I want you guys to keep in mind, indexes, if you guys want to trade indexes, they do not move well at all during London session. So again, if you want to trade US indexes, because they are US indexes, they only operate on New York market open. So on like a futures broker where you're only able to trade US equities, you won't be able to trade those pairs once the US market closes. On like a CFD we're getting too deep into it, but regardless, if you want to trade like the S&P 500 and NASDAQ, you can only trade it during New York session. Any other session, first of all, either your broker won't let you trade it, or it's just not a good idea at all because there's no US money being put into the markets, and the only way for price to move in index is when US money is being put into the markets, okay? So figure out what session is good for you, and then from there, we're going to hopefully explain like, how can we read these charts? On top of that, what charts do we want to be looking at? Because we don't want to be looking at a billion different charts, okay? I know I have a super long list right here, but I'm not trading every single one of these, okay? Like at all. The only ones that I'm trading are these two, the S&P 500 and NASDAQ. I'm only looking at 2 charts on a daily basis, and I'm able to make a bunch of money. So what makes you think that you have to be looking at 30 different, and trust me, I have been there in your situation before. I have been in your situation and I've added like 30 different Forex pairs, commodities, cryptos, and indexes, and I've been looking at every single one of them at one time. Trust me, do not do that. I'm trying to save you from mistakes that I made when I first started. That's what this whole video is about, to save you guys from mistakes that I made when I first started, and hopefully put you guys on the right track to being a profitable day trader. And I'm telling you right now, make a new watch list and only make it with one single pair that you want to look at. So if you say, I want to trade during London session, awesome. Trade during London session and trade like the pound against the US dollar. Boom. That's it. Just one. Let's say you want to trade during New York session. Awesome. Trade NASDAQ only. Boom. That's your one. Okay. And you're probably saying, well, then how come you look at 2? How come you look at 2, huh? Well, because I'm better at this shit than you, and I've been doing it for 7 years, Timmy. When you can get that type of experience, then you can start talking, okay, buddy? I'm just kidding, but like I'm serious at the same time. All right. So once we've figured out what we want to trade, again, let me go over some of the Forex pairs for you guys really quick. So just so you guys can get a good feel. Euro USD. Super good starter pair. It moves rather slow, but that's good at the start when you guys are just learning this. So Euro USD, super good starter pair. GBP USD, pound against the US dollar. Another good starter pair. If you want to get a little bit frisky, pound against the yen. It's a little bit faster moving. It's a little bit more volatile, but it's also a good Forex pair. So again, this is if you're trading London session. Another fun one is gold. Okay, gold is a commodity and is also a good pair to trade. It's a little bit more volatile. It moves quickly, Sometimes it's a little bit harder to read, and sometimes there's more fake outs than others. And again, we're going to get into understanding the charts and why they move and the fake outs and all of this and all of that as we go on in this video. But I just want to give you guys some options for like certain pairs to look at. So Euro USD is good, GBP USD is good, GBP JPY, we start getting a little bit faster, a little bit more volatile. Gold, we're definitely getting faster, we're definitely getting more volatile. And then if you want to trade during New York session, I would look at either the S&P 500 or NASDAQ, okay? Now that we've established what hours we're going to be trading and what we are going to be trading, and now that we know candlesticks, now that we know time frames, I think we can actually start getting into understanding why and how the chart moves and how we're actually able to capitalize and make money on these chart movements. Cool? All right, so now we're going to be getting into the bare basics, the absolute fundamentals when it comes to understanding price action and price movements within the day trading markets and just within the markets themselves. So I know a lot of you guys, when I was probably going over the candlesticks, you were like, well, how am I supposed to, like, yes, this is a down candle, this is a down candle, this is an up candle, but how am I supposed to figure out where price is going to go? Don't worry, we are going to get to that. And after all of these things that I teach you guys will be very sufficient in understanding where price wants to go. Okay, it will take some time for you guys to get to that sufficiency level, but just know I'm going to give you guys all the tools necessary in order for you guys to succeed, because that's just the type of guy I am, if I'm just being honest. So the first thing that we need to know how to identify is highs and lows within the market. So you're probably saying, well, I don't even know where to start on that. Well, I'll keep it simple for you guys, okay? A high is a 2 candlestick pattern, okay? So you know those blue candles that are on my chart? It's a move up, a blue candle, and then followed by a black candle. And all you guys are going to do is you're going to look at both of those 2 candles and you're going to find the tallest point or the highest wick of those 2 candles, and that's a high. I know you're probably saying, TJR, how is this going to be beneficial for me in the long run? Trust me, it will, because it's one of the most important concepts. I know this seems super elementary, but it is one of the most important concepts that you are going to learn. So understanding this now is going to benefit you huge later. Next, a low, it's the exact opposite, okay? A move down followed by a move up, okay? And then you take the lowest point of those 2 candles. So again, a high is a move up, then a move down. So a blue candle, then a black candle. Let's do a little test. Is a high a move up, then a move up? No, idiot, it is not. A high is a move up, then a move down. Is a low a move down, then a move down? You'd be surprised. I know you're probably saying, well, yeah, obviously it's not. You would be surprised. That's all I'm going to say. It's a move down, then a move up in the lowest point of those 2 candles. Cool, let's go into the chart and work on identifying them. So, where are the highs? Oh yeah, see, now it gets a little bit scarier. Now that we're looking at all of this mumbo jumbo, it gets a little bit scarier. So what we're gonna do is we're literally just going to walk through this and we're just going to label highs and lows. What's a low? A move down, then a move up. So where do we have lows? Well, this is a move down, then this is a move up. Cool. Where's the lowest point of those 2 candles? Right here. Boom, that's a low. Where's a high? Well, it's a move up, then a move down, right? Move up, move down. Awesome. The highest point of those 2 candles. This is a high. Next one. Boom. Move up, then a move down. Highest point of those 2 candles. This is also a high. Move down, then a move up. This is a low. I have a question for you guys. This candlestick wick right here, what is this? This is a tricky one. This candlestick wick right here, what is it?
If you said hi, I'm literally going to gargle your ballsack with my tongue swirling around your pubic hair and then chomp down on it.
That is not a high. A high is a move up, then a move down. So where's the high? Move up, then a move down, the highest point of those 2 candles. Move down, then a move up, the lowest point of those 2 candles. Boom. Are we getting the feel? Are we getting into... Okay, are we getting into the flow of things now? Are we or are we not? Was that just me? Move down, then a move up. Boom. Low. Move up, then a move down. Boom. High. Okay, now Let me show you a better example of what's not a high and what's not a low, because again, some people they be on that dumb shit. Right here, we have a low, right? Where is it? You, Timmy? Where is the low, Timmy?
Well, it's at the lowest point of those candlestick wicks.
Ah, clap it up for Timmy. He got it right. Timmy, you little
retard. Don't make me spank you on the bottom of your ass with a full stack of books.
That is not a fucking low. Where's the low? This is black then black. That's not an interracial marriage. We need a black and a blue, or a black and a white, maybe. Light skin type shit. Okay, we need black then blue. Black then blue, lowest point of those two candles. Where is the low? Boom. This is the low. It's not this. Why? 1 black, 2 black, 3 black, 4 black. That's like, we're not fucking with all of that, okay? We need black then blue. That's the low. Okay, let's show a good example of the opposite. And we actually have it right here. Where is the high? Right here. Is it this because it's the highest point? No. Why? Because move down, then a move down. It's not a fucking high. Move up, then a move down. This is a high. We good? Good. Now that we understand highs and lows, guys, you guys are doing good. You guys are doing good. You guys just have like another 5 more hours and then 2 years of struggling until you turn. I'm kidding. But low key though, you guys do have some more work to put in because it's not as simple as just highs and lows. Because again, let me ask you, where do you think this chart is going? I can tell you right now where this chart is going. But I can promise you right now with the information that I've given you so far, you ain't got shit. So we keep plowing through, and I'm gonna keep plowing through for you guys. Next thing that we need to understand is trends. How does the market even move? Okay, so let's put a pin in identifying highs and lows in the market. Also, pause. Before we get into this, go on your own on TradingView, mark out 5 highs and 5 lows just to because again, there's one thing of you just watching this video and then there's another thing of you guys taking action. I need you guys consistently taking action with this video in order for you guys to fully digest this, because if you guys just sit and watch and you're like eating your popcorn, man, the TJR guy's kind of fucking funny. I think I'm gonna learn how to. No, bro. No, it's not gonna work. Okay, so what I need you guys to do, go ahead, mark out 5 highs and 5 lows. Done? Awesome. Now we can get into how does the market move? The market moves in 3 different ways. It goes up, it goes down, and then it goes sideways. So we need to be able to identify when the market is going up, when the market is going down, and be able to identify when the market's going sideways. So this is going to be introducing trends, okay, and market structure. So to keep things simple, when the market goes up, does it just go up like this forever? No. Even Bitcoin doesn't even do that. Okay? When the market goes down, does it just go down like this and down forever? No. Even meme coins don't do that. Okay? And then also consolidation or sideways movement. So when price moves up, how does it move up? Get very familiar with this terminology. It moves up in higher highs and higher lows. So remember, we're taking the pin out of the highs and lows now, and we're plopping it back in here. Highs and lows. Okay, so how do we identify it? Okay. When the market's moving up, it moves in what? Higher highs and higher lows. So if we have a high right here and then a low right here, and we're in an uptrend and market's moving up, what is market going to do? It's going to do what? Make a higher high than the previous high that it made, and it's going to make a higher low than the previous low that it made. And then it's going to make a higher high than the previous high that it made, and then it's going to make a higher low than the previous low that it made. And then it's just going to keep going like this. Cool? So before we show downtrends, let's show examples of this. We've had pretty brutal price action the past couple weeks and months, so I want to find a good example of this. This is kind of like the start of a good example here. Okay, where's our low? Right here. Where's our high? Right here. Okay, high, low. Price pushes past this high, then does what? We have a higher high, and then we have a higher low. And then what happens? We have a higher high, move up, then a move down. Then we have a higher low, move down, then a move up. Then we have a higher high, move up, then a move down. Then we have a higher low, move down, then a move up. All the way until, boom, structure gets broken on this move down. So, uptrends, how do they move? And higher highs and higher lows. Flow state, baby. Boom. So when we're making higher highs and higher lows, what are we expecting the market to do? To continue the trend. The trend is your friend. Get very familiar with that as well. The trend is your friend in this market. Because if the market is trending up, what are you probably going to want to do? Press buy. If the market's trending down, what are you going to probably want to do? Press sell. But before you guys log into your brokerage and put $1,000 billion on what I just taught you, we need to learn way more, because it's a lot more than just higher highs and higher lows and blah, 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 and we're going to be billionaires. Okay? It's a lot more than that. Now, downtrend, what is it? It's the exact opposite. So when the market is going down, what is it doing? It's making lower highs and lower lows. So it follows that same flow state movement and follows that same trend where we have a high, a low, lower high, lower 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 low, and boom. That's how a downtrend is formed. Plain and simple. Let's go ahead and let's identify it on the market. Because on the S&P 500, it's kind of like an up-only type of index, so it's kind of hard to find downtrends. There's like mini downtrends here. This is fine. Ready? This mini downtrend within the uptrend is fine. We have a high right here, right? We have a low. We have a high right here. We have a low. We have a high right here, and then we have a low. High, low, lower high, lower low, lower high, lower low, before the trend reverses. And I'm going to teach you guys how to, one, be able to identify these reversals, two, be able to trade these reversals, and three, be ahead of the game so that you guys don't get caught up and lose trades on these reversals when you're trying to trade within the trend. Got it? Got it. But for the time being, I want you guys to pause this video, go to TradingView, boom, go ahead and mark out, just go and identify, and it doesn't matter what time frame, okay? You can be on the weekly, the daily, whatever. That's something else that you guys need to know and understand. Every single thing that I'm teaching you guys on here is applicable to every single time frame. So that's the cool thing about the market. This is on the weekly time frame, right? Each one of these candles is a week's worth of price action. Not only are there highs, lows, lower highs, and lower lows on the weekly time frame, but when we go down to the 5-minute time frame, is this structure the same for identifying downtrends and uptrends? Yes, it's the exact same. Let's find an example here. This is a good example. Look. High, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower low, until what? The trend reverses. So that's the cool thing about these trends, and that's the cool thing about all of these tools and strategies that I'm going to show you guys in this video. They are applicable to every single time frame. These trends happen on every single time frame. The way that the market moves, it moves the same on every single time frame. So once you know how to trade, that's why I'm telling you trading is literally the highest leverage skill in the world, bro. Because once you learn how to day trade, you are able to predict price and market movements on every scale, on the weekly level, on the monthly level. You'll know where price is going to go within the next 5 minutes. Like, it's so powerful, the skill of day trading. And that's why I'm so passionate about this shit. Because I know what it did for my life and I know what it can do for yours. And that's why I'm making this video for you guys. So, continuing, where we know what to look for when the market's moving up. we now know what to look for when the market's moving down. What happens when the market's moving sideways? That's called consolidation. And typically, the market will just be looking like this. Okay, it won't have any sort of trend. It won't have any sort of direction. There's no higher highs. There's no higher lows. It's just, it's making like random highs, lows, whatever. And it's just moving sideways. So, perfect example of that is literally what we're in right now on the daily time frame. So if we just look at this, most of the time I show and demonstrate consolidation just by a big rectangle. Why? Because this isn't a trending market. This market is moving sideways. So we can see we have a high, then a low, then a lower high, then a higher low, then a lower high, but then a lower low, but then a lower high, and then a higher low, and then a higher high, and then a higher low, but oh wait, now that's a lower low, and then a higher low, and then a higher high, and then a lower low. See, this is not a trending market. This is a sideways market. But luckily there are ways to trade this, and I'm going to teach you guys how to trade it. Again, now that you guys know how to identify consolidation, go ahead and do that. And again, just like moving up and moving down, this is applicable on every single time frame. So this is literally the past couple months on this, because each candlestick represents a day in the market. Right now, because I'm on the daily time frame, bro, like we have been in this little consolidation range for the past couple months. But we can scale down to lower time frames, and we can find consolidation there as well. So like, look right here, look at this. The market is just freaking moving sideways. High, low, blah, 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 blah. It just looks disgusting until the market finally breaks out, and then what happens? It starts trending down. Makes a high, then a low, lower high, lower low, lower high, lower low. Okay, so we need to be able to identify not only downtrends and uptrends, but also consolidation. Cool. Once we have that, we are ready to move on to the next subject. So now that we know how to identify trends, now that we know how to identify highs and lows, we're on to our very first concept and our very first confluence that is going to be extremely beneficial for you guys in trading, which is called break of structure. So I'm going to break down every single one. So first of all, I know I'm using big words, but at the end of the day, I like I told you guys before, I'm like actually on the spectrum. So I'm just like a nerd with the trading shit. So I prefer to call things their correct names. But confluence is pretty much just like, it's like a reasoning to get into a trade, or like it's a reasoning for why price moves. So most of the time you say like, oh yeah, what were your confluences to enter into a trade? Like, what were the reasons for why you entered into a trade? And you say like, oh, there was a break of structure and there was an imbalance of price here and price came in and it filled it, blah, 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 blah. Bankroll. So we are going to cover break of structure first. This is a confluence, okay, that is very useful for us. And it is kind of one of the first steps of understanding price movements. So break of structure, you often see people abbreviated as just BOS, okay, Boss Man D-Lo. All right, so what is break of structure? So you guys just learned about trends, right? You guys know what a trend is. Break of structure is essentially when the structure, the trend breaks, okay? So when the current trend gets disrespected, that's all it is. When the current trend gets disrespected. Now, how do we identify it? I'm going to put this as simple as possible. Break of structure is one of the easiest confluences to understand. So hopefully you guys get it. And also guys, get fucking excited. This is like our first like real deal, real spiel. Like get fucking excited. This is our first thing that we can actually like start fucking applying and getting like my eyes are lighting up. I feel like I'm on fucking Molly and cocaine right now. And I'm just like, I'm just so fired up to teach you guys this shit. So please be as fired up as me and take some fucking notes. Break of structure. It's when the current trend gets disrespected. Okay. If we're in an uptrend, higher highs and higher lows, how would we hypothetically break this trend? How would we disrespect this trend? Well, we would just quite simply stop making higher highs and higher lows, right? So in order for us to no longer have higher highs and higher lows, what has to happen? We have to make a lower low, right? And a potential lower high. Now, a break of structure to the downside, which is what I just marked out, is when we are in an uptrend and the most recent low. Make sure you take notes of this because this is important. As much as I love messing around, okay? I want you guys to be successful. A break of structure to the downtrend, to the downside, is when we are in an uptrend and the most recent low, emphasis on most recent, when the most recent low that was created gets closed underneath by a candle. Okay, and we are going to show examples of this, but a break of structure to the downside is when we are in an uptrend currently, making higher highs and higher lows, and we get a candle closure. So in our case, and on my chart, it would have to be a big, girthy, wide, black candle, you thought, candle that closes underneath the low, okay? And that's how we can identify a break of structure to the downside. Now, break of structure to the upside, what is it? Well, it's when we are in a downtrend, so making lower lows and lower highs. Now, how do we break a downtrend? Simple. We make a higher high instead of another lower high. Boom, the trend is broken off of this. How do we officially break structure on this? When we get a big, wide, long, lanky, in my case, blue candlestick closure over what? The most recent high. So how do we break structure to the upside? When we are in a downtrend, we get a candle closure above the most recent high, okay? The most recent high that was made within the trend, we get a candle closure above it. That's how we identify break of structure. So now that you guys know how to identify break of structure, at least on my Picasso drawings and on lines, let's actually get into the difficult part, which is actually identifying it on the chart. So there are two things that I want you guys to pay attention to when we go onto the chart. The first thing that you guys need to do is, boom, immediately identify the current trend that we are in. So we already taught you guys how to do that. Right? We're just looking for higher highs and higher lows. Okay, cool. Once we do that, what are we going to be looking for? We're going to be looking for breaks of structure. Okay, so see when that current trend that we are in gets disrespected. Okay, so those are the two things that I want you guys to look out for when we get into this. Okay, tell me what you see. Yeah, it's a lot hard. It's a lot harder when we pull up the charts and we got candlestick wicks everywhere and we don't know what price is doing. Don't worry, I'm going to break down pretty much all of this for you. Okay, so this is actually a really good example that we have right here. We'll just go ahead and start here. We'll start within this area, okay? We have a low, then we have a high. Move up, then a move down, the highest point of those two candles. Following that, what happens? This candle closes above this high. Cool. So prior to this, we were in a downtrend. Why? High, low, lower high, lower low, lower high, lower low. Okay. And then after that lower high and lower low got made, what did we do? We broke structure to the upside. How? Because we closed above the most recent high that was made in the downtrend. I know it's confusing, but stay with me now. Now what trend are we in? After we break structure on this candle, because we closed above the most recent high, something I want you guys to also notice. Look, so we have a high right here, right? And then a new high gets formed right here. Does this high get broken above when this comes up and gets made? No. So what do we have to classify as the new high now? Right here. Whenever we're waiting for a break of structure to the upside, we're just constantly monitoring highs. Whenever we're waiting for a break of structure to the downside, what are we doing? We're just constantly monitoring the new lows that get made. So in this case, we're looking for a break of structure to the upside. Why? Because we're in a current downtrend. And how do we look and wait for a break of structure to the upside? We just monitor the most recent highs that get made. So this was the most recent high that got made, and then boom, we break structure. So now we're in an uptrend. And we can see that. Why? We have a high. This low is a higher low compared to this one. And then boom, we go up and we make a higher high. Now, this is where it gets tricky, and this is where it's going to get very confusing for some of you guys. See this candlestick right here? We have a low right here and a low right here, but this low, this move down, then a move up, goes underneath both of these lows. Is this a break of structure? No. And I know that is very hard for your brain to contemplate right now because you're like, wait, but there was a high and then this went underneath two lows. It made a lower low. Yes, you're right. It did make a lower low, but how do we identify a break of structure? And in this case, right now that we're in an uptrend, we're looking for breaks of structure to the downside. What do we need? We need this low, because this is the most recent low. We actually don't care about this one. This is the most recent low. What do we need to happen to this low? We need this to be a full candlestick. We need this to be a full candlestick. We need a candle closure. So look, see the difference between this high? What did this candle do to it? It closed above it. The candle close is above this high. Did this candle right here break structure? No, because it was only a wick above the high. But this candle, it closed above. So when we look at this right here, this candlestick, where's the most recent low? What is our current trend? We're currently in an uptrend. For us to break structure to the downside, we would need this candle closure to be underneath this low. So for that reason, we are still in an uptrend. And price respects that and goes and makes a new higher high. And then look what happens again. Now, this is the most recent low. Even though we technically did make a lower low, we are still in an uptrend because we haven't broken structure yet. And look what price does again. Price goes down. Do we get a closure underneath the most recent low within the, we are still in an uptrend because we haven't broken structure to the downside yet. No, we do not break structure to the downside. And then where does price go? It rips up. I know that was very confusing, but I needed to show you guys those examples of no breaks of structure. So again, if we're in an uptrend and this is our most recent low and we see a candlestick wick go underneath this most recent low, is that a break of structure? No, it is not. Okay, it is not a break of structure to the downside. The only time that it's a break of structure to the downside is when we get a candle closure underneath the most recent low. So let's show an example of break of structure to the downside now. Within this, we are in an uptrend. Why and how do we know that? Well, it's fucking going up, okay? I mean, I could mark out the highs and lows if we needed to. Look, move up, then a move down, high. Move down, then move up, low. Higher high, higher low, higher high. Okay, cool. This is actually another good example of this, actually. Look, we can see this candlestick, boom. It actually goes underneath this low, but it doesn't close underneath it. And then what happens? Price maintains that uptrend. It actually goes up to create a higher high. So now, where's the most recent low that we're looking for in this uptrend to get broken? This is the most recent low. Where do we break structure? I want you to pause this video, look at it. Where do we end up breaking structure to the downside? What candlestick? We break structure to the downside on this candle right here. Why? Because look at the candle close. This candle closes underneath the most recent low that was made within an uptrend. So now what are we in? After we get a candle closure underneath this low, we are in a downtrend. So now we have a high, now we have a lower low, now we have a lower high. Now we are literally forming, as we speak, a lower low. Now that you guys know how to identify breaks of structure, this isn't the magic pill. This is not going to turn you into a profitable trader. But now that we know how to identify trends, and now that we know how to identify highs and lows, and now that we know how to identify breaks of structure, we are in an insanely good spot. And get fucking ready, because literally in like the next couple minutes, you guys are going to learn shit that's going to blow your fucking mind. And honestly, it blew my mind when I learned about it or when I discovered it on the charts. And I'm going to help you guys I'm going to try and blow you guys. I want to blow you guys and blow your guys' minds So let's go do that. Okay. I did that. I blew you guys. Get it? I told you I was gonna. Okay. All right, let's learn about liquidity. This is by far the most important concept of this is the GOAT of concepts, the greatest of all time of concepts. And then the concept following this, this is like Michael Jordan versus LeBron debate. Liquidity is LeBron, and then fair value gaps and imbalances is like Michael Jordan. Why? Because liquidity is better than fair value gaps and imbalances. LeBron is better than Jordan. But before we get all the old heads riled up, MJ was better. Let me just teach you guys how to trade this shit first. Okay, so what even is liquidity? Liquidity is pending orders, or okay, we'll do this for the retards. Just resting orders above highs and below lows. That's all it is. That's all liquidity is. Liquidity is resting orders above highs and below lows. And you're probably thinking, hey, I know what a high and low is. That's right, Timmy. You do know what a high and low is. So you know where liquidity is. Liquidity is above highs and below lows. Consistently, without a doubt, every single time, liquidity is above highs and below lows. So if there's a high in the market, what is there above it? Liquidity. If there's a low in the market, what's there below it? Liquidity. More importantly, resting orders. Now, when I explain liquidity, I like to explain it like this. We as retail traders, so first of all, if you guys don't know how the market moves, okay, the market moves off of market makers, not us. So we are retail traders. We are making the tiniest, smallest transactions compared to funds and the people that are actually moving the market, okay? So keep that in mind, okay? So the people that are moving the market moves based off of algorithms, and algorithms, in order for them to fulfill orders, they need orders to go in the other direction. Okay, so just like how I explained in that little ecom class example of buying the share of Apple stock, right? If I want to buy a share of the S&P 500, or if I want to buy a share of the NASDAQ, somebody has to be willing to sell it to me. This is equally true at scale. So let's say I want to buy $1 billion worth of S&P 500, or $1 billion worth of S&P shares. Let's say I want to buy $1 billion worth of NASDAQ shares. Okay, somebody has to be willing to sell that to me. So again, how do these transactions take place? Well, I know this is kind of going to be counteractive to what I just taught you about uptrends and downtrends, but just bear with me for now. Just like how I taught you guys that when we're in an uptrend, we make higher highs and higher lows, okay? Market makers know that. In a downtrend, we make lower lows and lower highs. So when we're in a downtrend and we move past a low, what's going to be expected? We're expected to go lower, right? And then what's going to happen when we push past this low? Well, people are going to sell. People are going to get into short positions underneath this low, right? Okay, and market's going to move lower, right? Because that's what they think is going to happen. In an uptrend, when we push past a high in an uptrend, what do people often do? They often place a buy position. Why? Because they think, hey, the market's going to move higher. Why? Because we're in an uptrend. When market moves past a high, what do people do above the high? They press buy. There's buy orders above these highs. Okay, because what are they expecting price to do? They're expecting price to go higher. Now, this is true to an extent until the market wants to change directions. How can the market have the ability to change directions? What gives it the ability to change directions? Through liquidity. And what is liquidity? Resting orders above highs and lows. Something else that we need to understand about uptrends and downtrends is when we're in an uptrend, making higher highs and higher lows, we have to understand when we're making this move down, even though we're in an uptrend, not every single person in the market sees this as an uptrend. I know this might get confusing, but you got to bear with me. Not everybody sees this as an uptrend. So they see this move down, and what are some people doing? They are selling. So they're entering into short positions here. And where are they putting their stop loss? They're putting their stop loss above these highs. So when they enter into a sell position right here, they essentially are committing to buying back their position at a higher price up here if price pushes up there. So there are pending buy orders up here. Not only that, but when this high gets pushed above, the people who thought it was an uptrend in the first place are pressing buy. Why? Because they say, hey, we're in an uptrend. I think price is going to go higher. So what lies above these highs here? A massive amount of buy orders. Now, same thing in a downtrend. In a downtrend, what lies underneath these lows? Well, for the people that think and know that it's a downtrend, when this low gets pushed past, what are they going to be doing? They're going to be pressing sell. Okay, they're going to be pressing sell because they're like, hey, we're in a downtrend. Price is going to go lower. On top of that, the people who saw this mini retracement up, the people who saw this move up to make the lower high, they might have thought, hey, we're going to go into an uptrend. So if they bought on this move up, where is their stop loss going to be? Where are they going to have to sell their shares at a lower price to lose their trade? Underneath these lows. So not only do we have people who are buying in the market down here getting stopped out and having to sell their buy positions at a lower price underneath these lows, but we also have people who are trying to sell the market once these lows get pushed underneath. So we have a ton of sell orders underneath lows within the market. So we have a ton of buy orders above highs, and we have a ton of sell orders underneath lows. Now let's think back to that example that I was just telling you guys about. What happens when a big player or the algorithm needs to fill a massive amount of orders to change the current direction or to change the trend of the current market? It needs orders to fill. Where is it going to find those orders? Above highs and below lows, because there are buy orders above highs and there's sell orders below lows. So you're probably saying, okay, so when we go underneath a low, what do? Do we press sell? No. Or I mean, it's not that simple. It's not just we push past a low and you press a button. If it were that easy, everybody would be rich. This is just a step in the right direction. But when we push underneath lows, what does the market have the opportunity? Emphasis on the word opportunity, because it doesn't have to. It can continue this downtrend, right? But every time it moves underneath one of these lows, it does have the opportunity to what? Sweep this liquidity, use these sell orders to do what? Fill their massive amount of buy orders to change the direction of the market. And that is what liquidity is, and that is what a liquidity sweep is. A liquidity sweep, which is by far the most important confluence that I'm going to teach you, is when the market manipulates a high or a low within the current trend to fill their massive amounts of orders to change the direction of the trend, to cause a reversal. So in this case, we're in an uptrend. We move past a high. The people that thought it was an uptrend, what are they doing? They're pressing buy. The people who thought it was going to go into a downtrend, who had a sell position in, what happens to them? They get stopped out. They have to buy back their sell positions at a higher price, causing them to lose money. But then what does that give the market the ability to do? Fill their sell positions to cause price to actually go down. Does that make sense? Now you're probably saying, well, how do I identify? Well, how do I know what high and what low is important and which one price is going to reverse off of? Don't worry, I'm going to teach you that. But the first thing that I want you to do is to think that I'm not a crazy lunatic and show you guys this on the charts. I'll show you a really awesome and hilarious liquidity sweep, or at least it's funny to me. Remember that super scary, horrible sickness that was going around in the year 2020? Was it really a super dangerous, super scary illness? Or was it just a liquidity sweep and a catalyst to be able to fill all the rich people's orders to make them 10 times richer than they already are? What did price do? And keep in mind, there's liquidity on every single time frame. There are highs and lows on every single time frame. These confluences show up on every single time frame. What did price do during the 2 months that everybody was freaking out? It pushed underneath 1, 2, and 3 lows. And what did that give the market makers and the richest people in the world the opportunity to do? To press buy and to fill their orders and to cause the market to go up. So not only can we see that on a high time frame with a news catalyst, but we can also see it on low time frames. Actually, we see it on a daily basis. Look at this right here. This was an example that I just showed you guys for examples of not breaks of structure. We see big move down. We push underneath one low. We push underneath two lows. And then following that, what does market do? Boom, it rips up. We can see this on even lower time frames. Market right here, it's in a downtrend. Imagine if you are at this current price. You see a chart that looks like this. I know it seems easy in hindsight, but it is difficult when you get into the actual markets. We see price that looks like this. Just realistically, any normal person looking at this chart is probably like, wow, this looks like shit. It's going to go lower. It's exactly what they want you to think. Let's watch this candle form. Boom. We come down, we take out this low, we get everybody to press sell. We get everybody who bought on this mini move up to exit their buy positions. And then what does that give the market makers and the rich people the opportunity to do? Make a shit ton of money. And causes the market to go up. This happens on the 1 minute time frame. It happens on the 15-minute time frame. It happens on the 5-minute time frame. It happens on every single time frame. Liquidity sweeps are what move the market. Liquidity and imbalances is what moves the market. So this is a very, very important concept that I want to teach you guys. I mean, matter of fact, we actually saw a huge high time frame liquidity sweep today. Look at this. High time frame low. Another high time frame low. What did we just do today? We just swept out this low, swept out this low, and we swept out this low. And now look at what price is doing. This is the magic pill. This is what is going to help you turn profitable. But I'm telling you right now, it is not as easy as just saying, oh, look, there's a high, I'm going to press sell. Why? Because we have to think back to those trends, right? We already showed that the market moves in higher highs and higher lows. So if we press sell at every single high and press buy at after every single low that gets pushed past, we are going to be losing and we're going to be a horrible trader. So now that we know how, first thing that I want you guys to do, pause this video and go onto your trading view and just identify a time where market has moved underneath a low and then changed direction. Just identify 5 liquidity sweeps in each direction. So at least you guys know that I'm not crazy and you guys can see and identify these things. So you guys know that it's real. But it's not as easy as just pressing buy when we move underneath a low and pressing sell when we move above a high. We're going to get way more in depth about understanding what highs are important, what lows are important, and what times to be looking for these highs and lows are important. Okay, but the first thing that we just need to do is just understand that, hey, this thing works and it's real and it's how the market fills its orders to move in the direction that it wants to go. Call me crazy, but I just showed you multiple examples. I just showed you a global, worldwide example of how the US manipulated not only you guys, but literally every single person in the entire world to be fearful to literally fill their orders. That should piss you off. That they used you. You are getting used. We are no longer going to be the ones that are getting used by the market and by the people that are rich and wealthy. We are going to start trading with them. We are going to start trading like them. We are going to start trading with them. And eventually, we will become one of them. Hopefully not as rude and as much of a dick. But again, these liquidity sweeps, they are what move the market. I mean, again, we can see literally on a weekly time frame, boom, huge leg down. What do? We take out this low. Then following that, what does the market do? It moves up. It's not a lie. It is real, and it is how the market moves. So now that we know how to identify liquidity, I want to put a pin in this. And now, before we put like how to put all of these things together, I know your brain is like, okay, I know what a trend is. I know what a high and low is. Like, when can I actually understand where the market's going to go? When can I understand this, Tyler? Or TJR, sorry. Well, legal name dropped. I know. Everybody already knows my name. But when can I figure out where the market's going to go? Just be patient. I want to teach you guys every single confluence first. So I taught you break of structure. I just taught you liquidity sweeps. I'm now going to teach you guys about imbalances and fair value gaps. Again, liquidity and imbalances make the market move the way that it does. Okay, after I teach you guys all of these confluences and I feel confident that you guys know these confluences and what they are and how they move the market, from there, that's when we're going to put it all together, because I find that's best. Like, if you guys are able to just like pause this video and be like, bet, I just want to know and identify liquidity sweeps and where they are in the market. Go, fuck it. Like, I have homework for you. Literally go on every single time frame that you have up here and try and find a liquidity sweep on every single time frame where price moves above a high and then changes direction and breaks structure to the downside. That's what I want you guys to do. Find 5 examples of when price moved above a high just to sweep liquidity and then caused a break of structure to the downside. I also want you guys to find 5 examples of when price moved underneath a low and then caused a break of structure to the upside to change direction. Because not only does that reinforce that liquidity sweeps are real, but that also helps on both confluences. Why and how are liquidity sweeps confirmed? Well, when we push underneath a low and then we break structure to the upside, it's like, well, yeah, orders were filled. We just broke structure. We just changed the fucking trend. How else would that happen with orders being filled, with liquidity being filled? So now that we understand that, let's get into imbalances. It's pretty much like the opposite of liquidity almost, but it's in the greatest of all time in terms of confluences and is huge for us to understand where we want the market to go on a daily basis. And again, I know you're like, how are we going to put this all together? Trust in me. You guys have trusted me this far. It's been like 2 hours already. We're thugging it out. I'm making this video for you guys. This is literally everything that you guys need to know. This is fucking everything. I'm telling you guys right now, this is literally fucking every single thing that you guys need to know. And y'all are chilling after this one fucking video. This one video is literally teaching you A to fucking Z how to become a profitable trader. I'm doing it all, bro. I'm doing it all, and I'm trying my best, all right? So let's get into fair value gaps now. Imbalances or fair value gaps, they're the same thing. Often abbreviated as FVGs. What are they? I know you can't use the definition in the the name in the definition, but I often do this. It's imbalanced price action that needs to be balanced out via a retrace. So imbalances / fair value gaps. I know I'm using the word in the definition, but deal with it. I'm not a grammar person. It's imbalanced price action that needs to be balanced out via a retrace. First of all, if you guys don't know what a retrace is, when we're in an uptrend, it's the down move. So the down move is called a retrace. So this is called a retrace. Why do we call it a retrace? Because when the overall trend is up, it's just retracing so it can go higher. Retracing the up move so that price can go higher. Okay? Same thing to the downside. Okay? So we have boom, retrace up, move down. Retrace, move down, retrace, extension, retrace, extension. These moves up are retraces within a downtrend. Moves up are retraces in a downtrend, moves down are retraces in an uptrend. Okay, so all that imbalances and fair value gaps are a price range that is imbalanced that needs to be balanced out via a retrace. So I try not to classify things as candlestick patterns, because I'm sure a lot of you guys have probably gone through like some other day traders thing and they're talking about head and shoulders pattern. They're talking about double top, double bottom, candlestick pattern. Look, I'm not going to say it's bullshit. I will say that when I tried to trade that way, it never fucking worked. But maybe I was the issue back then. But coincidentally, when I started trading like this, I was no longer the issue and it started working. Take that for what you will. So I'm not a believer in candlestick patterns. However, I am a believer in reading and identifying balance, imbalance, price action, where orders are lacking on the chart, where orders are resting on the chart to cause price to move the way that it does. And that's exactly what an imbalance is. And luckily for us, we can use candlestick patterns to demonstrate these. So let's just jump straight into this shit. What does an imbalance look like? What does a fair value gap look like? It's a 3 candlestick pattern. This is one candlestick. This is the second candlestick. And this is the third candlestick. Let me make this an up candle instead of a down candle. There we go. Okay, so this is an imbalance. This is imbalance price action from this candlestick wick to this candlestick wick. Why is this imbalanced price action? Why is this price action right here imbalanced? I'll tell you. So the first candlestick that was made, we opened right here. At some point in time, we had sell orders that pushed us down here. At some point in time, we had buy orders that pushed us up here. But we also had sell orders that had to come in to move price down and then have price close right here. This following candlestick, it's a big bullish candlestick. Huge move up, right? We had the highest point that it got to was up here. The lowest point that it got to was down here. Sell orders up here ended up causing price to push down. The third candlestick opened right here. At some point in time, we had buy orders move it all the way up here. Sell orders moved it down, causing it to close here. We also, at some point in time, had sell orders push price down here. So throughout all of this, I know that was a lot, sounded like a lot, but in this price range, what are we lacking? We're lacking sell orders. Why? Because if we think about the first candlestick, at some point in time, we had buy orders that push price up, and then sell orders move price down from here. So boom, sell orders stopped here. And then we see, boom, huge bullish candlestick. Then the next candle, okay, we see price open. At some point in time, price had sell orders that pushed price down to here, but the sell orders stopped here. So where is there a lack of sell orders? Right here. Within this price range, and this is how we identify bullish fair value gaps, from the top of the first candlestick's wick to the bottom of the third candlestick's wick. That is how we identify a bullish fair value gap. Should have made this green. So there's a lack of sell orders within here. When or if price comes down and retraces into this imbalanced price action, it's imbalanced because there's a lack of sell orders. So when we get the sell orders to come down to balance it out, and when we fill this gap and we get buy orders within here, what is likely going to happen? Because there's a lack of sell orders, once we hit it with some buy orders in this price range where there's a lack of sell orders, what is that going to cause price to do? Go higher. This is a bullish fair value gap. Now, let me show you an example of what a bullish fair value gap is not. Well, what happens if this candlestick's wick goes all the way down here and this candlestick wick goes up here? What happens if the candlestick wicks overlap? Well, then there's no imbalance. There's no imbalanced price action. There's no imbalanced price action. Why? Because sell orders were here. At some point in time, price moved up here and sell orders had to push price down. And also on this third candlestick, at some point in time, sell orders had to push price down to here. So these wicks overlap. So there's no bullish fair value gap within here. This, on the other hand, there's a lack of sell orders. This is a bullish fair value gap. Now, what's a bearish fair value gap? Well, also, something that I want you guys to keep in mind. There's two things that I want you guys to keep in mind. The only candlestick color that matters is the middle candlestick. So obviously, if it's a bullish fair value gap, this candlestick is going to be green, or in my case, blue. If it's a bearish fair value gap, the candlestick color is going to be red, or in my case, black. The first and the third candlestick color doesn't matter. This candlestick could be a bearish candlestick as long as these candlestick wicks don't overlap. There is imbalanced price. Another thing that I want you guys to know about fair value gaps is they are just like penises. No, I am not joking. A fair value gap is the equivalent to a penis, a male follicle, a male limb. Let me explain. Size does not matter. We as gay traders, as day traders, we do not care about the size. All that we care about is what lies within. We care about the personality. We yearn to learn more, to balance out that imbalance, regardless of the size. No matter what size it is, we want it, we need it, I need it, okay? Plain and fucking simple. A fair value gap is a dick. Literally as simple as that. So a bearish fair value gap, how do we find it? From the first candle's bottom wick to the third candle's top wick. Again, it doesn't matter if this candlestick is black, blue, Chinese, or Indian. We don't see color on the first and the third candlestick. The middle candlestick, we're racist as fuck. If it's black, it's bearish, or at least on my, if it's red, then it's bearish on your guys' chart. If it's black, it's bearish on my chart. There's no racial correlation there. I love everybody from everywhere. It's just for the example purposes. It helps us visualize this a lot better. The penis correlation, the race correlation, it's all for your own benefit. Hey, guess what? You're going to remember this now. I'm telling you this. I promise you won't remember this shit when old fucking geezer is like, yeah, when you get the imbalanced price action and then the Enigma goes up and wants to balance out the fractal and the Enigma for the power of 3 and no, we don't give a shit about that. We're talking about blacks, we're talking about whites, we're talking about Indians, we're talking about Asians, we're talking about dick, we're talking about gay, we're talking about everything. Why? Because it's what keeps us locked in. It's how we remember it. I hope you write down in your notes, a fair value gap is like a dick. Female day traders, don't get mad at me. Don't get mad at me, girls. You know it's true. Period. Period. A fair value gap just like that dick. Period. That size doesn't matter. It's just what lies it's just what lies beneath the sheets, baby. It's just what can make that shit work. It's just the motion of the ocean. It don't matter about that dick, baby. It just matter about what's inside you. Period. If you got that dog, I'm gonna take it raw. That's enough for now, okay? So a bearish fair value gap is from the first candlestick's wick down to the third candlestick's wick up. So what is there a lack of within here? There's a lack of buy orders. When price moves up into that fair value gap where there's a lack of buy orders and it balances out price action and it fills its sell orders within there, since there's a lack of buy orders, what is that going to cause price to do? Go down and continue the trend. A fair value gap and an imbalance is a confluence that I like to call a continuation confluence. Write that down. A fair value gap is a continuation confluence, okay? Fair value gaps are continuation confluences. Why? Because they continue the trend that we are currently in. Break of structure. Okay, let me just go ahead and label these really quick. I might as well make this. Reversal confluences, liquidity sweeps, confirmation confluences, break of structures, and inverse fair value gaps. We haven't got to inverse fair value gaps yet. Don't worry about it. But I just want this so you guys can screenshot it or write it down in your notes. Continuation, confluences, fair value gaps, order blocks, we're getting to those next, breaker blocks, and equilibrium. And another confirmation confluence is an SMT. And we'll get to all of these. We're going to talk about every single one of these, okay? So we already learned about liquidity sweeps. We just learned about confirmation. We just learned about fair value gaps. Now, why are liquidity sweeps reversal confluences? Because they are the signs of a of a trend reversal. Why are break of structures confirmation confluences? Because they confirm the break of structure. They confirm the break of the trend. They confirm the reversal. And you're going to see when I give you guys this strategy, we go from reversal confluence to confirmation confluence to continuation confluence to execution. We go from liquidity sweep to break of structure or inverse fair value gap or SMT down to fair value gap, order block, breaker block, or equilibrium to execution. Because it's all 3 steps of a full trend reversal. We need a sign of reversal via liquidity sweep. We need confirmation of the trend break and the new trend shift via break of structure or inverse fair value gap or SMT, which we're yet to get to. And then we need proof and actual belief in this new change of structure and in this new break of trend that we just had by showing what continuation of the trend via what fair value gaps. So just take a picture of that for now. We'll get back to that. But now I want to show you guys fair value gaps on charts. Just like liquidity sweeps, fair value gaps are on every single time frame. And this is something about fair value gaps. Going back to dicks, okay? Fair value gaps are just like dicks. You don't want to fuck every single dick. Okay, there's only some dicks that you want. Same thing with liquidity sweeps, okay? You only want to liquidate some people and you want to leave some people unliquidated. You don't know what's going on in their the junk in their trunk, okay? We don't want to get down in there. We don't know the past. We don't know their history. It's the same thing with fair value gaps and liquidity sweeps, okay? And I'm going to show and tell you guys how to identify the correct fair value gaps, how to identify the right liquidity sweeps. But right now, I just want you guys to understand that these things work. So we're going to show examples of this on the chart. And then from there, we'll put a pin in it just like we did with liquidity sweeps. Something else that I want you guys to keep in mind, fair value gaps are nothing without context. So I can go out here and I can mark out all these fair value gaps, but they don't mean shit without the right context of price. So I can mark out this is a bearish fair value gap right here. Why didn't price move down off of it? Well, because we don't have the right context to be using this right now. We had another bearish fair value gap right here. Price actually did fill this one and then it did move down off of it. Okay, it's all about the context. I can show a whole bunch of fair value gaps that, like this bearish fair value gap right here. Okay, first let's do this a little bit slower because I know I'm speed running through these, but okay, first candlesticks, bearish fair value gap. How do we mark it out? From the bottom of the first candlestick's wick to the top of the third candlestick's wick. What is it? A 3 candlestick pattern. 1, 2, 3. We just look for the gaps. The easiest way to identify it is like, oh look, there's 3 candlesticks and there's a gap between them. That must be a fair value gap. Look at this right here. Look, there's 3 candlesticks and there's a gap between them. That must be what? A fair value gap. And then you can see and just look at the candlestick color in between them. Boom, it's a bullish fair value gap. 3 candlesticks with a gap between them. Oh, that's a bullish fair value gap. 3 candlesticks with a gap between them. Oh, that's a bearish fair value gap. Very easy to identify. There's a fair value gap here. There's a fair value gap here. There's fair value gaps all over the place. Now, what I want you guys to do, pause the video, go to your chart right now, identify 5 bearish fair value gaps, identify 5 bullish fair value gaps. What I want to show you guys on top of this lesson is show you guys how they get respected. Because fair value gaps can get disrespected and they can also get respected. And this is kind of going to lead us into inverse fair value gaps right after this explanation. So this is a good one. Right here, we have a bearish fair value gap. Why is it a bearish fair value gap? Because the third candle is a move down. Okay, we have 1 candle, 2 candle, 3 candle. We take the bottom wick of the first candle to the top wick of the third candle, and we just, boom, we draw a little box on it. This fair value gap, it got filled, right? But then we got a candlestick closure above it. So what did we do to this fair value gap right here? We disrespected it. This fair value gap is no longer valid. Okay? For a fair value gap to get respected, we have to fill it without getting a candlestick closure above it, and then get a candlestick closure down. It doesn't matter if the candlestick closes down within the fair value gap. It just matters that we come in, fill it, and then the next candlestick or it doesn't have to be the direct next candlestick. It could be 1 candle up, 2 candle up, 3 candle up. As long as it doesn't close above the fair value gap, and as long as we get a candle down out of it, boom, that's it being respected. As long as it's in the right context, price should move down. Same thing on a bullish fair value gap. Let me find an example. This is a good example of a current one that's about to get disrespected as long as price close underneath it. But look, we have a bullish fair value gap right here. How do I know that? First wick, I mean, just look, right? There's a gap between the 3 candles. First wick's, or the first candle's top wick, the third candle's bottom wick. This is the gap. Price right now is currently disrespecting it. We'll know for a fact if it gets disrespected once this candle closes in 8 minutes. Again, just because price is down here like this right now doesn't mean that, okay, this fair value gap is said and done. No, it can leave, as long as price closes in here, if it leaves a long ass wick like this, that's okay. I'm fine with that. Okay, and I'll show you an example of that, of a fair value gap getting filled with a long ass wick and it's still being valid. This is a good example of this fair value gap being respected perfectly. So what is this? This is a bearish fair value gap. And again, we get 1 candle close, 2 candle close, 3, like whatever. There's a whole bunch of candle closures within this, but as long as the candle doesn't close above the fair value gap, it's still valid. And then boom, what do we get? We get a bearish candle closure confirming that sell orders have been filled, and then price ends up moving down. Also, I just want to point something out to you guys. Look at this. So you can see the magic start to work. Liquidity sweep. We were within an uptrend. Break of structure to the downside on this black candle, followed by fair value gap getting filled. Price moves down. Anyways, now that we know, let me show you 1 or 2 more examples of this being valid. So we have, look right here, another bearish fair value gap. Price comes up into the bearish fair value gap, it accumulates for a little bit, and then boom, goes down. Let's try and find some more examples here. Again, what I want you guys to remember is 4 fair value gaps. When you guys start trading these, you guys are going to think these are magic pill, and you guys are going to start marking them out, and then you guys are going to start pressing buy and sell every time a bearish or bullish fair value gap gets filled. Well, guess what? That's how you lose. You lose by trading these confluences just by themselves. You win by trading them together in a good strategical manner that is optimal for efficient price movement. And I'm going to teach you guys that. We just have to get through all the, I know, like day trading is a hard skill, so we have to get through these steps first. This is a good example of bearish fair value gap getting respected with the wick that actually went above it. So right here, notice how the wick goes above this bearish fair value gap, right? It goes above this bearish fair value gap. However, what does it do? It doesn't close, or I mean, assuming that the next hour isn't just this huge candle that ends up turning up, but assuming that this candle closes like this bearish fair value gap is valid. It hasn't been disrespected because it's just like a wick. It's just a wick. So just like break of structure, if it's a wick, we don't care, okay? But a candle closure above the fair value gap, we do care. Now, that leads me into what inverse fair value gaps are. An inverse fair value gap is literally just a fair value gap getting disrespected. So, as I mentioned before, a inverse fair value gap is a confirmation confluence. So an inverse fair value gap, I know we're just jumping straight into this, but hey man, you guys wanted to learn how to trade. This is how you guys are gonna learn this shit. An inverse fair value gap is a fair value gap that gets disrespected within current order flow that shows a change of trend. Oops, let me change this. Order flow is just trend. You guys don't have to worry about that. An inverse fair value gap is a fair value gap that gets just disrespected within the current trend that in turn shows a new change of trend. So let's say we're in a downtrend and you're going to start to see how we can start piecing these things together to identify, hey, when is a low or a high valid for a liquidity sweep? Let's say we're in a downtrend and we're retracing into a fair value gap and then we go lower. And you're like, holy shit, draw on liquidity. Psych. We keep going lower. We fill another fair value gap, and then we keep going lower. And then we keep going lower. And then we have another fair value gap. But then what's that? We end up disrespecting it. When we disrespect a fair value gap, or we'll show it in both directions, but when we disrespect a bearish fair value gap within a downtrend, it's just like a break of structure in that in order for fair value gaps to be valid, when they get filled, it's showing that price is going to continue in that trend direction. Well, when a fair value gap gets disrespected, what is that likely a sign of? That the trend is no longer going to continue in that direction. So we can treat an inverse fair value gap similar to a break of structure, similar to showing a change in trend. And you'll see here on this fake chart that I drew, we come down, we sweep out this low, and then how do we know that this low was an actual liquidity sweep? Boogie's coming to say hi. How do we know? I know, Daddy's been working. I know, buddy. I know. How do we know that this is a valid low? Yeah, sorry. How do we know that this is got carried away there. How do we know that this is a valid low that swept out these sell orders that actually filled buy orders? Well, with two different ways, or three different ways really, but the two ways that we know now are either a break of structure. So how do we identify break of structure? Well, this high would have to get closed above, but sometimes we're lucky enough where there's fair value gaps, and these fair value gaps get disrespected before the high gets closed above, and it tells us even earlier that these trends are going to change direction. Start to piece this together. I don't want you guys to think that you're shadow money wizard gang. We love casting spells just yet, and you know how to do this. Don't get off this video. There's still a lot more to learn, but we're almost there. So within an uptrend, we're making higher highs and higher lows. We're retracing into a fair value gap, and we go higher. We retrace into a fair value gap, and then we go higher. And then we have a fair value gap right here. And then, this fair value gap gets disrespected. We close underneath it. There was a whole bunch of buy orders right here. How do we know that these buy orders got filled, or these sell orders, sorry, got transacted with these buy orders? Because we see a fair value gap get disrespected, and then boom, the trend changes. So let's show this on the chart now. And again, an inverse fair value gap is literally just a fair value gap that gets disrespected. And again, just like with all of our other confluences, this happens on what? Every single time frame. There's inverse fair value gaps on the weekly time frame, monthly time frame, daily time frame, 4-hour time frame, 1-hour time frame, 5-minute time frame, every single time frame. That's the awesome thing about the way that I trade. This is a good example here. Okay, so let's look at this. Price is in a downtrend. We're not going to put all the pieces together just yet. I just want to show you guys this. Price is in a downtrend. What do we have right here? A bearish fair value gap. It gets disrespected by price closing above it. We actually also get a break of structure because this was the most recent high in the downtrend. So we not only get a break of structure to the upside, but we also get a bearish inverse or a bullish inverse fair value gap. Sorry. Closure above it. Price ends up moving higher. Okay. Let me show another example. Let me try to find a bearish example. This is a good example. No, there's a break of structure before it. I want to find a good example of when there isn't a break of structure before it. This is a good example of there not being a break of structure before it. So this is when that an inverse fair value gap would come in handy. Where's the most recent high in this downtrend? It's right here, or at least until this high gets made. But look, instead of us having to wait and potentially enter on this candle closure above this high or above this high, we can look to enter on this candlestick closure. Why? Because there's an inverse fair value gap right here. There's a bearish fair value gap that doesn't get respected. This candlestick closed above the fair value gap. It got disrespected. But again, same thing applies. There's millions of inverse fair value gaps that happen across every single time frame, but not every single one of them is going to cause a reversal. Not every single break of structure is going to cause a reversal. Every single one of these confluences cannot be used on their own. They have to be with context. Okay, they have to be used with context. And without context, they are fucking nothing. Okay? So now let me try and find another example. Again, these are on every single time frame, so let me go to like the hourly. This is a good example right here. This actually puts everything together. Look at this. Sweep of liquidity, a sweep of a high, followed by what? A bullish fair value gap that gets disrespected. Price ends up going down. Good example here. Pushes past a high. Bullish fair value gap that if price wanted to continue this uptrend should have held. We get a candle closure underneath it. Price moves lower. Okay. So now that we know how to identify fair value gaps and inverse fair value gaps, I want to go ahead and talk about all of the other confluences that I use on a daily basis. So that's going to be breaker blocks, that's going to be order blocks, that's going to be equilibrium, and then that's going to be SMT divergences. And then once we have all of that, I know it sounds like a lot, and that's okay. You guys can keep coming back to this video. You guys can keep pausing it, making sure. First thing, do your homework, okay? Get 5 examples of an inverse fair value gap in both directions. Show a fair value gap getting disrespected. I know we're moving quick here, but welcome to the game. Trading moves quick. And your life is moving quick as well, so you might as well learn this skill of day trading because it's the highest leverage skill in the fucking world. And hopefully by the end of all this, I can show you that. Once we start putting things together and you're like, wow, holy shit, this dude's a wizard. Shadow money, wizard gang, billion, trillion dollar baby. Okay? But with that being said, we're going to get into all these other confluences, and then we're going to be able to put every single thing together in a systematic way of trading so that you guys can make billions. Okay? So with that being said, let's get into order blocks and breaker blocks now. All right, let's talk about order blocks. Let's talk about breaker blocks, and let's talk about cocks. Order cocks and break your cocks. Order blocks, what are they? Order blocks, what the fuck are these things? Oh man. What are order blocks? Order blocks, I'm edging you guys. You guys are like, just spit it out!
Spit it out! Tell me what an order block is! I'm on day 2 of learning how to day trade, and you just don't even say it anymore. All you want to do is talk about penises and dicks, and it's not even funny anymore. I've been sitting through 3 hours of this, and guess what, Timmy? It's my video. I get to decide what we're talking about. Ever been to Jerkmate finals? I don't think you have. So sit your ass down, Bronze Buster. That's right, I'm an Emerald Edger. You haven't made it to my rank yet. Pipe down before I pipe you. Order cocks, what are they? The leg up, third leg, type shit. The leg up or leg down prior to the liquidity sweep. And that's all it is. The leg up or leg down prior to the liquidity sweep. Or it's really that causes the liquidity sweep. So, how do we identify a liquidity sweep? With, boom, when we move above a high and then get a break of structure or an inverse fair value gap following that. We just talked about this. So, a bullish order block is the move up prior to the liquidity sweep. Or sorry, a bearish order block. Sorry, Down syndrome. A bearish order block is the move up prior to the liquidity, or sorry, the move up that causes the liquidity sweep prior to the break of structure. Okay, so this move up right here is considered our order block. Why is it considered an order block? Well, let's just think back to liquidity sweeps. We know there's a whole bunch of buy orders that are above these highs, right? So when price moves up to fill these buy orders, what is happening on this move up? A whole bunch of sell orders are given the ability to be filled. Because as we're moving up and as we're sweeping out these buy orders and filling these buy orders, what are the market makers doing? They're filling the sell orders to cause price to go down. So what do we know about this price range? From the start of the move up to the top of the move up,
there is a whole bunch of potential and there's a whole bunch of probability to be able to fill sell orders. So if price comes back into this price range where there was a lot of probability and a lot of potential for price to be able to fill sell orders, and we see a move down following that, showing that sell orders have been filled, what is likely going to happen? Price is likely going to move down off of that. Okay, now again, on the contrary, let's show the bullish. We're in a downtrend. We get a sweep of liquidity and then boom. Okay, we get a sweep of liquidity. There's a whole bunch of sell orders that are able to get filled underneath this low. This move down gives price the opportunity to what? Fill buy orders to cause price to change direction. We get a break of structure to the upside, confirming that we have changed direction. Now this price range, this move down, which essentially filled all those buy orders. We have a high probability and possibility of filling buy orders within this price range. So when price comes back down within this price range, or if price comes back down within this price range, and then we see buy orders out of it, what is price likely going to do? It's likely going to continue higher. Now, how can we identify them on the chart? Another thing that I want to mention, order blocks can either be one candle, or they can be two candles, they can be three candles, as long as it's consecutive. So if we have a liquidity sweep breaker structure, this is our order block, right? If it's three consecutive up candles, we take it from the bottom of the first candle to the top of the last candle, as long as it's three consecutive up candles. This can also be considered one single up candle. It can literally just be one single up candle with a wick that goes above this high, okay? Same thing to the downside. It can be two consecutive down candles. It can be three consecutive down candles. But what it can't be is like an up candle and then a down candle and then two up candles that go up to sweep out this high. These two aren't the order block, these two are, because these two are the two up candles that cause the sweep. Got it? Cool. Let's go into identifying them now. And again, just like with every single other one of our confluences, this means nothing without context. Let me try and find a good example here. Okay, this is a good example. So right here, okay, we have a liquidity sweep, right? Liquidity sweep, and again, this is a liquidity sweep to the downside, and then we see a break of structure to the upside. So we're looking for a bullish order block, right? We break structure on this candle closure right here. We also have an inverse gap right here. So liquidity sweep, inverse for value gap, and break of structure to the upside. Cool. Sweep of these lows, inverse for value gap, break of structure to the upside. Where is the candlestick that moves down that causes the liquidity sweep prior to the break of structure to the upside? This candlestick right here. This is our order block. Okay, this move down is what caused the liquidity sweep, and it's the move down that caused the liquidity sweep prior to the break of structure to the upside. So we see once we get this break of structure to the upside, price moves down back into this order block. We see, boom, buy orders filled. After that, price ends up moving higher. Okay, let me find a bearish example. Okay, this is a good example. Right here, we get a liquidity sweep to the upside. How do we know that it's a liquidity sweep? Because we end up getting a break structure to the downside right here. We also have an inverse bullish for value gap right here. We get the inverse for value gap and the break of structure at the same time with this candlestick closure. Okay, we have 1, 2, 3, 4, 5 up candles. This move up is what caused the liquidity sweep. So we encapsulate all of those candles. This is our order block. It's the price range where those sell orders were able to get filled. Hey, Boogie, you came back for more pets? Okay, so price moved up. It swept out these highs. 1, 2, 3, 4, 5 consecutive up candles prior to the break of structure to the downside. This is our order block. We mark it out. Price comes up, fills in this order block. We see a down candle, and then boom, price ends up going down a lot. Again, these mean and are nothing without context, so don't just start marking out order blocks and taking trades off of them, okay? It needs to be systematic, it needs to be strategic, and it needs to be within the right time, at the right place, okay? And if we do that incorrectly, then we're fucked, okay? But this is a good example of order blocks, okay? I want you guys to find 5 examples of bullish order blocks. I want you guys to find 5 examples of bearish order blocks and then come back to me. All right. I also want to show you guys an example of, or what an order block is that gets disrespected. So again, an order block can be valid as long as this is different than fair value gaps. So it's similar to fair value gaps in that candlesticks can close within here, but it's different with fair value gaps where price cannot have a wick above the order block. So, I mean, obviously if a candlestick closes above the order block, not only is that a break of structure back to the upside, but it's disrespecting the order block, obviously. But also, we can't have a wick above the order block. There is an exception to this, which is called an SMT divergence. But in that case, we are not taking the trade off of an order block. We're taking a trade off the SMT divergence. And that's a whole different story. And we will get into that story later, after order blocks, breaker blocks, and equilibrium. Okay, so go ahead and find 5 examples of order blocks on your chart for me. Okay, pause this video, go find 5 examples of order blocks. Okay, so once you guys have done that, we're going to go ahead and talk about breaker blocks, which are essentially the same thing as an order block, except just a little bit different. So breaker cocks, breaker cock, whatever. Breaker blocks are the move up or down, again, prior to the break of structure to the up/downside in trend shift. Okay, so breaker blocks are the move up or move down prior to the break of structure to the up/downside in trend shift. So it's literally the same definition as an order block, except it's the opposite, I guess, if that makes sense. Not really, but look. Stay with me now. In an uptrend, okay, let's say we have an uptrend right here, right? An order block, a bearish order block, right, is the move up that causes the liquidity sweep, that causes the orders to be filled. Now, the opposite is a breaker block. A bearish breaker block is the move down. So again, most of the time it's relatively the same price range for the most part. Sometimes it's different, but for the most part it's relatively the same price range. But it's the move down that, and the reasoning behind this is it's a failed retrace. So typically these retraces are what gives price the fuel and trends the fuel to push higher and keep extending higher and higher and higher. So the reason that this is a good tool for us is because it's a failed retrace. So it's saying it caused price to move down, or sorry, the breaker block didn't cause price to move down, but price moved down, this retrace down, and then we had buy orders that pushed us up, but to take out this draw on liquidity, we didn't have enough buy orders to keep price pushing, to keep price to continue in the trend, and then price broke structure. So order blocks are where there's a significant, where we were able to fill a significant amount of sell orders in the past. This is similar to fair value gaps where there's a lack of buy orders here. So order blocks are where there was a significant amount of sell orders that were able to get filled within that price range. This is there is a lack of buy orders that were filled because why? Like we weren't able to fill enough buy orders to continue the trend higher. So within this price range, because there's a lack of buy orders similar to fair value gaps, if we get in here and we fill sell orders, price is going to move down. Again, with the right context and confluences. Now, same thing to the upside. Okay, so if we're in a downtrend, that was horrible. If we're in a downtrend, this order block right here, right? This move down, it gave us the ability to fill a significant amount of buy orders, right? So this price range is where we were able to fill a significant amount of buy orders. The opposite is this breaker block, this move up, this retrace that failed to fill the amount of sell orders required for us to get a full extension and continue this downtrend. So what is there within here? A lack of sell orders. So if price comes back and retraces within this confluence and gives us buy orders out of it, and how do we see buy orders? Just by a candle up. By the way, I don't think I mentioned that. We are likely going to see price continue up. Now let's show an example of this on the chart. This. Okay, so look right here. Okay, we get a break of structure to the downside, right? We don't have to go through all the steps, but we get a break of structure to the downside. Let's practice both order blocks and breaker blocks. So where's our order block? Our order block, these two up candles, right? The up candles that cause the liquidity sweep. Where's our breaker block? The down candle, the retrace prior, or the down candles, because it can be multiple, prior to price breaking structure and prior to the liquidity sweep. So in this case, price doesn't hit the order block, but what does it fill? It fills the breaker block. And then following that, price ends up moving down. Okay, we actually just formed, or after these 11 minutes go by, we'll actually form a good example of this again on both of these. So look, we get a break of structure to the upside. We already broke structure to the upside. We haven't officially confirmed this yet. Once this candle closes bullish, then it'll show that we're respecting these. But we have the candles down that cause the liquidity sweep. This is what? Our order block. And then we have the up candle prior to the liquidity sweep and prior to the break of structure. That is our breaker block. Okay, let's show another example of both of these. Hopefully you guys are getting good at this. Again, I want you guys to be able to see these and notice these like the back of your fucking hand. This is a good example of only a breaker block getting filled. We get a break of structure to the upside right here. Okay, where is our order block? It's this down candle right here. Where is our breaker block? It's this up candle prior to the liquidity sweep. Which one gets filled? The breaker blocks there's a move down into the breaker block. It gets filled. Bullish candle out of it. Boom. Price ends up moving higher. Now, again, I know I keep saying this, but these confluences really do mean nothing without context. So again, if you guys see a breaker block or an order block get formed, I don't want you guys just blindly going in and taking trades off of these things, because you will end up losing. But we are so close. We're literally 2 confluences away from having everything that we need to know in order to take profitable trades at the right time, on the right time frames, and to be able to read price action for what it is. Okay, we are so fucking close. We are almost there, all right? So fucking close. Let's do our homework of marking out 5 order blocks in each direction, and let's do our homework of marking out 5 breaker blocks in each direction. And now let's get into equilibrium, which is another one of our continuation confluences. Okay, so order block and breaker blocks, as you guessed, are continuation confluences. Okay, these are continuation confluences. Why? Because we get a liquidity sweep first, then we get a break of structure, a change of direction, a change of the current trend that we're in, and then we see price continue the trend off of these confluences, off of these patterns. Okay, so next is going to be equilibrium. Equilibrium is going to be another continuation confluence, and then SMT is a confirmation confluence. And then from there, we will be able to put all of this shit together and teach you guys how to take profitable trades. And I'm super excited to do that. So let's get into equilibrium. All right, sorry, I started the next lesson without even pressing record. Equilibrium, what is it? Why do we need it? Why do we want it? Why is it amazing for us? Equilibrium essentially marks the 50% mark from highs down to lows, or lows up to highs, within retracements. And listen, I could explain the complete brainiac, really awesome, really long and thought out explanation for why equilibrium is beneficial. But I honestly, there's just no real reason to do that. So as long as you just can see this shit work in action, that's all that we need to know. So equilibrium is the 50% mark. Just know that price, more often than not, if it's retracing off this 50% mark, or if it's reacting off this 50% mark from swing low up to swing high, or from swing high down to swing low, depending on what trend we're in. And again, I'm going to show you guys how to mark this out on the chart, obviously. But that's all that you guys got to know. Equilibrium is the 50% mark from the most recent high / low to the most recent low, again, and that's depending on what trend we're in. So let's draw this out. Again, this is a continuation confluence. So if we're in an uptrend, how do we mark out equilibrium? First of all, what tool do we use to mark out equilibrium with? This is one of the first times that we're actually going to be using one of these tools. One of the first and only times that we're going to be using one of these tools, actually. Okay, the tool that I like to use for this is the Gann box. Okay, so in an uptrend, when we're trying to find bullish equilibrium, We use the GAN box, and I'll go ahead. You guys can go ahead and copy my settings here. Yup. Get those settings nice and good, buddy. Okay, so when we're drawing equilibrium, bullish equilibrium, so let's say we're in an uptrend, or we're trying to find a continuation confluence to the upside. Let's say there's no fair value gaps, there's no order blocks, there's no breaker blocks. Last resort equilibrium. Cool. We draw it from the low, the most recent low, up to the most recent high, and if price comes down underneath this 50% mark, because this pretty much measures the extension and gives us the 50% mark of the extension, showing us where discounted price is and where premium price is, more often than not, or it's just known that if price moves into a discount, let's just think about this. If your favorite Cheeto Puff, or I know some of you fucking idiots are gonna be like, I don't like Cheeto Puffs. Like, okay, fine. What does everybody like? Everybody needs water. Let's just do fucking water. Well, no, because there's cheaper water. God fucking damn it. Everybody likes ice cream. And if I hear somebody talking about I don't like ice cream in the comments, fuck you, okay? This is the example that I'm using. Imagine you like ice cream. And imagine your favorite ice cream that you buy is worth $23,167, okay? We're using NASDAQ's prices here. Let's say that's what your favorite ice cream is worth most of the time, and you buy it all the time, right? But then, boom, your favorite ice cream is now on sale for $22,857. Are you gonna buy it? Duh, cause you're fat as fuck. You're gonna buy that shit right there. It's the same thing with the markets. If we're in an uptrend and when we get retraces into discounted prices, so all this does is it helps us measure from the start of an extension to the top of an extension to measure out where do we start getting discounted prices within this uptrend, underneath this 50% mark. The 50% mark is equilibrium because it's in between a premium and a discount, okay? This line is showing the premium and the discount, okay? So if we push into a discounted price range and market makers fill buy orders because that's optimal, right? It's a cheap price. What's going to happen? Price is probably going to move higher. That's all it is. That's all it is. Probably one of the easiest confluences to learn. People still somehow find a way to fuck it up. And I'm going to show you ways that people fuck it up. In a downtrend, we take it from the high down to the low. So that actually won't hit equilibrium. Let me redraw this. Okay, equilibrium, we take it from the most recent high down to the most recent low. And now, when we're looking for sells, right, we want price to be at a premium. And we want to sell it at a discount, right? So when price pushes up into a premium, and we say, I ain't paying for that fucking ice cream. And I know damn well nobody else is paying for that fucking ice cream. I'm gonna short this bitch. The market makers, they say, fuck that shit. We're tanking it. Boom. They enter into sell positions at a discounted price. We see that. Price is likely going to move down. Now, how do you not mark out equilibrium? I know it sounds stupid because I just explained it to you, but retards will do some shit like this. Take it from this random ass high down to this random ass low. Is this the most recent high that was made? No. Is this the most recent low that was made? No. What else will retards do? Well, we're in a downtrend and they'll say, okay, well, you take it from the most recent high and low that was made. Well, this was a high that was made and this was the low that was made. But why isn't it getting hit? Well, idiot, you draw it from this high down to this low. Okay, not from this high back in time down to this low. Once we make a new low right here, then we can take it from this high down to this low. How do we identify highs and lows within the market? With a move up and then a move down. How do we identify a low within the market? A move down, then a move up. Okay? Pretty simple. Let's go onto the chart and let's look at this shit. Let's literally look at the most recent thing that we saw. Breaking structure to the upside. What are we now in? Uptrend. Motion. Let's look for a continuation confluence. Oh my God, would you look at that? It hit equilibrium. I'm gonna jack off and then nut all over the screen and it's oh so sticky. TJR, please wipe it off of me and then do it again. Oh, it's in my eyes. I can't see. Please leave your GAN box on. I wanna see it. Most recent low. What's a low? Move down, then a move up. Up to the most recent high. Move up, then a move down. Okay. Equilibrium right here. We get a break structure to the downside. We're looking for a continuation confluence. From the high, move up, then a move down. Is this the high right here? Is this the high? Yes, TJR, it is the high. Good boy, Timmy. Psych, you're an idiot. No, it's not the high. Move up, then a move down. Come on. Wow, I almost called you the F slur. We're getting deep into this. I think I can start letting things rip a little bit, because if you're gonna fuck with me for this long, then that means you were gonna fuck me at the beginning anyways. Because at the beginning, I already said a whole bunch of shit. So if you stuck around for this long, I can say whatever I want at this point. Move up, then a move down. Low, move down, then a move up. Lowest point of those two candles, highest point of these two candles, and bang! We got our equilibrium. Price moves into a premium. We see a down candle out of it. Bear run, bitches. Simple as that, bro. Simple as that. Now, remember, what is not equilibrium? That is not equilibrium. Why? Because this is a random ass low, this is a random ass high. Don't do that. I know it sounds crazy, but retards do that. Bet, bro. We just slimed out equilibrium from these lows up to these highs. Like what, bro? That does not make any sense. No. Most recent low up to the most recent high down to the most recent low. Plain and simple. Cold hard facts, cold hard stacks, cold hard racks. We got equilibrium. Homework, mark out 5 cases of bullish equilibrium, mark out 5 cases of bearish equilibrium. I know, just like all the other confluences, I feel like I say this over and over and over and over and over and over and over again, but just like all of our other confluences, this does not mean shit without context. And without being used in the right situation. It's like a gun, okay? A gun is super useful, but without the right context and in the wrong situation, you're going to fucking jail, okay? I can't walk down the street just fucking firing off rounds into the sky. But if I'm in the middle of like a fucking gun, whatever, like a fucking shooting range, not a shooting range. If I'm in like the fucking forest hunting, I can probably let a couple bitches fly to the upside. Probably not the smartest idea, but maybe I will. Actually, I don't know the regulations on that. Somebody fact check me. But you get what I'm saying. We can't just be firing off buys and sells off of equilibrium. Like, Daddy, TJR taught me this. I'm going to make you a billionaire. No, Daddy, he's going to make you broke. Okay? He is definitely going to make you broke. Don't listen to him. Again, this only works within the right context, okay? So we need context before we have sex. The last and, well, I was going to say the most important, but it's not. But, hey, don't discredit this shit, though. Don't discredit this shit, though. The last confluence that you guys have to learn and be fluent in order to understand the markets is SMT divergence, okay? Or SMT divergence, okay? Now, something that I want to mention right now. If you guys are Forex traders, so if you guys are trading GBP USD, Euro USD, gold, okay, if you guys are trading anything besides the S&P 500 and NASDAQ, this is not going to apply to you. But don't leave the fucking video, okay? Don't leave the video, because I have to show you how to use all these confluences together, because right now you guys are freaking clueless. Okay, you guys are just taking trades on who knows what right now, and you guys just have all these confluences but don't know how to put them together. So you guys fast forward through the SMT divergence, or just sit back, relax, and watch it to see if, you know, you maybe want to switch over to indexes anytime. Maybe take notes on it, why don't you? But this only applies to indexes, and I'm going to explain why. So what are SMT divergences? Just realized my mic was down, sorry if I'm now way louder than before and you raise your volume. But SMT divergences. What are they? Why do we use them? So again, let me put only on indexes. So only on the S&P 500 and NASDAQ. Okay, and not only is it only on the S&P 500 and NASDAQ, NASDAQ smoking out of your ass crack. Okay, well, no, it is only on those, but okay, lock in. It is when one index makes a higher high, while the other makes a lower high. I think I spelled that right. I didn't. I knew I didn't. God damn it. And when one lower low, the other makes. So you're probably saying like, what the fuck are you talking about, TJR? I don't get it. When one index makes a higher high, but then the other one makes a lower high, like, bro, what? But then when one index makes a lower low and the other one makes a higher low, you're talking about trends, bro. You're like on some like weird, like on some shit, bro. Listen, bro, listen. Just listen to me, bro. And then, bro, just the source, just trust me, bro. Anyways, let's lock in. SMT divergence. Typically when I explain this, people get confused. I don't know why. To me, it makes complete sense, but maybe that's just because everybody's a beginner in this and we all learn at our own slow but sure pace. I'll try and explain this in the best way possible. Let's say the S&P 500 is in an uptrend. Okay. The S&P 500 is in an uptrend. This trend line, or yeah, trend, shows the S&P 500, okay? And since the S&P 500 and NASDAQ are correlated indexes, meaning when the S&P 500 goes up, typically the NASDAQ goes up. When the S&P 500 goes down, typically the NASDAQ goes down, okay? So if the S&P 500 is making an uptrend, then the NASDAQ is making an uptrend. Okay? But what happens when we have something like this? Where the S&P 500 is in an uptrend and makes a higher high, but then NASDAQ is in an uptrend, doesn't break structure, doesn't get an inverse for value gap, but just gives us a lower high. That is what we call an SMT divergence. It's when one index is lagging behind the other. And typically, this happens at key levels, such as draws on liquidity. Okay, so what typically happens with this is the S&P 500, it's moving up, it's in an uptrend. And then let's say we have a draw on liquidity right here, a high time frame high. We have a high time frame high, not only on the S&P 500, but also on NASDAQ, sure. The S&P 500 pushes above that high, but it still continues this uptrend, and it hasn't given us, there's no break of structure, there's no inverse for value gap, there's nothing telling us that price is going to go down yet. But on NASDAQ, we're seeing the same uptrend, but hey, what's that? NASDAQ is making a lower high, signaling a sign of weakness, signaling a potential sign of a reversal. But the S&P 500 is moving in higher highs. What is that telling me about the S&P 500? The S&P 500 is lagging behind NASDAQ. Why? Because NASDAQ just pushed up into a key level and is now making a lower high, giving me signs of a reversal. And if NASDAQ continues down into a downtrend, then obviously a reversal had happened. So we will know that typically, like when we're right here on NASDAQ, that's typically when we're like right here on the S&P 500. So NASDAQ may have already broken structure, may have already given us an inverse for value gap, but the S&P is lagging because its price was just behind. And it literally helps us tell the future of what the other index is going to do. So when we see an SMT divergence, in this case, this is a bearish SMT divergence. A bearish SMT divergence is when one index, it doesn't matter which one, okay? This one could be NASDAQ, this one could be S&P 500. It doesn't matter which one is making the higher high and which one is making the lower high, because it applies both ways. So let's say this one's NASDAQ. NASDAQ is making higher highs, but the S&P 500 is making a lower high off of a key level and is moving down. That is a sign for me to look at NASDAQ and say, how can I find a short trade? How can I find a trade to go lower? Why? Because NASDAQ is literally telling us exactly what's about to happen in the S&P 500. Because what is about to happen in the S&P 500 just happened on NASDAQ. It has already happened on NASDAQ, and NASDAQ is telling us the future of what's about to happen on the S&P 500. Now, it's the same thing when it's in the opposite direction. So let's say we're in a downtrend and we have a key level right here. We're in downtrend, whatever, we're making lower lows and lower highs. Let's say this is the S&P 500, and let's say, I need to make sure I draw this correctly. Okay, let's say this is the S&P 500, where we're making lower lows still, we're continuing the downtrend, but this one's NASDAQ. We make a higher low. Again, we don't have a break of structure, we don't have an inverse for value gap, but we do have a higher low. What is NASDAQ telling us about the S&P 500? It's saying that, hey, NASDAQ is actually moving higher already off of this impact key level, and the S&P 500 is about to fucking follow suit. And it's about to go higher, just like NASDAQ is already going higher. So a bullish SMT divergence is when one index is making lower lows, while the other index is making higher lows. Now again, just like with every single other confluence that I've taught you guys about, what the fuck is he doing over there? You're literally sniffing my ass, Boogie. Get your head out of my butt. Anyways, just like every single other confluence that I've taught you guys about, this means nothing without context. And the key thing with SMTs, the biggest context clue that we need with SMTs is a key level. Because we see SMT divergences happen all the time in the chart, just because NASDAQ and the S&P 500, they just straight up, they just move differently. So if we're, again, just taking longs purely off of NASDAQ making a higher low and ES making a lower low, we're gonna lose trades. But when we're using it as a confluence after coming into a key level and then putting it together, which is exactly what we're about to do after I show you guys examples of this on the chart, then it's actually a very, very, very good confluence for us to use. So let's show an example of this on the chart. There was actually a very good example of this yesterday, so I'm going to show it. Beautiful example of this yesterday. So this is going to be giving us a little sneak peek into, you know, potentially what the strategy looks like a bit, but we're at the point now where we understand all the confluences. So what am I marking out here? This is a bearish fair value gap. We're currently in an hourly downtrend. This is market open for New York Stock Exchange, okay? So let's look here. On the S&P 500, okay, market opens, what are we in? We're in a downtrend, right? We have a low right here, a high right here, a lower low, a lower high. Cool, we're in a downtrend coming into market open, okay? On NASDAQ, you see what we got here? When the S&P 500 is making a lower high, NASDAQ is making a higher high. So we can see that it's literally happening at the exact same time. 935. 935. The S&P 500 makes a lower high while NASDAQ is making a higher high. So when this happens, we know that this is a bearish confluence, and we know that that means NASDAQ is the lagging index. Why is NASDAQ the lagging index? Because it made a higher high while the S&P 500 made a lower high. So why are we going to want to take our trade on NASDAQ? Because it's lagging behind the S&P, and the S&P is going to tell us literally exactly where NASDAQ's going to go. Following that, we can go through every single one of our steps to be able to execute a trade and catch a banger short, which I was able to catch. I made $25,000 on this trade. Don't believe me? Go look at the trade recap that I posted of me making $25,000 in a day. And it was posted recently, like last week. So go watch it. As long as you're seeing this video as it came out, obviously. But that's SMT divergence in the wild. Now, let me try and find an example of bullish SMT divergence. It's been hard to find bullish SMT divergence. It's been a minute, actually, for us to be able to find bullish SMT divergence just because price action has been so bad recently. It's going to be around market opens, but again, these market opens have been so bearish recently. Man, I wonder if I can just show you guys one on the high time frames, because low time frames, it's really going to take forever. Oh, this was a high time frame one, I believe. Okay, so this is, again, All of our confluences happen on every single time frame. That's the awesome way about how we trade. So again, even though this is on a high time frame and we're not necessarily looking at executions here, we can see how this still applies. NASDAQ, we have a low right here. Okay, first of all, we're in a downtrend, right? So we're expecting to make lower lows and lower highs, right? We have a low right here. Technically, we should be on like the daily time frame because there's a whole bunch of like lows and stuff within here, but you guys can visualize it by now. At least I hope. Okay, we have a low right here and then a higher low right here. Okay, we can see that this is a higher low. On the S&P 500, however, we have the same low right here, followed by a lower low. So what is NASDAQ telling us about the S&P 500? It's saying, hey, buddy, you better start looking for buys right here because you are lagging behind the NASDAQ. And the NASDAQ's moving up, and it's moving higher, and it's moving quick. So you better get on the fucking trade, and you better find a fucking entry right the fuck now. And then boom, both prices end up going higher. Simple, simple shit. Now that we understand literally everything, this is the big one. We are going to put this strategy together. I'm going to tell you guys how we put all these confluences together, explain how we do it on the chart. And then I'm going to leave you guys with some risk management tools, okay? Show you guys how we can go over news data a little bit. Okay, tell you guys what news to avoid, okay? Also how to calculate your risk when entering into a trade. And then I'm going to give you guys a little mindset lesson at the very end. So please stay tuned to that because not only do you have to be super good and super fluent in the charts on like strategy wise, but if your risk management is not in check, you will lose money forever in the markets. And I promise you that. Coming from somebody that was exactly in your position just a couple years ago, the biggest mistakes that I ever made was actually not when it came to chart work. My chart work was immaculate. My chart work was really, really good. However, the biggest struggle that I had when trying to learn how to day trade was protecting my mental, fixing my emotions, and fixing my risk management. So I could cut this video short right after I show you guys the strategy and be like, boom, now go throw your life savings on it. I'm not gonna do that for you guys. I'm going to teach you guys how to risk properly. I'm also going to teach you guys how to get your mind in check, okay? And if you guys can do all three of these things, master strategy within the market, master risk within the market, and master psychology within the market, I can promise you that along with time on the charts and just doing this over and over and over again, because it's one thing to sit here and watch this YouTube video and be like, yes, I understand. Yes, I understand. And to digest the information. And there's been a lot of information that I've thrown at you. But you have to take that information and then you have to go and fucking apply it. So if you're able to do all of that, then you're going to be on a great path. But if you just sit here and watch this video and then don't do anything after that, you're not going to be able to do shit. Or if you just sit there, watch this video, don't journal, don't try and get your mind right, don't use proper risk management, you're going to be screwed. And then you're going to be in my comment section saying, TJR, this doesn't work, but I was able to make $40,000 and the week isn't even over. It's fucking Wednesday of this week. But you're telling me that the strategy that I'm teaching you doesn't work. Something doesn't align here. What's the missing variable? It's you and the work that you have yet to put in. So now that we got you all riled up, let's get into how we can put all this together to actually take good trades within the market. Welcome to the final strategy. Everything that you guys have been learning up until now can finally be put together in one simple squash. It's like guacamole. You get the avocado, you plop it in there. You get the salsa, you throw it in there. You get the onions, boom, you give a little lime squeeze. You get some garlic in there. Maybe some salt, maybe some peppa steppa, okay? Maybe your mom's, maybe toss a mango in that bitch, right? Spice, maybe, you never know. A little pomegranate. I know they like tossing them pomegranates in the guacamole. We have all these ingredients, but we haven't mashed it together yet. We haven't mashed it. And once we start mashing, that's when the magic happens, baby. Right here. Right here is when the magic happens. Okay. The mashing is when the magic happens. So, I need you guys to lock in. I know you guys are reading this and being like, I'm gonna write it down. This is $1 billion secret. TJR's $1 billion secret is live. Guys, I waited 10 hours for this. Listen, Timmy, I'm telling you right now, you're not going to turn profitable if you just take this and run to the markets. This is going to take a lot of practice. You guys need to do this on a demo account because I promise you, just before we get into the strategy portion, because I know you guys have been waiting for this, I need to edge you guys a little bit more, okay? I need to tickle you guys. I need to play with you guys. I love you guys. And let's just play together. I want to invite you guys over to my house for a play date, and then maybe we can just sit and read books and play all day. But I also want to tell you guys something. This is similar. I'm like LeBron, okay? I'm 6'5", you know, he's 6'7". I'm good at basketball, he's good at basketball. He's black, I'm black. I want to be black, you know? We're like the same dude pretty much. But if LeBron made a course or gave you guys basketball training videos, right? And you guys were to sit down, if he gave you guys like an 8-hour, 10-hour, whatever, basketball training video, you sit down and you watch it and you're like, yep, I understand. And then you guys go and hit the blacktop and then you try and apply everything that Big Daddy Bron told you guys about in those training videos. And then after the first day, you miss every single shot, you suck at dribbling, you suck at passing, your IQ's shit. Do you go to Big Daddy Bron and say, yo, bro, what the fuck? You suck at basketball. You're a fucking liar. You're a fucking scammer. No. You look at yourself and say, I need to practice more. And that's the same thing with trading. Trading is seen so horribly by the masses. I'm sure a lot of you guys think day trading is the easiest shit in the world. It's not. Day trading is by far, like, it's literally the opposite of a get-rich-quick scheme. The reason why, there's no such thing as getting rich quick, okay? Most people that get into day trading, they just want to get rich quick. I'm telling you right now, that's not how this shit works. But I am telling you that you can get rich from trading. I'm telling you without a fucking doubt in my mind that you can get rich from trading. Why? Because I was able to do that shit too. So I believe in every single one of you guys, and I know I can see literally 100 times more potential in you guys than you can see in yourselves. And I know for a fact that you guys can get this. But I need you guys to understand that if you guys just take this strategy and go and apply it tomorrow and then give up because it didn't work, it's not because the strategy doesn't work. It's because you didn't work hard enough. And you guys haven't put in enough work yet for this to work. You guys have to get into the markets every single day. You guys have to backtest every single day. You guys have to journal your trades. You guys have to get your psychology right. You guys have to get your risk management right. There's so many other things outside of this than just the strategy. So yes, am I going to lay this out for you guys and give you guys a strategy that I use to take trades? 100% I am, because I want you guys to succeed in this. But know and understand that day trading is far more than just this one strategy, and this is going to take you to the moon and the stars. Because I can promise you guys are probably marking out confluences wrong. Just like when I hit a crossover, am I going to hit my first crossover as good as Big Daddy Bron? No. But after I hit my 100th crossover, is my 100th crossover going to be better than my first one? Is my 100th trade going to be better than my first one? Yes, it is. What happens when I hit my 1,000th trade? Is it going to be better than my first one? Yes. Is it going to be way better than my 100th trade? Yes. And the more trades that we take, the more losses that we take, the more lessons that we learn from the market itself, the better that we're going to get at trading. So it's one thing for you guys to watch this video, but the second thing that I can't help you guys do is put in the work yourselves. And that's the hardest thing about getting rich. The easiest thing ever is to put in your head that you're gonna fucking do it. The easiest thing about getting rich is telling yourself, I'm going to do it, and I'm going to get the supercar, and I'm going to have $1 billion. I'm going to be a millionaire. But the hardest part about getting rich is actually doing what you say you're going to do. The hardest part about getting rich is waking up in the morning when you don't want to and actually putting in the fucking work. The hardest part about getting rich is doing the work when you don't want to and you know everybody else is quitting, and it's super easy for you to quit at that point in time. But then guess what? You're going to be just like everybody else who quit and didn't make it. So the choice is yours, whether you guys want to make this shit or not. There's a reason why only 3% of day traders succeed. Matter of fact, it's probably even lower than that. There's a reason why only 1% of day traders succeed. Because that 1% of people, they're different than 99% of the other people. They're willing to do what 99% of people aren't willing to do, which is put in the fucking work. And the same thing applies to literally anything else in business. So whether you're watching this just because you're thinking about getting into trading, or you're watching this just because you like my videos, I don't give a shit. Whatever it is, you're watching my videos because you want to succeed in life. And you know that I'm young, I'm 22 years old, and I'm a fucking multi-millionaire. And I made this life from the fucking ground up by myself, on my fucking own. And if you guys want to be like me, I can promise you, you guys can. And I can promise you that some of you guys can be even fucking greater than me. But I can also promise you this, if you don't put in the work that's required to get to these levels, you will never make it, ever, in your entire life. And there are going to be points in your life where you're fucking hitting a brick wall and you're like, man, I can't get through this shit. But you gotta just put your head down and keep running into that fucking wall day after day until it breaks down. And then boom, you're on to the next level and you grow. And you learn from those mistakes that you made. And then guess what? I still run into roadblocks in my own life. And you're probably thinking, damn, this dude's got his life set. He's got a Brabus. He's got a fucking Rolls Royce. He's got a crib in Puerto Rico. He's living all on his own. He's got life figured out. Fuck no, I don't. I don't have life figured out for shit. There's new problems at every single level. You guys are at an early level right now. Your problems are fucking easy compared to my problems. More money, more problems. That shit's as real as it gets. But I would much rather deal with the problems that I'm dealing with now than have to be dealing with bullshit ass problems like paying rent on time. Like just putting fucking food on the table, bro. There was times when I was door dashing where I was literally stealing fucking orders just to eat, bro. There was literally times when I was door dashing fucking orders and I would walk up to the door and I would wait for them to answer it so I could get cash from them to put gas in my car so I could keep door dashing. That's the type of shit that I was on. And I know for a fact there's some of you guys that are watching this that are probably in worse situations that I was in. I can promise you there's a way out of that situation. It's not just from watching one single video, it's from putting in hours and hours and hours of work. And that's the only way that you guys are going to make it. But would you rather put in hours and hours and hours and hours of work into something that is infinitely scalable? Or would you rather just go through the same day-to-day that you guys have been living for your entire life, just over and over and over again? Groundhog fucking day. You guys wake up, damn, same shift, same boss, same bullshit. Or would you rather wake up and have to deal with problems that are exciting? I got to deal with a whole bunch of bullshit every single day, but I know that I know now at the level that I'm at, these problems, these things that I'm dealing with, it's fun. I'm ready for the challenges that my life brings me. Why? Because I know when I knock these challenges down, I'm going to keep going. I'm going to keep getting better. I'm going to keep growing. Right now, you guys see problems as a bad thing. You guys see challenges as a bad thing. I see them as growth opportunities. And you guys need to see them too, as growth opportunities. And I just wanted to get that through your guys' head before I go into this strategy. And I'm going to go deeper into psychology and how you guys can actually get this life that you guys want and fucking dream of. But man, does it come with a lot of fucking hard work and sacrifice. There's no avoiding it. So I'm telling you right now, for everybody that's watching this and just thinks that they're going to take this strategy and just go laugh into the bank and telling all their friends about it, like, yeah, that is going to be the case after you fall on your face hundreds of times after attempting this over and over and over and over again. This is the strategy that I use on a daily basis, that I make a shit ton of money with. But I can promise you, your first trade, you're probably going to lose. Your second trade, it's going to suck as well. Because you guys just don't understand this shit well enough. As time goes on, and as you guys rewatch this video, as you guys get more in touch with the market, get more into your flow state with the market, you guys eventually will get this shit. And all that hard work will pay off. So with that being said, let's get into our strategy. There are 3 things that we are going to be looking for. The first thing is our key levels. What are our key levels? Draws on liquidity and imbalances. The market moves off of draws on liquidity and imbalances. So why are those our key levels? Because that's what the market moves off of. What are draws on liquidity? Highs and lows within the market. What are imbalances? Fair value gaps. Where do we look for these? On the 1 hour time frame and the 4 hour time frame. We are also looking for the session highs and lows. So I'm going to show you guys how to mark out the session opens, okay, and how to find the highs and lows of each session, because these session highs and lows are super strong draws on liquidity and very high confluence for us. The second thing that we need to know are when can we trade? Okay, there are, like I said, there are 3 sessions. I would prefer if you guys don't trade Asian session If you guys are trading New York session, so this is for indexes. I'll go ahead and add Forex here. So for indexes, I'm only looking to trade from 9:50 to 10:30. I know you're probably thinking, damn, that's not much time to trade. I know we're going to be on the market before that, ideally 30 minutes before market opens, so we can see and react to price and whatever. We're not just getting onto the charts 20 minutes into market open. No, we're getting onto the charts 30 minutes before market opens, maybe even an hour before market opens. Ideally, it's an hour before market opens if you guys are just getting into this. But we're looking to take our trade from between 9:50 and 10:30. And then for Forex, the Forex, so New York Stock Exchange opens at 9:30 a.m. Eastern time. Pre-market for New York Stock Exchange opens at 8:30 a.m. Eastern time. That's for indexes and like stocks and stuff. And again, I trade indexes, which is the S&P 500 and NASDAQ. But for people who are trading Forex, so let's say you want to trade like GBP USD or Euro USD during New York session, because that's what works for you guys. 8 a.m. Eastern time to 10 a.m. Eastern time are going to be your guys' times to trade. Okay, that's Forex. And then London session opens at 3 a.m. All of this is done in Eastern time, and I'm going to keep it as Eastern time because I operate based. I'm not even on Eastern time right now. I'm in Puerto Rico. We're an hour ahead of Eastern time, but I fully, like, my entire brain and my entire schedule operates off of Eastern time because that's how the markets operate. So London session opens at 3 a.m. Eastern time, and ideally you guys find your trade between 3 a.m. to 4 a.m. I highly recommend you guys don't take any trades after 4 a.m. on London session. Same thing here on New York session. If you guys can't find a trade after 10:30, me personally, I would avoid trading for that entire day. Forex, same thing. If you guys can't find a trade from 8 to 10 a.m., I would avoid trading for that entire day. Now, finally, we got to what you guys came here for, how to place the fucking trade. The first thing that we are looking for is our key levels. We are going to mark these out on the chart. The first thing that we're waiting for is for price to hit a key level. When price hits a key level, whether it's a 1 hour high, 4 hour high, 1 hour low, 4 hour low, a London sessions high, London sessions low, Asian sessions high, Asian sessions low, previous days high, previous day low, whatever it may be, maybe a 1 hour fair value gap, maybe a 4 hour fair value gap, whatever it may be, we are waiting for price to hit these key levels. Then following that, we are going to scale down to the 5-minute time frame, and we are going to wait for a confirmation confluence. So, and I'm going to show you guys this on the chart, but we're going to scale down to the 5-minute time frame. We wait for our confirmation confluence, whether that be a 5-minute break of structure, a 5-minute inverse fair value gap, or a 5-minute SMT divergence. Once that happens, are we entering? No, because that just means, okay, the trend has shifted, but we want to know for sure. And let me draw this out for you guys. So let's say we have our key level here, and let's just say we want to take a short trade, and we push into our key level to the upside. Boom. And then we get a 5-minute break of structure. So this is where we're at right now. We're on the 5-minute. The 5 minutes in an uptrend up to that key level, obviously, right? Because it needs to move up to get to that key level. And then we get a 5-minute break of structure. After that, what's next in our process? We're looking for either a 5-minute fair value gap, 5-minute order block, 5-minute breaker block, or 5-minute equilibrium for price to retrace into. Once price goes into one of those confluences, we're going down to the 1-minute time frame. So that's literally just right when price goes into fair value gap, order block, breaker block, whatever it may be, we're going down into the 1 minute now. When we make that 5-minute retrace up, at least in this case, up, typically there's going to be a 1-minute uptrend formed, leading into this confluence, because 5-minute retrace up, even if the 5-minute time frame is in a downtrend, the 1 minute can be in an uptrend, giving us that retrace into that confluence. Because we're in an uptrend on the 1 minute, in order to wait for confirmation, because we're in this confluence that we're going to go down, what do we wait for? We wait for a trend shift on the 1 minute. So whether that be an inverse fair value gap or a break of structure on the 1 minute, we wait for that to happen and then we enter. Our stop loss is placed above or below, again, depending on if you're buying or selling, where the trade idea is invalidated or wrong. So let's say I take this trade off of this fair value gap. Where am I going to want to put my stop loss? Above the fair value gap, because that's what my trade idea is based off of. It's based off of that this fair value gap is providing a continuation confluence for price to keep going down. And if price pushes past that fair value gap, then my trade idea was wrong. Where are we looking to take profit? Well, just like how we marked out key levels to the upside up here, we're also going to have key levels to the downside. We want to mark out every single key level. So there might be a 1 hour fair value gap down here. There might be a 4 hour low down here. There might be London session low right here. Those are going to be our take profits. We are going to look for price to go down into those other key levels. And why are we looking to take profit at those key levels? Because they have a high probability for price to reverse back up. Or at least in this trade's case. This trade, we were taking a short trade. Okay, so I know all that sounds crazy. I know that sounds a bit confusing, but we're gonna go ahead and try and apply this now. I highly recommend you guys write this down in your notes and drill through this as many times as possible on the chart, okay? Let's go ahead and show the example from yesterday. Okay, so let's go back to our list. Key levels, where do we mark them out? 1 hour, 4 hour, okay? We're looking for highs and lows on the 1 hour and the 4 hour and fair value gaps on the 1 hour and 4 hour. On top of that, we are also looking for session highs and session lows. Now, if you guys forgot from the beginning of this video, when do the sessions start? That's something that I want to mention here. Well, London session starts at 3 a.m. Eastern time, and Asian session starts at 1800 Eastern time. So let's go ahead and mark out our session levels first for this day. We have Asian session highs. We have Asian session lows. London session highs. London session lows. Okay. This is Asian session. Where's the highest point that Asian session got to? Right here. Where's the lowest point that Asian session got to? Right here. This is London session. Where's the highest point that London session got to? Right here. Where's the lowest point that London session got to? Right here. Now, if we can see that Asian session's low has already been pushed past, we no longer care about it because that's no longer valid as a draw on liquidity. Remember, we're marking these out as draws on liquidity. So now that we've marked out our session highs and session lows, let's go ahead and mark out our 4 hour highs and 4 hour lows. So we actually don't have any 4 hour highs and 4 hour lows for us to mark out besides this one right here that was already marked out, which it was Asian sessions high. We do have a 4 hour fair value gap right here, but this was already filled in, okay, and had already been reacted off of, so we no longer care about that. We have this 4 hour low right here, but it's already been pushed past, so we don't care about it. So there's really no fair value gaps and no lows or highs on the 4 hour that I really want to care about. You're probably saying, what about this high? Well, price isn't going to move all the way up there and take out this high. We just have to know and understand if this is where price is opening, it's not going to move all the way up here and move 2.7% in a day. And those are small things that you guys will pick up as time goes on. Okay, now let's mark out our 1 hour confluences. Well, we have a 1 hour high right here. We have a 1 hour low right here, but it gets taken out before market even opens at 9:30. So I'm going to go ahead and delete that. We have this 1 hour low right here, move down, then a move up. And this is actually this is actually London sessions low. So we don't have to mark that out because it's already been marked. And really the only thing that we have left here is this 1 hour fair value gap. So that's how I mark out my key levels. We marked out every single one of our key levels for the day. Awesome. So we have these Asian session highs, these London session highs, this 1 hour high, this 1 hour fair value gap, and these London session lows. Pretty solid. So now that we've marked out our key levels, what's next? We're looking for our times to trade. So I'm looking to trade from 9:50 to 10:30. That's when I'm willing to be able to place my trades. Okay? So cool. Let's go ahead and mark that out on the chart. 9:50 to 10:30. Boom. Cool. Now I know all of this is super overwhelming, but trust me, we're almost there. We've marked out our key levels. We marked out the times that we're willing to trade. And most of the time I don't even have these lines on the chart. I only have the session lines on the chart, but just here, I'll get rid of the 10:30 line because we don't really need that. But this is typically when I'm looking to take trades. Okay. Now that we have all this marked out, let's go through our step by step. The first thing that we need to wait for price to do is to go into a key level. Okay. So market opens on this candlestick right here, right? We push down and we actually take out these London session lows. So cool, key level got hit, but then we don't see a break of structure on the 5 minute. We don't see an inverse for value gap on the 5 minute. We don't see anything. We actually push back, we push into this 1 hour key level. And then this was the example of the SMT that I showed you. So off of this, no SMT divergence, no break of structure, no inverse for value gap on the 5 minute time frame. We don't break structure to the upside. We don't get an inverse for value gap, and we don't get an SMT divergence. However, what we do get is this 1 hour fair value gap that gets filled. And then what did we have? An SMT divergence. So we entered into a key level. We got our confirmation confluence. Our confirmation confluence was this SMT divergence. We're looking to take the trade on NASDAQ. So now, what are we looking for? Well, we're looking for either equilibrium to get hit. We are looking for fair value gap, looking for order block, looking for breaker block. Okay. Now, this one is actually kind of a weird situation here. So where is the order block and where is the breaker block? Well, we break structure to the downside right here. And we actually maintain the bearish structure, right? Prior to this, we were in an uptrend. We break structure right here. We don't break structure back to the upside. So we're still in bearish structure here. So this move up is technically a fill of equilibrium in a sense. Okay, I know that sounds like really ridiculous and whatever, but this move up is a confluence getting hit, not only in the SMT divergence, but because we were still in this downtrend, because most of the time when we get an SMT divergence, or at least a bearish SMT divergence, we're in an uptrend, right? But in this case, we were already in a downtrend. So this move up was not only our confirmation confluence, but also our continuation confluence. So following that, I'm like, okay, cool. Again, remember, the only time that I'm willing to trade is at 950. So we make this move up, make that SMT divergence and hit equilibrium and actually go far past equilibrium. And we also go into this order block. And so this right here is the order block on the 5 minute. And this right here is the breaker block. Come on the 5 minute. This move down is the breaker and this move up is the order block. We push into both of those and we actually go above both of those. And that was like the example on the order block part where I was saying, like, if we do go above the order block, it's not touching into the order block. It's actually an SMT. That's exactly what this is. And then we get a 1 minute break of structure right here. So you're probably saying, well, this is when you enter, right? No. Could we have entered right here? Sure. On this candlestick closure underneath here. Not only do we get a 1 minute break of structure to the downside on this candle closure, but we also get a inverse fair value gap right here. But it's not 950 yet. So I just have to sit on my hands and wait. When 950 finally hits, we're actually back in an uptrend on the 1 minute. And I'm not willing to take that trade just yet until we get what? A break of structure back down to the downside on the 1 minute or an inverse fair value gap to the downside on the 1 minute. We get that actually right at 150 or at 950. We get an inverse fair value gap right here. Right when this candle closes, boom, 950 opens. That is when I'm going to want to be taking my short position. Okay. My stop loss, I can either put it right above this inverse fair value gap. I can put it above these highs, wherever your trade idea gets invalidated. So this trade, I'm taking it off of this inverse fair value gap. Maybe I just put it right above the inverse fair value gap. And then targeting, well, we look at our key levels. We have this right here, boom. That's a 1 to 1.7 risk to reward ratio. So if you go in with $100, you're making $170 or $171 on this trade. Or if you go in with $1,000 or risk $1,000, you're making $1,710. Okay. Now, is this the one and only take profit that we need? So when I showed you guys on Trade Locker how there's multiple partial closes, that how you can take profits at certain points, it's the same thing with this. Is this a good trade? Yes, for sure. But could we potentially see price go even lower? Yeah, for sure. So that's when we can go and look to the left a bit, because we don't have anything in recent price data that we can use for take profits. So this is when we can go over here and look, and we can see, okay, well, this is a 4-hour low. This is a draw on liquidity on the high time frame, so it's a key level. This is a 4-hour low, so this is a draw on liquidity on the high time frame. This is a key level. This is a 4-hour low. This is a draw on liquidity, a key level on the high time frame. All of those are able to be take profits. And look at that. Price goes and hits every single one of them and respects it to a T. Oh, look how cool this is. Respects it to a T, and then following that, what does price do? An inverse fair value gap off of a key level on the 5-minute, followed by a retracement down into what is this, an order block, followed by a move up. You enter off that, stops underneath these lows. What happens? Boom, price moves up right after that. This shit is, it's so beautiful, man. Thank God for trading. Thank God for trading. It's so beautiful. Okay, I know that was super overwhelming and a lot of information. So again, let's just go through this slowly but surely. We marked out our key levels. Our key levels are 1-hour highs, 4-hour highs, 1-hour fair value gaps, 4-hour fair value gaps, and session highs and session lows. Session highs and session lows are important draws on liquidity, because when a new session starts, there are new traders and new smart money, new market makers, new algorithms that are being applied to the market. So when these new market movers come into the market, previous algorithms that were on the market, they stop. Okay? New money comes into the market and says, I want price to do this. So what are they going to do? They are going to manipulate the previous session, take out all the previous traders from the past session, and then make price go in the way that it wants to go. We can visually see this on this day perfectly. These London session lows, we see price, boom. Immediately, we take out these London session lows. Goodbye, London session traders. But on top of that, we have these London session highs and these Asian session highs. What does price do right after it takes out those London session lows? Boom, another leg of manipulation. We take out London session traders and we take out Asian session traders. Something that I want to show you guys, specifically for my Forex people and how this applies to you guys. Look here, it's the same thing with London session and Asian session. We have Asian session highs, Asian session lows. Look, right when London session opens, we immediately manipulate the Asian session lows and then get legs up. I'm telling you, bro, this market, there is a rhyme and a reason to why and how it moves. And you guys are slowly but surely going to get the hang of this. Okay, let's do another example. Okay, so for this next example, it is literally the following day. So we just came from Tuesday's price action. We are now going to Monday's price action. So this is Monday's price action on March 3rd, 2025. What are we going to do? Mark out our key levels. We'll start with the session highs. So do this on the hourly. It'll be a little bit easier. Bless me. London session highs, London session lows, Asian session highs, Asian session lows. Okay, now Sorry, I kind of sped through that. But again, this is London session. Boom. From 3 to 9:30, or actually it's 3 to 8:30. Again, because New York pre-market opens at 8:30. So again, if like, let's say 8:30, the 8:30 high was higher than this, that wouldn't count. We would look for the high that's prior to 8:30. So technically we're looking for London session highs and lows before this point. It's only when we're trading indexes. And for Forex, your market open is going to be at 8. So I know that's really confusing. I know we literally have like 3 different market opens, but when we're marking out London session highs and lows for New York Stock Exchange on indexes, we are looking for them before 8:30, okay? And then when we're looking for London session highs and lows for Forex, we are looking for them before 8, okay? So we have London session high, Asian session high. We can go ahead and disregard Asian session high. Why? Because London session has already pushed above it. So the key level has already been pushed through and there was no reaction off of it. Then we have London session low and Asian session low. Okay, let's look at our 4-hour. We have this bearish for value gap, but it already got disrespected. So we'll go ahead and get rid of that. We have this 4-hour high, which was the Asian session high, but we already pushed above that, so we can go ahead and disregard that. We have this 4-hour high, which is, you know, a little bit close to London session high, so we might as well mark it. We also have this 4-hour fair value gap all the way up here, but I don't really see much use in marking that out because it's above 2 highs, and if market really wants to push up there, then we can mark it as the market starts to push. We have this 4-hour fair value gap right here. Now that's pretty much everything on the 4-hour. Let's go down to the 1-hour. We have a 1-hour low right here. We have another 1-hour low right here. And then we have, this is the 4-hour fair value gap, which is overlapping with this 1-hour fair value gap. And then last but not least, we have this tiny little 1-hour fair value gap right here. I don't really bother with marking out these hourly lows just because they're so far down from where market is going to be opening at. Might as well disregard them. Even though price did end up going all the way down there, I'm going to disregard them because I know my pre-market self would completely disregard these things. So let's go through our steps. Again, when are we looking to trade? At 9:50. So we'll go ahead and put that on there. Let's do the same thing for the S&P 500 before we forget. The S&P 500, London session highs right here. London session lows right here. Asian session highs right here. Asian session lows right here. We can go ahead and disregard Asian session highs because London session had already moved past them without a reaction. And then let's go into the 4-hour to see if we see anything. We have a 4-hour fair value gap right here. Awesome draw on liquidity or awesome pull. We have this 4-hour high right here. See, that's something that I'm willing to mark out. We also have this 4-hour high up here, but there's no reason to mark it. It's pretty far from where market is going to be opening at. And if price decides to push all the way up there, then we can go ahead and mark it when the time comes. So we'll do this on NASDAQ just because this was the trade that I took. Market opens at 9:30. We push above London session highs. And what do we end up making? An SMT divergence. Again, this time it's a bearish SMT divergence, or the past one was a bearish SMT divergence as well. Sorry. SMT divergence, how do we know there's an SMT divergence? Because on the S&P 500, when market opens, London session highs. Do we push above London session highs? No, we make a lower high. So what index am I going to be looking at for today's trading day? NASDAQ, because NASDAQ is the lagging index. The S&P 500 is telling the future that, hey, we're going to go down. So now that we get, boom, key level pushed in, a confirmation confluence, and not to mention we get a 5-minute break of structure to the downside right here as well. So technically 2 confirmation confluences as if we needed more. What are we looking for? We're looking for fair value gaps, order blocks, and breaker blocks now on the 5-minute. This blue candle right here is our order block. These 2 down black candles are our breaker block. Equilibrium would literally have to be drawn from this high all the way down to this low, but that's not happening because we're trying to take our trade right the freak now. What's the last confluence that we have? Fair value gap. So we don't hit the order block. We don't hit the breaker block. Equilibrium, you know, it's going to be all the way down here. But what do? We end up filling in this fair value gap. We see price push into this fair value gap. Scale down. We break 1 minute structure to the upside to fill in this 5 minute confluence. So what are we waiting for? Either a 1 minute break of structure or a 1 minute inverse fair value gap. We have the 1 minute low right here and the fair value gap right here that we're waiting for it to be inverse. Both of them happen at the same time on this candlestick closure underneath this gap and underneath this low. We can go ahead and enter into a short position. We can either put our stops above this high or above the inverse fair value gap. Whatever you guys see fit, whatever you guys want, whatever you guys took the trade off of. Target our other key levels that we had. These are back-to-back days within the market where I just went step by step showing you guys the exact strategy that I just laid out in front of you and how you guys can take winning trades doing that. Back-to-back days, Monday and Tuesday, and I took both of these trades, and you guys can watch the trade recaps on them. I took both of these trades. We go down, we take out London session low, we take out this 1 hour low, we take out Asian session low, and then we go down to fill in this fair value gap, and we fill it completely actually. And then would you look at that? We take out key levels and then get a mini reversal off of it. If you thought day trading was a lie, if you thought day trading was a scam, I hate to break it to you. I just proved you fucking wrong. And I'm going to keep proving you guys wrong every single day with my trade recaps. Obviously, I make mistakes here and there. I am not perfect. Nobody's perfect in the market. Okay? I take losses all the time. That's just part of the day trading game. But that is how you guys can execute trades on a daily basis following that step by step. Is it systematic? No, because it's different confluences every day, right? On Tuesday, the day prior to this, we didn't have a fair value gap. What did we have? We had equilibrium. This day, we have a fair value gap. Yes, both of them were off, whatever, high time frame liquidity, or sorry, session liquidity sweeps with SMT divergence, but some days there might not be an SMT divergence. There might just be a regular liquidity sweep and then a 5 minute break structure to the downside and then an order block getting filled. And then it's a 1 minute inverse for value gap entry. Okay. That's why we have to be fluent. And that's why I asked you guys to, make sure we know and understand these confluences before getting into this. Because if you guys don't understand these, then you guys are going to miss out on opportunities from the market. But once you guys understand these, holy smokes, you guys are going to be able to find opportunity from the market pretty much every single day. And that is how I would approach day trading, okay, and actually executing. Now, like I promised and like I told you guys, that's not everything. That's just one piece of the puzzle. And I'm kind of shooting myself in the foot here because I know I'm going to have to make this video longer, but I'm doing you guys a huge favor by going over psychology and by going over risk management. And those are two super key, super important parts of day trading that you guys just really have to know in order to be a profitable trader. It's literally a non-negotiable. So if you guys think that you're set for life because you have TJR strategy, I advise you to stick around because we need to know about how to manage our risk within the markets and also how to manage our heads. And I know that sounds dumb, but it's one of the most powerful tools. And also, it's going to be one of the hardest things for you guys to get over within your own trading is psychology and the effect that it has on your own trading. So with that being said, let's get into how to figure out how much we are going to be risking per trade. Okay, so this is going to be risk management explained. And I'm going to try and do this the best of my abilities, understanding that every single trader is different. Every single person's win rate is going to be different. Every single person's average risk to reward is going to be different. So when we're going over this, first of all, what even is risk to reward? You guys saw me using these tools when I was showing you guys entering into trades. So this is a short trade, for example. So up here, I kind of use this to show where I want my trade to go, right? The top of this gray box is where my stop loss is. The bottom of this blue box is where my take profit is. The middle is where I enter at. So if my stop loss is up here, and my take profit is right, let's put this right, perfect. Okay, right here, for example. This is a 1 to 2.02 risk to reward ratio. How do I know that? Because this is telling me. So again, we know where to put our stop losses and we know where to put our take profits. So that's already sorted out, right? We already taught you guys about that in the chart portion. We put our stop loss above, or if we're taking a buy position, below where our trade idea gets invalidated. Matter of fact, hold on. I need to show you guys a buy. I just realized I need to show you guys a buy position example really quick. Let me just speed run and try and find a buy position example. Okay, buy position example, speed run. Market open. We won't fully speed run this. We'll do it for your guys' sake because I love you guys. No other mentor is willing to get on here for fucking hours on end. London session highs. London session lows. Asian session. Asian session highs, we can go ahead and disregard these because the London session already moved past them with no reaction. Asian session lows. Okay. Not only that. Let's look at our hourly. We have an hourly low right here. We have an hourly fair value gap right here, but it already got filled and got a reaction off of it, so we can go ahead and disregard this. This one, however, has not been filled yet. I mean, it gets filled, but hasn't been filled yet. And then we have hourly highs all the way up here, but knowing that market opens down here, is price really going to jump all the way up here to take out liquidity? Probably not. So I know I didn't go onto the 4 hour, but we don't need to because the entries are here. So let's get into this. Market opens. What do? We take out our key levels. London session lows. We take these out. We take out hourly lows. And we take out these Asian session lows. What are we looking for next? We want to look at the time that we're going to trade. 950. Boom. Okay. We're looking at current price action. We have this potential bearish fair value gap. This bearish fair value gap that could potentially get inversed. Do we inverse it the first time? No, but do we inverse it the second time? Yes, we get an inverse right here. Awesome. Now, what are we looking for? 5-minute time frame confluence. So we end up continuing higher, and you're probably freaking out. And we're going to talk about this in the psychology class soon. Don't worry, soon. But you guys are going to get fear of missing out because we're getting so close to our take profit. We're getting so close to London session highs. Like, I just want to take this trade. You got to be patient. Patience. You got to be super patient. We have to wait until we get a 5-minute retrace. Boom, 5-minute retrace. Where's our order block? This move down. This is the move down that caused what? The liquidity sweep. Where's our breaker block? Boom, this is our breaker block. It comes into not only our order block, our breaker block. There's no fair value gaps, but it also comes into equilibrium. Awesome. So it hits 3 confluences. We can choose from whatever the fuck confluence we want. It's giving us a whole bunch of options. This is the retrace. What are we waiting for? Either a 1-minute break of structure or a 1-minute inverse fair value gap. We get both. Ideally, we enter on the 1-minute inverse fair value gap because that gives us a better entry. You can go ahead and put your stop loss either underneath these lows or underneath these lows, whatever it may be. I would probably put it just a little bit underneath these lows because this is where our trade idea is off this inverse fair value gap. And there's no reason to put your stop loss so tight right here. Okay, might as well just have it underneath these lows. 1 to 1.78 risk to reward ratio. Boom. There's another example for you guys. Banger. Long position. But anyways, what I was saying, let's look at this. Now that we have this in front of us, this is our entry. This is our stop loss. Our stop loss is always going to be a set fixed loss amount. Okay? Our take profits are going to be what's variable. So our stop loss, we're always going to be losing the same, like ideally the same dollar amount per trade. Ideally. Our take profits are what is variable. So again, if my take profit's all the way up here, then we have a 1 to 3.22 risk to reward ratio. So what even is a risk to reward ratio in the first place? It means for every 1 that I risk, I'm getting X in return. Or whatever it says right here in return. So if I risk $1,000 and I win this trade and it hits take profit, then I will make $3,220. If I risk $100 on this trade, I will make $322. If I risk $1 on this trade, I will make $3.22. If this is my take profit, if I risk $100, I make $178. You guys get the gist of it by now. That is what risk to reward is. Ideally, we are only taking risk to rewards that are 1-to-1 and higher. Because at that point in time, if we have a lower risk to reward ratio than 1-to-1, then the odds are against us. Meaning we're risking more than we're about to win. And there's no reason to take that trade. And there's going to be times where you guys just straight up, you guys have a bad risk to reward ratio where your stop loss, where your trade idea gets invalidated all the way down here and your take profit is going to be right here. Is this a 1-to-1 risk to reward ratio? No. So are you going to take this trade? No. Now that we understand that, let's talk about this. There are two types of traders. Traders with a high risk to reward, meaning they look for trades like this, a 1-to-8.65 risk to reward ratio, or a 1-to-10 risk to reward ratio, meaning for every one that they risk, they get 10 back. But those traders have a low win rate. So in turn, they have a low win rate, meaning they probably only win 30% of their trades. But if on those wins, they're making way more than what they're losing per trade, they're still profitable traders. But because they have such a low win rate, they are going to have to use lower risk. So they're going to have to risk less of their account per trade in order to just keep their account alive, okay? Because they know, hey, I could potentially go on a losing streak. I could potentially lose 70 trades in a row out of 100 before I get my one win, or before I get whatever, 30 wins in a row to make it all back and be profitable. And they have to allocate for that. So they have to use lower risk. Or you can be on the other side of the spectrum, which is the trader that I am, where I get a low risk to reward. So most of the time, my risk to reward is anywhere from like 1 to 1.5, 1 to 2, 1 to 3, 1 to 4 sometimes if it's a crazy trade, with a high win rate. I have a high win rate. I win a lot of the trades that I take, but I have a low risk to reward. But because I have a high win rate, but a lower risk to reward, in order to get more out of my trades, I can risk a little bit more. Does that mean I go crazy on the risk? No. Does that mean I'm risking 10% of my account per trade? Absolutely not. Because that means I only have 10 shots before my account is gone. 10% risk trades means 100% of your account is gone if you lose all of them. And there are times where you will lose 10 trades in a row. I have been there before. It sucks, but you will get out of it. Losing streaks happen all the time, especially like no matter what. If you're profitable traders, it's just like hot and cold streaks. Sometimes you're just hitting like crazy. Right now, I'm hitting like crazy. I'm up 40K on the week, but I just know for a fact, eventually this win streak, it's going to be done and I'm probably going to lose some money, but that's just trading for you. You have to know and understand we are going to lose. So by knowing and understand we are going to lose, we have to lower our risk a little bit. So what does lower risk versus higher risk look like? Me personally, I'm risking anywhere from 1 to 3% of my account per trade. That's for higher risk traders that have a high win rate and a low risk reward. For the high risk reward and the lower win rate people, you guys are probably going to want to be risking 0.25 to 1% of your total account size per trade. So what does that mean? That means if I have a $100 account, if I'm a higher risk person, I'm going to be risking $1 to $3 per trade. If I have $100 in my account and I'm a lower risk trader, I'm going to be risking 25 cents to $1 per trade. I know, it doesn't sound really that cool and really that amazing, right? When you're only able to risk $1 with $100 account. Well, that's the reality of trading. It's not a get rich quick scheme. I already told you guys that. It's slow and steady. Slow and steady wins the race in trading. You keep stacking wins with minimal losses, and eventually you get freaking paid. And there's also a whole bunch of different tools that I won't cover in this video that can help assist with you guys getting capital and leveraging your capital. Like the brokerage that I showed you guys, that's a really good place to start, okay, in terms of leveraging your own capital. So this is how I would be risking based on whatever type of trader you are. And if you're saying, well, how do I know what type of trader I am? Well, you simply just look at these statistics. And you're saying, well, how do I find these statistics? You got to journal your trades. So that leads me into the next thing, which is going to help us with psychology, and which is a perfect merger over to the very last skill set that we need to learn in order to be a profitable trader. Yes, I know you're seeing the videos being close to being done. Don't worry, you're almost there. You're almost there. I promise you, you're almost there. Okay, you're almost freaking there. So you want to figure out what's my average risk reward, what's my average win rate. You got to journal your trades. And this is going to be super helpful when it comes to psychology and managing your emotions within the market. And this is also going to be super helpful when trying to figure this out. So what are the pieces of data that you guys want to be tracking in your trading journal? The first thing, the amount of game that I'm dropping on this video is actually fucked. It's actually insane how in depth I'm going in on this, bro. I haven't done this in a while. I haven't done I actually don't think I've ever done this full comprehensive A to Z trading in one single video before. I don't think I've ever done this. This is by far the longest video that I've dropped. Crazy amount of game going on right now. Be blessed. It's actually nuts. How I would have paid, bro. I would have paid $2,000 to like $3,000 for just this video back when I was learning how to trade. Thank God I am my like old unprofitable self's favorite mentor. Like every single video that I make on YouTube is like for my old unprofitable self, so he can turn profitable, and he is you guys. So shout out old unprofitable Tyler. Anyways, in my trade journal, what am I going to mark down? Whether I won or whether I lost. The next thing. Whoa, chill. What pair? He says, what? What pair? What pair did you trade on? What was your bias? So, what key levels did you think price was going to go into? Why did you take the trade? What were your confluences? Okay, we need to understand why you took the trade. What pair was it? Was it Euro USD? Was it gold? Was it the S&P 500? Was it NASDAQ? Did you win? Did you lose? What was your bias on the trade? What was your risk to reward? What was your risk to reward and post-nut clarity? No, this is not a joke. You think I'm joking, it's not a joke. I'm telling you right now. You think I'm joking, it's not a joke. You will find the urge to edge during pre-market. You will find the urge. You will find yourself grabbing your shit as market is opening, slowly stroking, slowly gaining an erection. And after you placed your trade, you realize it's all over the screen and you have post-nut clarity. You have post-trade clarity. And you need to write down what your post-trade clarity is. Just like how in those moments, when at the time you're hammered, you're blackout drunk, and you see a whale, and you gotta put up a buzzer beater shot. You take her home and you bet, it just, you bang her. You fuck. And the second that you look up from that excruciating nut, what have I done? I hit that raw? There's no way. You will have those exact same thoughts with trades. You will take a horrific trade and you will put real life money on it. because you've convinced yourself that this is a good trade, and then boom, you nut. Stop loss gets hit. Post-trade clarity hits. The money's gone. The nut is gone. The thrill, the urge of taking a trade is gone. And the reality, it sets in. What have you done? You need to journal your post-trade, post-nut clarity. There are going to be some trades where you win. You piped a bad bitch that night. Ugh. Ain't shit to talk about. Don't even have to go over the post game analysis, coach. I got in and I got out. I wrapped up, no STD, clean. We did what we needed to do. Get that nut off, and boom, it's wraps. Clean product. Post nut clarity, W in the chat. Should and would do it again. That's a W trade. But at the beginning of the dating scene, you're fucking everything, okay? The post-nut clarities are gonna hit hard. Just like your post-trade clarities are gonna hit real fucking hard for you guys, okay? You guys are gonna be like, what the fuck was I thinking on this trade? Because your emotions got the best of you, your psychology, you're all fucked up. Because you're so excited to take a trade. You're so excited to just get your nut off. You're so horny. And you don't think about what you're doing in the moment until you're an experienced Rizzler and you get into the bar and you're like, fat bitch, chop bitch, ugly bitch, maybe a 35-year-old bitch. Don't want them. Dime piece in the corner, the only one in the bar that's attractive. That's the trade that I want to take. And you're maneuvering, ducking. Fat bitches, sweaty bitches, ugly bitches, chopped bitches. Get them away. I don't want to see them. Because you have your eyes on the prize. And that's what being a profitable trader is about. It's about sifting, weaving through the fat bitches and hitting that winning trade. It's about sifting and weaving through all the bad trades, not taking them, not letting your horniness get the best of you, tunnel vision on the bad bitch, tunnel vision on the good trade, and taking that trade every single time. But as we know, profitable traders, we have our flaws. Sometimes we take bad trades. Sometimes we got to get that nut off. And then we know exactly the mistakes that we made. And we write them down in our post-trade clarity. And that is how you journal your trades. Okay? We need to journal our trades in order to understand our emotions, in order to understand our win rate, and also to understand our risk to reward. Okay? Because over time, you guys are going to be able to figure out what your average win rate is and what your average risk to reward is. And you're also going to be figuring out, damn, every time I take a trade off of an order cock and equilibrium or whatever, every time I take a trade like this, I fucking lose. But every time I take a trade off of this, I win. It must not be a coincidence. Write it down, take a note of it, and don't make the same mistake again. Now, we have to get into the very last piece of being a profitable trader, which is psychology. And it's by far probably one of at least for me, it was the hardest concept to get over. And it was by far the hardest skill to grow within my trading. And it's one of the hardest skills to grow in life. So before you guys just think, okay, I'm said and done, I know risk management, I know strategy. No, you guys don't know it all yet, because trust me, I knew risk management, I knew strategy. But the one thing that took forever for me to get over within my trading career was psychology. So I don't, like me personally, I can't let you guys go yet. I know this video has been really fucking long, and thank you guys for sticking around, okay? But I really do need you guys to stay just a little bit longer so I can grill you guys on your own psychology right now. You guys have horrible psychology right now, and I can tell it, even without being day traders, you guys have horrible psychology, okay? And it is my goal to fix that, or at least give you guys the tools to hopefully get over that really shitty psychology, okay? So let's get into this. All right, no more chart work, just psychology work. And this is probably going to be one of either the most important lessons, or you guys completely skip this lesson and you guys don't learn shit and you guys just you just don't make it in day trading, just plain and simple. So I guess what I'll do is I'll kind of first paint the picture of where I was before trading and kind of like how I built myself up to be where I'm at now. So when I first started day trading, for me, I was very like, fuck the system. I mean, as you guys saw from that little liquidity sweep mention on the monthly time frame, you know, I'm very against the system. That's just who I am. I hate being told what to do. I just hate having, like, my biggest pet peeve was my parents telling me I couldn't do something or telling me what to do and me being pissed off. Like, why do I have to do this shit? I don't want to do this shit. I want to do what I want to do. And to this day, that's exactly how I am. And that's why I think trading and then also crypto enticed me, was because this is such a fuck the system game. It's so like, you know, nobody can tell me nothing because I'm making money in my own house on my own. There's no other variables. And the only person to blame for a losing trade and the only person to blame for losing money is myself. So there's really no other factors to look towards or to point towards when a trade is lost besides you should have done better. You did something wrong. And I love that about trading, where I was like, okay, this is awesome. So the only person that matters in this is myself. That sounds a little bit narcissistic, but you kind of do have to think that way, where it's like, okay, this is one, I understood that it was the scalability and the leverage that this skill was going to be able to give me. I saw that and I understood if I can learn this skill, I can make just infinite amounts of money. And the only thing that is limiting myself is me. So with that knowledge, I was like, okay, all that I have to do is work on myself now. Work on what is required. So I need to understand how this strategy shit works. What causes the markets to move? And it took me a long time to figure that out. Luckily for you guys have a mentor like me that's just given everything to you guys in one freaking video. So you're welcome. But back then I didn't have that. I was going from YouTube channel to YouTube channel to YouTube channel, trying to figure out, like, first of all, is this dude even fucking legit? Like, can I trust this person? Because that's just the day and age that we live in. And then second of all, not only can I trust this person, but is what they are teaching going to work for me? And do they have everything necessary on their YouTube channel for me to actually learn how to do this shit? And it was just scrounging and hours and hours and hours of fucking watching YouTube videos. And I even read books. I read this book called Market Wizards. I read the book Intelligent Investor by Benjamin Graham. Okay, I was reading all these different types of books. I was watching all these videos, and I probably spent I've actually vividly remember the week that I got into day trading. I watched probably like 30 hours worth of YouTube. So that's like essentially full-time. That's like a full-time job of YouTube of me learning how to day trade. And that was just the first week of me getting into it. It went way higher after that. But I just remember like looking back at like how like all the videos that I watched, and I was like, damn, this is a lot. I was just that infatuated with it. So after getting all the information, and at the time there was really nobody that was talking about psychology and mental discipline and emotional discipline within the markets, I was like, awesome, I know how to trade. At the time, I thought I knew how to trade this thing. And I went in, I deposited some money, and what happened? I lost all of it within the first day. And you're probably saying, how is that even possible? Well, I thought I knew how to trade, and I tried to take like literally 10 to 30 different trades in a single day. And as you guys know now, that's not smart. You guys should only be taking like 1 or 2 trades in a day, because again, if we're risking 1 to 3% of our account per day, you know, how much does that even give us to work with? Not much, right? And also, if we're only trading from 9:50 to 10:30, you know, typically there's only one setup that's going to happen within that time. So I didn't have a mentor to tell me this stuff, and I was looking for trades 24/7 within the market. I was looking for trades during Asian session. I was looking for trades during London session. I was looking for trades during New York session. And I was like, what the fuck, man? Why is this not working? Why are things not going in my favor? I thought I did all this. I did all this research for nothing. This thing's not working. But I was still determined. I was like, I want this to work really bad because I know the potential that I can have in this. I was just going and going and going, and I just kept losing these trades. And then I figured out risk management, and I was like, okay, cool. I know how much I'm supposed to risk per day. So I wrote down, I even have my old notebook back when I was learning how to trade. And look at this, I have my trading plan written out right here. This is from way back in the day. I had all the days that I was willing to trade. You know, I look at this right here. Risk 1 to 3% max per trade. So I figured out risk management, okay? And I figured out this is like my strategy at the time. This is bullshit, by the way, so don't try and read the strategy and think it's good. But I was writing down all these things that were going to be helpful for me to potentially get me to the next level, because I really wanted this shit. I mean, as you can see, I was a little bit manic. You know, I'm saying calculate risk to reward before entering, set up a stop loss before entering. Don't move your stop loss back. I was struggling. I was moving my stop loss back because I was like, no, this trade has to go in my direction. And I was dealing with all of these emotions of greed, of fear, of overconfidence, of underconfidence. And it was just this back and forth of like euphoria, despair, euphoria, despair. I would hit a winning trade and I would be like, what the fuck? This is the greatest thing ever. I'm going to be a billionaire and I'm going to take 3 more trades. And then I lose the rest of those trades. And then I'm back to despair mode. And I'm like, man, I don't think this is going to work. And I'm sure if you guys have already been in trading for a little bit now, you guys have experienced these emotions before. And this was just this constant cycle. And it actually got to the point where I got pretty good at trading, where my strategy was pretty freaking solid. My strategy now is more advanced than what it was at the time when I was first turning profitable or like getting good at trading, but it was kind of a variation of what I just taught you guys, just a little bit, a lot worse actually, but it was a variation of this, of understanding the markets. And my risk management was on point to an extent. There would still be those times where emotions would get the best of me, but for the most part, I was like, okay, I understand where the market's going to go, like decently well, where like I can make pretty accurate predictions. And honestly, like my win rate was there. It was at like 60 to 70%. It was a pretty solid win rate. But my biggest issue, man, my biggest and worst issue was my emotions. My emotions just kept getting the best of me. And there was a specific time where this will it haunts me forever, but it made me the trader that I am today. I had $10,000 in a trading account, and I turned that $10,000 into $112,000 over the span of 2 fucking days. 2 days it took for me to go to $10,000 to $112,000. And I know every single one of you guys watching this video is like, holy shit, I can do that too. He's going to give me the secret to how I can do it. Guess what happened the very next day? I lost all of it. I lost every single dollar. The account balance said 0. And you're probably saying the account got hacked. The brokerage ran off with your money. Nope. I lost all of the money day trading. And it was because my emotions got the best of me. I was on this high rise of euphoria. I was thinking, man, life is good. I'm winning these trades. I keep making more and more money with every single trade that I take. I'm just going to keep increasing my risk because I can't stop winning until the winning stopped. That $112,000 would have changed my life like literally forever. But me losing that $112,000 changed my life even more than if I had kept that. And it was the lessons that losing that $112,000 did to me that turned me into the trader that I am now. And that was probably the worst period of life that I went through. That $10,000 was literally all the money that I had. And that loss caused me to go into severe depression. I tried to take my life. And I know there's a lot of you guys that are trying to get into day trading because you guys are not happy with your life right now. And I can tell you right now, I get emotional every single time that I talk about this. Literally, like I feel like it's just rising up, bro. Like I hate crying on camera and shit, and I've done it before, and Like sometimes I can't help it, but when I think back to this time, god damn, bro. When I think back to this time, I was in such a shitty situation and there was nobody there to help me. I had a bad relationship with my parents at the time. Didn't really have a good relationship with my siblings. I had no fucking friends. I was just like this nerd ass dude. At least like I just had this weird obsession with trading and I had nobody to fucking talk to. I had no money and I was struggling really fucking bad. And at that point in time, I was like, I hate my life so much. I just want my life to be over. And that was like, can't help myself from crying, bro, because goddamn, bro, like if that shit worked, like I don't do this. Bro, like I tried to take my life and I tried to take my life multiple times. And like I was in such a horrible place. I was in a horrible place mentally and I just like I felt like nobody was there for me. And like the one thing that I loved just kind of let me down, which was trading. And I quit trading for 3 months after that and like was just so depressed and was just in this like just huge period of like, what the fuck am I on this earth for? Like what the fuck am I doing? And oh man, like I literally remember exactly where I was sitting when all this shit was going through my head. Oh, I feel like such a bitch. Oh, I've already done this shit before, bro, in a video, and it's but I remember that exact position that I was sitting in when like all that shit was going through my head, and like I genuinely did not want to be on the earth anymore, and I hated my life, and I was just thinking like, man, like I just want to like figure out what the fuck I'm supposed to do. And luckily for me, like I had already been in crypto before and I had a decent amount of money in crypto, and like there was just like that 3 months was horrible. I attempted to take my life. I was in like debt. There was a point in time where I had negative $2,000 in my bank account, and I was literally like, bro, I was fucking door dashing, like just trying to pay off that debt. And I was looking up all these different fucking DoorDash hacks, like how to make the most amount of money on DoorDash. And I would, bro, like I literally didn't have a fucking life. I was donating fucking plasma and shit. Like, and I'm sure a lot of you guys are probably in that same exact position right now. And man, did life fucking suck at that point in time. But crypto started picking back up and I couldn't help but like look at the charts. And I was looking at the crypto charts and I was like, man, like, okay, yeah, like price is going up. I'm making some money that I had invested like a while ago. Like, okay, like things are kind of turning around. And then I started drawing some chart work up on the charts. And I'm like, man, like this is, it kind of like brought some energy back in me. And I was like starting to get happy again. And I was like, man, like, what if I can actually make this shit work? What if you can actually make this shit work? And that was just like the question that like just kept running through my head, bro. And again, I just like, these are just like core fucking memories in my head. Like I can like perfectly envision where I was sitting down when I was thinking these things. Like literally on my fucking trap ass iPad. And I'm marking this shit up. And I'm like, okay, fuck it. Like I gotta give this shit one more shot. And the biggest thing that losing that $112,000 gave me was I hit rock bottom, and I just learned like I never want to go back to that position ever again. I never want to go back to that headspace ever again. And I'm happy when I'm day trading. I'm happy when I'm learning about this. I'm happy when I'm doing it. I'm happy right now. I'm happy when I'm teaching it. I fucking love day trading Probably more than like literally any, I mean, like I would like to say my love of day trading is more than the majority of people's. I love those goddamn charts so much. They saved my life. And I just wanted to make this shit work. So I told myself, okay, I know what not to do now. I know not to be over risking. I know not to move my freaking stop loss. I know to set my stop loss before I enter. I know to risk 1 to 3% max per trade. Okay, and I know to journal every trade. And I mean, even right here, I review your losses, screenshot your trades before and after, and put it in the spreadsheet. Like I wrote all these things down, and that was like the turning point for me. Was just saying, okay, I really, really fucking want this shit to work. And I know a lot of you guys are probably in that position now. And you know, maybe you do have to hit rock bottom to get it through your heads of what you are supposed to do and what you're not supposed to do within the market, like I had to. But ideally, I went through all that suffering for you guys to learn from all the shit that I had to go through, because I didn't have a mentor like myself when I started day trading. And that's what I hope that I can be for you guys, like I was saying before. I'm like my unprofitable self's favorite mentor, because these videos would have hit so hard for him, and hopefully they're doing the same for you. So that was like the headspace that I was in, going from, I know strategy, I know risk management, but my psychology is fucked up, and it's causing me to take bad trades. It's causing me to over risk. It's causing me to move my stop loss. It's causing me to trade without a stop loss. What the fuck is wrong with me? And then I get smacked in the fucking face by life and by trading. The markets are unforgiving. They'll smack you in the face and they'll take everything that you have if you aren't on top of your shit. And I'm telling you this right the fuck now, because I literally tried to take my life because of what the markets did to me. More like what I did to myself, what my mental did to myself. So you guys hopefully don't have to go through that. And I'm going to lay out every single thing mentally that I wish I knew before it happened to me, so you guys don't have to go through that same pain and that same suffering. The first thing that I wish I did was just developing emotional discipline. And what does that even mean? We as humans are just emotional ass creatures. Okay? Typically when we act based off of emotion, it's the wrong decision. When we're acting based off of emotions, we're not acting based off of data. We're not acting based off of like the analytics and the data that is being given to us. We're acting based off of just the feeling that it's making us. If we're angry, we might punch someone. If we're sad, like whatever, we're gonna like be in a bad mood towards people. Okay? If we're greedy, we're going to extend our take profit. Okay, if we're fearful, we might not take that trade. And more often than not, when we listen to our emotions and when we act based off of our emotions, besides in relationships, it's a stupid ass decision. Or actually, no, I take that back. Even more so in relationships. We need to be acting based off of data and analytics. What is happening? What is in front of me? What has happened? And what should I do because of it? Not how am I feeling about this situation? Because how you're feeling is going to cause you to take the wrong action. How was I feeling after I lost $112,000 that would have changed my life? The actions that I took after that were very poor decisions and were emotional decisions, super emotional decisions. Versus if I just went based off the data and said, damn, you're still a young ass kid. You still understand this skill. You got knocked down. You can get back up. This isn't the end of the fucking world. You still got this, bro. I would have turned my shit around way quicker than the 3 months that it took for me to get up and get on the charts again. But I was making stupid, emotional ass decisions. And the same thing applies to trading. If we lose a trade, we can't get pissed off and then try and go make that money back immediately. No, we have to learn from our loss. and we have to, boom, take ourselves out of the market for that day, understand that losses happen in trading and they're okay. We should welcome losses because it's a lesson for us to learn. Learn from that lesson and never make it again. Learn from that mistake and never make it again. Oh, damn, I risked more than I should have. Okay, that's okay. Did I lose more money than I probably would have wanted? Yes, but that's okay. That's fine. It's a little bit more money than I would have liked to, but guess what? That's a learning experience. And I'm never going to let that happen again. And because I'm never going to let that happen to me again, that is going to cause me to make way more money than that loss cost me. If we're greedy, when we extend take profits, when we should have closed a trade position that should have hit our take profit, but we extended it because we wanted to make more money, and then boom, it hits our key level that we should have taken profit on, and price goes right back to your stop loss and you lose money. You just paid for a lesson, bro. You paid for a lesson in the market, and you can sit, you can cry, and you can immediately force yourself back into the market and you can look for another trade, or you can say, look, I need to understand that that was my one trade for the day. I risked what I said I was going to risk. I lost because I let my emotions get the best of me. I took actions based on my emotions because I'm emotionally attached to money. We have to emotionally detach ourselves from money. If we think about trading as I'm not looking to make money, but I'm just looking to predict price action on a daily basis with high probability, boom, you got it. That is how you become a profitable day trader. Not how can I make money today? Because if I go into the markets thinking, how can I make money today? I get into the markets, and if I lose money, then my goal hasn't been completed. And I'm going to keep trying until my goal has been completed. But what's that going to do? That's going to leave me in the fucking dirt. Because if I lose the first trade, then that means I have to go back and win a trade that's not only worth the loss of the first trade, but also more than that so I can make my end goal. And what is that next trade going to lead me to do? Probably lose more money. What's the trade after that going to do? Probably lose more money. And that's the exact lesson that I learned when I lost 6 fucking figures. So I'm telling you guys right now, don't let your emotions get the best of you. The emotions that you guys are going to deal with are fear, greed, euphoria, fucking despair. You guys are going to go through losing streaks and think, man, I can't get this shit. I need to change my strategy. Fuck no, you don't have to change your strategy. You need to put in more work. That's what you're lacking. You're lacking the work and the discipline to stick to the lessons that you already learned, and the mistakes that you keep making over and over and over and over and over and over and over again. The second that you guys can stop making the same mistakes over and over again, and the second that you guys have the emotional discipline to say fuck no to those lessons and fuck no to those mistakes, that's when you improve. That's when you crash through the brick wall, and that's when you get to the next level. There's mistakes and there's problems at the next level, just like I was telling you guys about. But trust me, those problems are the problems that you are going to want to deal with. I don't have to worry about the problem of being an unprofitable trader anymore. I have to worry about the problem of how much money am I going to risk on this day? How much money am I willing to lose on this day? Is it going to be $15,000? Is it going to be $25,000? Is it going to be $10,000? Is it going to be $5,000? And I think back to when I was an unprofitable day trader. Oh man, I would have loved to be dealing with those problems that I'm dealing with now. But you first have to overcome the problems at your level. And the problems that you guys are going to deal with is just these emotions, bro. They get the best of you. And I'm telling you, you probably don't know it yet, but you will when you get onto the charts and you take your first trade and you win and you get all amped up and you're like, man, I want to take another one. No, you can't take another one. You won on the day. You beat a market that 99% of people can't beat. Take your money and leave. You lost money on the day. Too bad, so sad. If you have a good win rate, if you have a good risk to reward ratio, you're net profitable. Why are you crying? Don't be butthurt. Don't try and make money every single day. Don't let your emotions get the best of you. Stick to your fucking trading plan. This is number 2. Number 1, emotional discipline. Learn to detach yourself from the money. Your goal isn't to make money in trading. Your goal is to be right about where price wants to go. If you can just be right about where price wants to go, boom, you're set for life if you have that skill. Next one is sticking to your trading plan. I just went over the exact trading plan that you guys should be following. If you guys can't stick to that, and if you guys are getting into trades before you guys should, boom, that's a discipline issue. Know where you're going to place your stop loss. Know where you're going to get in. Know where you're going to get out in both directions. If the trade starts going in the opposite direction that I think, I have to know exactly where I'm going to get out, and I have to place a stop loss with a price point of saying I am going to lose this amount of money right here, and that's where my trade idea gets invalidated. And if it gets hit, then there's no reason to even look for another trade because my idea is gone. My idea was wrong for the day. And the same thing, if you enter into a trade and your idea is right, you better fucking get paid for it. And you better not let your emotions get the best of you for you trying to make more. Stick to your trading plan. Next one is managing your fear and greed. A lot of you guys, it's funny because you guys won't deal with this on demo, but you guys will deal with this the second that you move to a live account. If you guys are profitable on demo, that's step one. Step two is going from profitable on demo to profitable on a live account. It's two different things because on demo, it's fake money. Who cares if you lose? Who cares if you win? But on a live account, that's your hard-earned money that you've been working your ass off for. So you care if you lose. You care if you win. But that's the problem. You can't care. You can't care if you win. You can't care if you lose. You have to be emotionless. And the problem is, if you care about when you lose, you're going to be fearful. It's going to lead to hesitation in the market. It's going to lead to missed opportunities. It's going to lead to you guys hovering over the buy button, but you're just freaking out because you're like, man, I don't want to lose this $100. And then boom, price goes in the direction that you wanted it to go and would have hit all your take profits. Or greed. You guys may get greedy. You guys win one trade and you're like, man, I'm the best at this. I'm going to take another one. Causes you to overtrade. Or you guys extend your take profit. Or you just remove your take profit. This trade's going up forever. No, it's not. I can promise you it is not going up forever. Take profits and get the fuck out of the market. The next thing that you guys need to do is to control your impulses. There are 3 fears that day traders go through within the markets. The fear of being wrong. So fearful of being wrong. That's what leads to hesitation and that's what leads to missed opportunities. The fear of losing money. That also leads to hesitation and that also leads to missed opportunities. And last but not least, fear of missing out. Fear of missing out is a huge one, especially in day trading. Let me try and get this shit through your heads. The market has been here for more years than I have been alive and more years than you have been alive. And there has been opportunities every single day to catch a trade that could change your life. Ideally, none of these trades change your life because then you're just shooting for the stars. Ideally, it's just multiple trades that gradually change your life, right? But every single day for the entirety of your guys' lives, has there been an opportunity within the market for you guys to execute and for you guys to make money on? Every single day, there has been opportunity. So what makes you think if you miss the trade today, if you missed that trade, if you missed out on that trade, what makes you think that you have to go and try and find another trade today because the market's just going to disappear tomorrow? You're never going to be able to make money ever again? Fuck no. Never have the fear of missing out. The market will be here forever. There's endless amounts of opportunities within this market. There's opportunities today. There's opportunities tomorrow. There's going to be opportunities months from now. There's going to be opportunities years from now. There's going to be opportunities lifetimes from now. So you stressing over one single trade that you missed, oh damn, every single step in my strategy or in every single step in TJR's strategy got hit, but I just didn't take the trade. So now I'm going to force myself to look for another trade because I just wish I took that trade. No, shut the fuck up and go home. You're done for the day. And you better wake up tomorrow morning ready to take that trade. Why didn't you take that trade in the first place? You were fearful. You were hesitant. Why did you hesitate? Fix that. Fix these things, and you will be a profitable trader. If you guys can handle losses like a pro and handle losses like a lesson, you guys will be profitable. I can promise you that. If you guys can lose money and be unfazed by that, knowing that wins are on your horizon, and knowing that, hey, as long as I keep good risk management, my account, it's not going to go down too crazy because I know I'm going to win trades in the future. I know that, hey, this little losing streak that I'm on right now, it's not going to last forever and I'm going to keep winning. Be able to accept losses and move the fuck on. You got to think in probabilities. No profitable day trader is hitting, 100% win rate. It's impossible. Nobody in the entire world has ever done that besides maybe one person who's taken one trade, won, and then left forever. But if we're talking about people who take trades on a daily basis, there's nobody that has 100% win rate. You have to be able to see losses as a lesson. You have to encourage losses. I like when I'm on a losing streak because it exposes my flaws. I'm like, damn, shouldn't have taken a trade here. Damn, shouldn't have done this. Shouldn't have done that. Versus when I'm on a winning streak, I think I'm invincible. And then that's when my emotions get the best of me. The next thing that you guys need to do, maintain a growth mindset. Every time that you guys make a mistake, every time that you guys make a lesson, it's room for growth. Journal your trades, keep track of your emotions, understand why you lost. And if you can understand why you lost and you understand the mistake that you made, then ideally you never make that mistake again. And at the end of the day, like I said before, day trading is going to be really fucking hard, guys. I want to leave you guys with a message here where, like, this is just kind of my biggest piece of advice to you guys. And, like, kind of the last thing that I want to cover here before I let you guys go off, okay? There's one more thing that I want to say after this, but we'll hit on this first. And especially if you guys have made it this far, congratulations. I truly do believe in you. And even more on that, if you guys got this far in this video, not only do I know that you are similar to me when I was first starting, but I also know that you guys are probably in a similar headspace that I was when I was first starting. You guys are probably a little bit different than everybody else. You guys want to make money online, and that's different. Most people say, yeah, I'm going to go to college, I'm going to get a job, and I'm going to please my parents, and that's going to be it. I'm going to work 9 to 5, and that's it. You guys are different. You guys were willing to sit through multiple hour-long YouTube video learning about day trading, which is a skill set that 97% of people fail at. That's the 99% of people fail at. That's a brutally honest truth. But you guys were still willing to sit through this entire video that tells me that you guys are delusional, that tells me that you guys are fucking crazy. And I can tell you this much, I know damn well when I was learning how to trade and I watched a video similar to this, it wasn't nearly as fucking good, but when I watched a video similar to this, it was 2 hours long and it taught me all the basics about trading. When I finished it, I just wanted more. And I can tell you right now, if you guys have that feeling inside of your chest saying, God damn, I wish this video didn't end, I just want to learn more and more and more about this awesome skill, you guys have that shit in you. You guys can make this work. If you guys have that hunger and if you guys have that desire and if you guys have that delusion of, I'm going to make this work no matter fucking what, then I can promise you guys, there is light at the end of the tunnel. You're going to be in the dark for so long. And I don't want to say that to scare you. If anything, I want to say that to encourage you. Because as you're in that tunnel, there's going to be people that turn the fuck around, that get through this video, say, man, after their first week, the shit's not working for me, I'm going home. After their first month, this shit's not working for me, I'm going the fuck home. I was at this shit for 2 fucking years straight, relentlessly writing down my trading plan, writing down these affirmations, telling myself, I will make $10,000 in a month. I am successful. I will invest money into crypto. I'm successful in the markets. I make money in the markets. I'm not greedy. I'm unbiased. I'm confident in my markups and in my layouts. My mindset is always leveling up. I was writing this shit down. I will follow my trading plan. I will follow my schedule. I will log my trades. I was writing all of this shit down before I was that man. Before I turned into that person. Because I was so delusional about my own success. I was so delusional about where I knew day trading could take me. And I know for a fact every single one of you guys ideally has that in you. Or I know for a fact that every single one of you guys watching this video right now has the potential in you. But you have to have that will and that desire and that delusion, that fucking mania in your head that says, I do not want to be fucking normal. And that was my problem. That was why I was so depressed. That was why I was so sad. That was why I felt so weird. That was why I felt so fucking self-conscious. Was because I thought in my head, why am I not normal? Why do I want to learn this dumbass online money shit so fucking bad? Why can't I just be normal? Why can't I just go through college, learn all the same bullshit and just get a job and make my parents happy? My parents asked me over and over and over again to stop day trading. because I was losing money. They were getting notifications from the bank that they were fucking connected to saying, hey, your son's got a negative balance again. Hey, your son's balance is at 0 again. Bro, the amount of fucking times that I got a text message from my mom or my dad saying, your bank's at 0. There's negative balance in your account. And then them following up with, are you still trading? Them calling me saying you need to stop day trading. You need to stop this. And me lying to them over the phone and saying, okay, I'm done. The very next day, what am I doing? Right back on the charts. I wish I could have been normal, but that shit wasn't for me. And I can tell you guys right fucking now, if you guys are thinking that this is possible, or if you guys just have the slightest hope, bro, I can tell you for a fact that this is possible. And you guys are probably thinking, I just want to make $10,000 a month in trading. Bro, it's going to be so much more than that. It's going to be so much more than $10,000 a month. It's going to be 20, it's going to be 30, it's going to be 50, it's going to be $100,000 a month. As long as you guys keep that drive, as long as you guys keep that ambition. And I wish I had a mentor that was like, I don't know, when I was learning how to trade, there just wasn't anybody that, like, I don't know, there straight up wasn't anybody that was like as passionate about this shit as me, I guess. And it like set me off. I was like, man, why don't these people love this shit as much as me? And hopefully now I can be your guys' light. Like, yo, like, you guys may see me as a fucking cool guy. I'm doing regular shit in my vlogs and whatever. But when it comes to this chart shit, like, man, I'm a fucking nerd, bro. Like, back in the day, if I were to tell anybody, like, yeah, bro, I'm trying to get into day trading, they're like, bro, what the fuck are you talking about? And hopefully I can bring up this new generation of traders that like really truly want to make it in trading. And that's my goal. Not only with YouTube, but with everything else, like my Instagram, my TikTok, my fucking day trading blueprint, like where I can actually coach you guys, where you guys can ask me fucking questions and I can actually like God, man, I fucking wish I had a mentor God fucking damn it, bro. I wish I had a mentor that was willing to do that type of shit for me. And here I am willing to do this shit for you guys. Like, bro, I am the mentor that Unprofitable Me just like fucking wished he had so fucking bad. And I can promise you guys that, bro, just if you guys can put your faith in me, put your trust in me, I am going to take and I'm going to do everything in my power to help you guys get to become a profitable trader. Without a doubt in my mind. And there's going to be a time where you guys have to let me go as a mentor. And there's some people that have been on here and followed my journey for long enough. I've been on here for like damn near 2.5 years now, bro. It's been a while where I've been posting trading videos, strategy videos, psychology videos for a while now. And, you know, people are like, yeah, I no longer need you as a mentor, but that's what I'm here for. As sad and as weird as it sounds, like you guys are here to use me for what I am. I'm a bridge for you guys to cross. And there's a fucking rapid ass river that I had to get fucked up by in order to get to the other side. But I built a bridge for you guys. And my goal as a mentor is to be your guys' bridge from unprofitable, not knowing shit about day trading, to being profitable, knowing everything there is to know about day trading. And once you guys get over the bridge, there's no use for the bridge anymore. And I'm completely satisfied with that because I know that if I'm able to help you guys get there and actually like make your wildest dreams come true, that's what makes me happy. If I can get you guys to your goals. And that's all that younger me wanted, bro. Younger me just wanted a mentor that is fucking willing to give him all the knowledge that he has, willing to get on fucking calls with him and shit, willing to like fucking just coach him through specific questions. And like, I really can't even imagine what my life would be like if I had myself as a mentor back in the day. And I appreciate you guys for being on my team and watching through this whole video. And on that note, again, I went through a whole bunch of confluences. I went through a whole bunch of shit within this video. Not only is it not necessarily enough to like fully turn you profitable in trading, I really wish this video like was the one and only piece to get you guys there. But like deep down, I just know it's not. It's definitely like it's an insane amount of information, but there's just so much more info out there and just so many minute details that I just am not able to cover, or else this video would literally be like 50 hours long. And if you guys want that sort of information, that sort of coaching, that sort of mentorship where like you guys really do get literally everything, like way more in depth on those confluences that I talked about, way more in depth on the strategy that I talked to you guys about, way more in depth on psychology, way more in depth on risk management, like literally how to calculate exactly what percentage you should be risking per trade depending on your win rate, depending on what your risk to reward is. Like the numbers that I gave you guys are just like estimates, right? Like the goal is just to at least push the masses in the right direction, but I can't sculpt you guys as a trader. And what I want to offer to you guys is to be able to actually do that. And that's pretty much what my day trading blueprint is. And there's a little link in the description if you guys want to be fully coached by me for literally get hand fucking sculpted by myself. Like this video times 1,000. Because not only are you going to be learning these confluences again, but better, you're going to be learning more confluences. You guys are going to be learning more about the markets. You guys are going to be learning, like there's so much more that I could have expanded on that this video would literally just be endless. And all of that is within the day trading blueprint. And on top of that, you guys get on a daily coaching call with me and other coaches where we go over trade reviews. So like right now, boom, you guys take your first freaking trade using this strategy and you're like, God damn it, I suck. What did I do wrong? You probably don't know what the fuck you did wrong. But if you take it to me or one of my other coaches, they're gonna be like, yeah, bro, you're a dumbass. You marked that fair value gap incorrectly. And you're like, ah, shit, I forgot. Those are questions that I wish I had answered for myself. That would have bridged the gap for me so much quicker, that instead of having to sift through YouTube video, and being like, oh shit, I did this wrong. Oh shit, I'm doing this wrong. And just keeping everything in check. Like if I could get on a coaching call every single day with profitable traders, I mean like such as myself, oh my God, like the speed run to profitability is fucking insane. Like there are literally people that go from knowing nothing about trading, who go through this program and get funded and turn into a profitable trader literally 2 months later. Like, I'm not even joking. Literally pop up the testimonial of somebody who didn't know shit, and then 2 months later, they're a profitable trader passing a funded account. So look, I gave you a whole bunch of information here. By all means, I'm not telling you guys that you guys need to go out of your way and buy my fucking coaching. But I am saying that you guys will get infinitely farther after watching this video and then coming into my coaching than if you guys just watch this video and then try and grind and do it on your own. Because we as coaches, myself, I know the exact position that you were in, and all these other profitable traders that are in there with me to help teach you and sculpt you as a trader know the exact position that you are in, know the exact mistakes that you guys are probably making. So when you guys come to us and you're like, hey, I have a question, we're literally just like, stop, bruh. I know what you're going to say. You're wrong. Don't do this. Do that. Move on with your day. And you're like, whoa, thank the Lord. And it's just like, it just brings so much mental clarity to trading, where before, like for me, I would just get in there and it's like, okay, well, that like, fuck, I lost the trade and I don't know fucking why. I think I marked all my confluences out correctly. I think I took the right trade. I just don't know why I lost. Is this a day that I should have just scrapped up to the market being bad? Or did I actually do something wrong? I didn't have those questions to get answered. But you guys have that opportunity to get questions answered. You guys can literally send us a picture of your trade and be like, what did I do wrong here? Did I mark this confluence out incorrectly? Was I supposed to trade at this time? What did I do incorrectly? And then it's like, boom, this was great. This was good. Don't do this again. Dumbass, why the fuck would you take this? And then boom. Patch, and you're over all of those mistakes that you probably wouldn't have even known were mistakes from the jump if you didn't have us there. So again, by all means, at the end of the day, there's literally all free education everywhere across the entire internet, right? We know that. Like, at the end of the day, the internet has literally every piece of information known to man, right? So yeah, you could say, I just want to, learn day trading on my own and just go through all these videos. That's fine by me. That's how I did it. It was fucking the trenches. It took me 2 years to do it. But I do think that I can be a huge fucking service to you and your profitable journey as a day trader, and also just me understanding who you are as a person and understanding where you're at as a trader, and also all these other profitable traders who are actually even more similar to you than I am to you, because you guys probably see me as like, oh, this guy's rich, he's got all the money in the world, he doesn't even know what it's like to be in my position anymore. It's like, no, I do, but there are people that have been profitable for like just 1 year now and have just got out of that exact same position that you guys are in right the fuck now, and they're in there to help you as well. So if you guys want that, and also the sad thing is the spots are super limited. So like, I'm assuming there's going to be a whole bunch of people like trying to get in it after this video, which like by all means is great, but there's only certain types of people that I want to let in. Clearly off this video, I don't want to let you in if you're going to be lazy and if you're not willing to put in the work. You have to be delusional. You have to be fucking crazy about this shit. You have to be really willing to get like really fucking willing to be a professional day trader. Like, I want to ideally see a mini version of me within that interview and within that application. And if I can't see that mini version of me within that application, then just straight up, like, you guys aren't going to get let in. And like, I know that sounds rude and that sounds mean, but if you aren't the mini version of me, then by all means, just like, whatever, take advantage of my YouTube videos. But I'm telling you that I don't waste my time on people that I don't see potential in. And I hope that I can see potential in every single one of you guys. But you guys have to prove that to me. That's like the very first thing. It's like, I'm not just going to let in any and everybody that just says like, yeah, just make me rich right now. I don't even care about this trading thing. I just want to, like, no, bro, you're not going to get let in. If I can see that you guys are truly passionate about this shit and if it's actually worth my time to be coaching you, then we will give you guys the opportunity to join. And again, I know that there's going to be a whole bunch of applications after this video goes out, and there's going to be a whole bunch of people that are trying to join. So we might have closed the applications after you guys are seeing this video. If that's the case, just join the waitlist and you guys will be on there, and maybe we'll reach out to you guys when the time comes. But if you guys do get the chance to be able to actually apply and be able to get interviewed, don't take that shit for granted, because I actually do see something in you. I see my younger, unprofitable self in you, and I want to give you guys the chance to be able to turn profitable at a much quicker pace. So I really do appreciate you guys. If you guys want to join the Day Trading Blueprint, there's going to be a link in the description. We just dropped a whole bunch of fucking game on your guys' heads. I hope you guys took a lot from this. And again, if you guys want to join the Day Trading Blueprint and be like all of these other testimonials that are flashing all over the screen right now, or like, if you guys even want to see even more testimonials, I have 3 testimonial highlights all over my story. We literally average 4.5 funded accounts passed per day in the Day Trading Blueprint, meaning there are 4.5 funded accounts getting passed every single day that are getting sent into the success chat. And yes, that is being tracked and that is being averaged out by the amount of traders that we have in there. And that's fucking ridiculous. So for us to be able to produce that type of results, we not only need a good coach, but we also need a good student. So with that being said, I really appreciate you guys. If you guys want to join the Day Trading Blueprint, hopefully I see you guys in there. If not, I'll see you guys in the comments. If not, I hope you guys can at least subscribe. I'll catch you guys in the next one. Peace the fuck out.